All right, good morning. May 17th, we're going to be streaming stocks, options, futures. That's technical analysis, charts, following barbecue, GME, whatever's going. Sub up, like up, comment down. Happy money sticks around. I'm going to get set up here a little for you. Oh, wow, SPY's ripping. Guess that data this morning was bullish. Morning, Lords. Morning, Ace. Horse never sleeps. Thanks for liking the stream. 0.18 on E-Trade, really? Barbecue? Point 18 is not a move up, man. Still accumulating. Still consolidating. Good evening, Kens. Happy morning, Christine. Alright, we keep getting set up here. The Bita. Any of you watched the Tesla shareholder meeting? Thanks, guys, for your support on Twitter. Much appreciated. What is SPY doing? Their data this shouldn't move it that much. Housing starts and building permits have a 0.5% gap up here. Oh, I grabbed some shorts last night. Didn't have to ride those today. Discord's birthday. Back barbecue. Says it's up 2% pre-market in Germany, so maybe pretty flat in our market. This is the MOAS. 18 cents. My TD is saying it's down 1% pre-market. Okay. Maybe not MOAS. Morning, Molava. Grab your coffee. He's not popular. Well, good thing you have the internet. Pre-market, we've got We Trade Group, Smart for Life, How. I don't recognize any of the pre-market moves. EDC's up there actually, 17.5%. Oil prices extend. You can think of raising the Fed rate as somewhat of a brake pedal on the economy. Don said it makes a lot of things more expensive. Yeah, at his shareholder meeting, Meet Kevin got in line to ask questions at the end, and yeah, he asked him, but he talked to him about advertising, and he convinced him. He just gave him a quick little spiel, like, about the numbers and how little of a budget they would need to advertise, and compared to like Netflix or something. And Elon like kind of said some things, kind of just talked about it, and then he was like, "Yeah, we're gonna try advertising." I was like, "What?" I was like, "Wow." So yeah, Meet Kevin convinced Elon Musk to advertise Tesla, just because he was highlighting all the things that people don't know about Teslas that they just need to advertise some for, where the shareholders or people that own the cars maybe know, but people that aren't in it don't know all the cool little things about them. To advertise, like, yeah, we're gonna advertise. So, see, Stella next big short squeeze. I don't know, is it ripping? No. Laura, who was pumping this before? Now we've got two people pumping Stella. It's back up to where it was pre-reverse split, so it's looking good though. I mean, it's holding the level. I don't know what the catalyst would be for the squeeze on it. The reverse split, and that's it. Maybe a little reverse split pump. It can be done. Stella's getting huge. Look at all these guys pumping it. Weird. All these randos. You guys are bots, aren't you? Like a bot picture from you, Laura. John Jacob, never heard of you. We're down with OTC. Shake hands. Good, everybody. When did we lose Ace, Thal? Oh, good. Can't do that to Ace's soul. Meta's working with the BMW Group to explore how AR and VR technology can work inside a fast-moving vehicle. The debt default will hinder America's ability to compete with China, White House officials have said. Credit card balances in the U.S. increased 17% over the last year, the biggest spike since the 2001 recession. The share of job seekers relocating for new positions is at a record low. U.S. housing starts were down 22% over the last year, the 12th consecutive year-over-year decline. Longest down streak since 2009. Tends to be a leading indicator for the economy. Recessionary signals continue to build. SPY is wanting to rip up here. Hit a bull flag pre-market. Kaka. U.S. housing starts. That was our data this morning. It declining is bullish for the market. Yes, because interest rates, we're back on that. Back on the old interest rate. I know what percent of companies want to hire workers who know ChatGPT. I don't even, what do you mean know it? I'm sure to know. Mike Pence has called for an end to the Federal Reserve's dual mandate, saying the central bank should focus solely on fighting inflation. Alright, let's get some levels in here. We got 6 minutes. Trippy this morning. Still just in this top range though. I was trying to be cheeky and catch that pre-market move. The after hours move just got the wrong direction. I have 0.5% coming to open. Barbecue down 3% in Germany. I guess that's reflected what I'm seeing on TD now, down 1%. Yeah, I think TD starts updating at like an hour before open. Oh, MF. MF on the highs still from pre-market. The Zip Trader pump from 2 o'clock. What's this? Shikaka? Goku? Oh, tweet. Corruption can run very deep when money is involved. In the weeks and months ahead, we will continue to expose some of the greatest corruption you may see in the modern era. We don't do this for fun. We do this because, as fellow William J. Polt says, do the right thing. Do the right thing. Buy. Ripping into open. Oil's up 2%. Guys, for your pre-market likes, legends, I appreciate it. Yeah, well done, thank you. Get this barbecue started. Yeah, barbecues disappointed me yesterday, man. On barbecue day, and he was wearing glasses. Ripping. Okay, 10 seconds. Coals? What's up? Open. Buys opening up at 0.5% up. Barbecue down 1%. BDC is up 16%. MF 15%. Buys opening up at just this high from yesterday. A little choppy range. Open. Ding ding. That's a very mellow open. Okay. The most mellow of opens. Barbecue 1750. Green 1.8%. Still waking up. Flaggers. Yep, 13%. Spike. He's opening up flat. Lords, it's back to 17. If we don't get a pump up above 1790 and use that as support, we might get another drop to 15 cents by the end of this week. Go SPY. Going the right way. Barbecue 1748. Barba win. Weird stuff on my watch list that's up. Pulls up 6%. Not a whole lot of stuff's up. My gas is selling off. Wanted to take this short out. I don't know why I didn't yesterday. I closed those longs. I think I can only go long on that gas. Doesn't make sense. Hit a nickel. I don't want to hit a nickel. That meant I'm totally out of it. If it's hitting a nickel, it's probably hitting 0. What I did. XXII is up 2.5. Nothing up very much this week. Op is still suspended. What is going on with top? No news on it. But the reason why I would get down to a nickel is sure can survive at a nickel. That was me. Best I can do is do. Firm is flat. Charge point 7.5. Overvalued. Goes up to 2.3%. Back west is up 11. So volatile. W on 1.25. BC up 50. Open door ripping. 6% open door. That chart actually looks like open door. This little bull flag has a gap down here, but it's holding that 9 moving average. I just put it flat. Hey, sir. Laser's chart looks pretty good too. Up 4.5. AC's up 1.7. Just bull flag here. Another resistance. 4 tops. How many tops do you need? AC's might be about to reverse on the daily time frame. Nvidia. And that stock is insane. Me grinding up 1.23. Google's up 4% now. AI 4.5. I coming down a little bit. Airbnb looks to be bear flagging on the daily. Barbecue 1.5 positive. Barber coating straight out of the gate. No volume. Just the code. All we get's the code. They're dead barbecue. Yeah, I might wait for a catalyst. I don't know. See what necessary. Guys moving down. I don't agree, Lords, but that does happen pretty often. I've seen enough days where stocks wake up afternoon. Yep, GME is up 1.5%. Very low volume. 1.25. Low grind back up to 24. Beautiful, natural price action. Unmanipulated stock. 0.6. Has good relative strength to this buy. 0.9. This Friday's OPEX. Now in SLD period, I believe. Percent on Le GameStop. Order. Like last year, May, August. Oh, this right here. Doesn't feel like anything from a year ago to me. About a 30% move over the course of like 2.5 weeks. Buy coming down. You hanging out at the highs. F coming down. EBET. Up. ISPO. Open door came down. Bubo's holding up. AI is ripping again. 5.5%. Bubo 5.5%. Barbecue. Barbecue coating. GME came back down, up 1.5% presently. Carnival Cruise is up 4%. A flat day, it seems like. A whole lot of stuff taken off or selling off. What these banks do. PacWest is up 9%. I just bounced off that 50 moving average. Like to see back down to 411 or so. Silvergate's down 24%. Have a coating. If there were bots in here trying to pump sell up. Yeah, I think there really are. Definitely seemed like that this morning. Are you one of those, Robin? 2 random people I've never seen. One with a total fake profile picture. Seven, 4, 1. What am I looking at? Just nostalgia? What once was? It's glorious. Nostalgia, yeah. Beep pop, beep pop. Eyes coming down here. NVIDIA mentioned positively at a research boutique, noting FY24 data center GPU forecast taking another step higher on Gen AI demand, while gaming feedback is modestly better. Apple was mentioned cautiously at a research boutique, noting that through the first 4 weeks of FQ3 B23, iPhone sell-through data is tracking down 10% year over year. Natalia, yeah, she's a lovely Russian. Nailed it, ace. We have a housing starts, building permits this morning. Give us a little pre-market pump. Much short-lived. Still up 0.37. Check what the E has. Down here. So yeah, the 30-year mortgage rate is at 6.57. Mortgage applications negative 5.7%. Previous was positive 6.3. Mortgage market index 214. Mortgage refinance index 468. Here, building permits negative 1.5%. Previous is negative 3, so actually gone up. Right? Yeah, that's month over month. Actual building permits was 1.416 million. Forecast was 1.437, so slightly less than forecast. Housing starts 1.401. Forecast was 1.4, so basically in line. Crude oil. We have inventory, commodities inventory today, and that's it. Mellow day to day. UBS was rushed into buying crosstown rival Credit Suisse in a deal it did not want. As a global bank crisis worsened the latter's finances and prompted authorities to take swift action. Wow, pretty big red candle there. Video puts? Well, I got about 2 days on mine, so we're gonna have to see fireworks for these things to come back to life. Like the nasty kind of fireworks that blow up in your hand and tilt right before they take off and shoot into the crowd. Very destructive kind of fireworks. But I'm Rejected that 412 though. That kind of little high level from yesterday's consolidation. Find support 411.15. Yesterday's range 410.74. Kind of still flushy though. What's our beloved doing? Wow, GME is actually pretty strong through this. 1.7 still green. All right. Okay. Barbecue, just barbacoating, 1748 plus 1.75. Zella talk overnight? Were you hearing it too? Yeah, dude, the bots are out full force on Zella. They started pumping it in here yesterday. And this morning, like 2 or 3 random people I've never seen before. I think some in Discord too. Not sure. Keep an eye on it. I mean, had a reverse split, had a big sell-off from that, and basically just bounced step back from that, so back to where it was trading before the reverse split. Not anything special. Back west. Oh, banks are pulling down the SPY maybe. Oh, back west to go down. Firm's up 2%. That is neat. GME's relative strength's pretty strong this morning. By wicking there. Wiki. Oh, I'm actually back green on my contracts. That is neat. I'll just let it stop me out. It does. Which it probably will. A little bear flag here on the 1 minute. Got close to yesterday's low. Video put's probably not a good idea. Probably. Actually, it's not yesterday's low, I'm sorry. We had that dump in a close. Yesterday's actual low is 409.98. So I'll look for that 410. It's getting there pretty early though. All happening so fast. Barbacoating 1739, 822.32 up to 1.4. Back west still at 5, but red out of the 8. Open door hanging out 5% up. Oh. didn't get... Oh, about to get stopped now. Yeah, there it goes. No problem. That was it. Pre-market gamble anyways. This isn't a good entry to take a short. I don't like it. Done it much earlier. I'll wait. Could keep coming down though. I think 410 and we might find some support at. BuzzFeed's up 7%. Gas down 1.5, kind of hanging out down here. Yeah, MF up 11. But good trader pump. GME holding up well. Nice relative strength. That gas moving back up to VWAP. I think I got lucky on that long. Still kind of chopping around down here. I get a nice sustained rally. Maybe it is. It's just kind of consolidating. Yeah, it's still on the move, 6%. Had quite the bounce off that 9 moving average. A lot of volume too. Who's on this? Showing earnings 2 days ago? Why is Weeble saying it's up here? Earnings. Eyes looking weak again. GME still doing good, up above VWAP. 1.7. Buy melting down. Yesterday was the first like bearish looking candle we've had on SPY in a while. All of these were, I guess that one. There it goes. Keeps coming down. Could have held the short. That's okay. Give her time. Maybe catch the bounce. Very weak open though. Oh, I guess there's a gap here too. About that. Here's the looking chart. I know, I saw top it's still suspended. Didn't see any news on it. He's telling Weewa I wasn't able to find anything. Not sure what the deal with that is. Finally caught one of the Chinese stocks. Catch them while you can. Barbecue 17 and 11's the last trade. Blow your money on biotech in China. The toss up. I had to decide between the two. Turka's down 5%. Emot's rallying 7%. Big gap to fill there. What happened here? New CFO? Uzi Sasson? CFO. Equity offering? Yeah, okay, so they offered shares. A-Safe getting wrecked. Down 8.8%. They had a reverse split. Good pay safe. BBBYQ not looking good either. GTAI, $1 on GTAI. Might be a good pickup on Turka. I see a green candle on one of these. Eyes moving back up. Engulfing candle. Consolidating. Almost 2%. Barbecue coating. Yum. 1738. Positive 1.6. So Airbnb spread is like definitely the long play on it. If it sells off a bunch, it'll work out. But otherwise, I'm just waiting. I have to wait on these spreads so long till expiration. I would need it to get down to like $9. Not too bad. Or I just wait. I bounce up a little bit. MU, my Nvidia plays. Suck it. Nvidia up 1.5 almost. I'm moving up some. Upstart up 4%. GME's getting a bit of the push. New high of the day on GME, up 2.25. There's a little push on GME. Half. Six. Pretty good volume this morning on GameStop. Better than yesterday. I went back up to VWAP. Me 2.7. Could have held my calls, I guess. 3.25. Alright, GME. 3.5. It's waking up a little bit. You're getting this little spy squeeze too. Just has relative strength to spy. Yeah, the basket's moving up. We've got Upstart and Fubo both up about 4%. He just doesn't play along anymore. Spy wick down. Low BWAP now. Hey, 3.25 though, so I'd see 24 before OPEX. He kind of got some volume on the. Still pretty weak. 4%. Blackberries have been moving too. Barbecue. Yeah, Blackberries on the move up a bit. Eggs up 2%. Barbacoating. Acer. Almost 4%. Nice push on GME there. All the spy just wake up with it. At 725,000 volume so far on GameStop. Yeah, I should have more volume than yesterday. Time out. Good time here and out. Good times. curious if it breaks that 24 level. It's moving up a little bit. 12, 4.6. From 2.6. 5 to 40. Bull flag on a firm. Nice. I mean, 35 to 40. Yeah, that's bullish. Wonder if it's still parabolic over 30. These contracts on here started moving at all? GME? Maybe playing weeklies is the way to play it, I don't know. Yeah, not bad. On the 22s from yesterday on the weeklies at the max. U.S. Federal Reserve will hold its interest rates steady this year despite an expected recession, according to a Reuters poll of economists, who also said the risk of a U.S. default over the debt ceiling was higher compared to prior standoffs. JP Morgan has developed a powerful data collection tool to monitor its employees, tracks their office attendance, calls, calendars, and more. Kind of interesting to see if GME rallies into OPEX. That's pretty unusual, even if it's a mellow rally like this. Nice short here on the SPY. Maybe. Still going, man. It's mellow, but it's moving. 0.4%. Should have held those calls. Man. Last 3 days have been pretty big. Engulfing candle the other day was nice. On Monday. Very nice, smooth price action. Investors like to. Probably still can't get margin on most brokerages though, because of its volatile event 3 years ago. Buy moving up. Buy in the back west of this third. Rubo 6.25. I mean, $300 loss. What would you recoup from it though? There's no way I can enter stuff for you. Wow, Nvidia is ripping 2% and easy. Well, we'll see when it gets up here. Has resistance at like 298. Might stop the. Stop the momentum. Might make a double top up here. Rejection did pretty good yesterday with that inverted hammer. I wouldn't be closing right now on this. But there's a lot of variables, so there's no way I can really answer that. Ubo 7%. AI 5.3. Start 5. Like I said, you're getting to this resistance from yesterday, so I would just wait. What I would do, but can't answer it for you. If it breaks out from here, then maybe I'd consider closing, but has to do with time, has to do with strike, has to do with my financial situation, has to do with my account size, how I'm feeling today. Did I eat good? Did I sleep good? You love the low volume days? Barber still. Certainly. Spies above VWAP. 3.3%. See if those calls I sold would have been worth anything. Probably 82 cents. Let's see. Yeah. Haven't even doubled. But yeah, they would have kept increasing in value. But not like crazy. Really not a whole lot yet. I had the June 22s, June 2nd, 22 calls. They're up like 90%, I guess, from when I sold them. Which would have been nice. It was a pretty big play, but I didn't want to hold it. Didn't like what the SPY was doing either. SPY was scaring me. I feel like the SPY scares me out of positions too much. Gonna move the whole market. Paul Boomer for GME. When did you buy on? When did you buy GME? Well, it's up. It's up 3.6. It's looking good. It's on a nice, nice little rally. Last 7-10 days. Yesterday you did it? 4% on GameStop. $22.95 is the high. Crazy how big a 4% day green on GameStop feels. I've been conditioned. Still climbing up. Fubo up 6.25. I'm at 8. Upstart 5. Rose 5. Bro. Turkey's Erdogan says Black Sea grain deal has been extended by 2 months. SEC weighs new intraday margin call powers for clearinghouses. Thought we're already doing that. What happened to the 2 o'clock margin call? Janet Yellen is bluffing about the government running out of money by early June. Economist Danielle Martino Booth has said.
Interviewed that issues surrounding the company, the demand, the margin
Still
compression
moving a
they've
bit.
had recently, their autonomous driving advances, and I think that really helped. Is just that increase in
4%.
visibility surrounding the company, kind of putting to bed some of the concerns that have popped up over the last month and a half, which have led to this pullback in the stock. But it's still the best performing auto manufacturer in our coverage universe so far this year, even following this pullback. And we remain bullish on the stock, both over the near term and long term.
Good volume this morning. You're at 1 million already.
Nelson, Vice President, Senior Equity Analyst at CFRA Research. Always a pleasure. Thanks so much.
I might look for a pullback to grab some exposure. I don't know if this is setting up to get out of control or if we're just going to keep kind of grinding up these 3-4% days. Not to say you can't make money on it. I mean, I don't know. It works. But we've got that resistance at 24. And then 20, 28. Feels a bit like a chase, but that's okay. Better to be late than wrong. I got in it and then got back out. No, it's not yearly highs that raise the debt ceiling. Nothing's gonna happen if they raise it. I don't even think the market's gonna respond. Feels like the start of a crazy GME. I don't feel like GME's starts are usually long and mellow like this though. When have we seen it start where it's 3 weeks of up a small amount with low volume? None of our rips have been like that. This one, not that one. I don't really call that a rip, but this one, not even. Not this one, not this one. Maybe like way back. This one, but that was even less time. This was only like, it was a lot less time. And the volume still, yeah. Unless it's like trading algos from before the pinch, which I'm not as familiar with. Buy ripping up here. Hey, Mosmus. I mean, yeah, you can still make money on it, I guess. Either way. So yeah, it's been good. No, I closed my calls on it. They just weren't moving enough. And I guess, yeah, I just ran out of patience. And I had the SPY kind of in the back of my head, thinking it's probably going to come down. And so that persuaded me a little bit on GameStop, seeing as they're so tightly correlated. So I did. I checked the price on them. They would have been up, at this point, they would have been up like 80%. So a nice gainer, nothing crazy. They were a nice strike. I mean, they would have been in the money. They were 22, but still haven't moved crazy. Buy pushing. Give me 4.3. If you sell puts on an underlying stock that expires with the initial credit, so you receive the credit right when you sell the puts. So that they don't take that away ever. So you get that right away no matter what. If they expire. So yeah, if they expire worthless, then over, your obligations on the contract are void because it was out of the money. I usually don't let I'm farming theta. I usually don't let it expire worthless, so I'd just buy to close it. Depends on your strategy though, but at least buy to close it for the minimum on expiration day if it's out of the money, just in case there's after hours news or something, and then it rips and then or drops, whatever it is, and then the person wants to exercise. So it's really cheap insurance if you're especially doing it at the end of the day. Yeah, find a close before expiration for sure. Set it as a minimum, but it depends on your strategy, how you're doing it. I've been doing it with like longer dated stuff and just being even safer about it. So at least a month of time, 1 to 2 months on the monthly OPEX, monthly contracts, and then depending on the TA, like, but not even necessarily depending on the TA. If I'm up 50% on it and there's still like at least 3 weeks, I'll just close it. The last 3 weeks you can have a lot of movement, unless it just totally went away from my strike and I'm, you know. But even still, I'd rather. Or if I'm not using the capital, if I don't use the capital for another one, I'm fine to just leave it in there because I'll just let it decay. But typically I can find another play I'd rather put it in, because you can get that first 50% on contracts. As far as decay, you can get that in short order on like a monthly or 2-month contracts. Like sometimes you'll get that in just a few days. So no reason to try and hold it for the last 50% for the next month. So if it goes against you or kind of bounces around, then you're not gonna get that 50%. But then you just sit on them. But you get 50 or 60 or 70. I mean, like 50% or 80% is another good cutoff. Usually you can get to 80% pretty quickly. Also, the last 20% sometimes won't go in your favor and you're fighting around. Yeah, barbacoading still. So probably waiting on a catalyst for this. I'm not sure. Ubo's up 7%. We're watching GME on its mega cap style rally. Good entry point. I would wait probably. So if it doesn't break out, like if it breaks out, you could buy it on the breakout because most likely it'll hold a higher support. But if it doesn't do that, then I would probably wait because we might get a sell-off basically by Friday. Not certain, but and then you could dip by it, or you could, no matter what, just wait for the momentum and the breakout. But if you're trying to have exposure for news, which I understand, then you could be dip buying it. And for that, I would wait probably, just keep it up, watch on it the next couple days. Thursday or Friday. If we don't start to rally, it very well could get a dip at the end of the week again. But I would set alerts if it breaks like 1790, and then it comes above it, and then it comes back down and retests it. Use that as support, then that's where I'd be picking it up. Either on the breakout or on the retest if it does, but I'd probably get it on the breakout. Me kind of bull flagging. I didn't quite fill that gap. Have another choppy day, really. Like, got a nice move. I was stuck in those ones that I entered it on the futures pre-market, so that's why I couldn't play this drop. Not saying I would have though necessarily. The bounce, it really would have just been a bounce for me, just from a support. No other TA would say, oh, I should buy this. So we'll see. You might be setting up a little cup and handle here though. Little bull flag potentially. So maybe even buying this for a retest up here or a break. What's your expiration, your strike? Video is an ugly one to short, man. Popping a little bit. Scale up 9%. Second day. No. I follow anything. What's LUNC? I don't know what that is. I guess I don't follow that. I can't even find it. It's coming back down here a little bit. We do have VWAP down here. Might be another one of those just choppy days in that tight range. World. There's another zip alert. SMFL. GME kind of consolidating up here. Above VWAP. Really not a resistance until I guess you have some chop in here. Oh yeah, I guess today, wait. Yeah, did it break that? Yeah, it broke that level. That's the level I was talking about. I wasn't even paying attention. Yeah, it was a big break. That 22.16, the support from that after earnings, that level we held for so long. So that was a big break this morning. Took a lot of volume, but it did it. Not bad. 24 is kind of that next. Oh no, this is what I was looking at for. Yeah. There was that level, but this was the big one. But yeah, no, that was the big level. First one, now it's 24. Up there. Got 10% on Zella. Nice. Up 20% today. I might have a little reverse split squeezy. Percent on GPC. Apps up 6.6. That's a nice looking chart actually. Wow. Filling that gap on Snap. Got too excited and left a gap on its way. Looks like a little cup and handle to me. Margin call at 2 p.m. Prince Harry, wife of Meghan and her mother, involved in near catastrophic car chase involving paparazzi. Okay. Another one? How Diana died. Wow, dramatic. Mohammed El Arian says regional banks are in a hospital phase of turmoil, but a Fed policy mistake will drive them back into the ICU. Very hospital referenced type of man. Russia's Novak says Russia and Iran consider possibility of mutual trade settlements in Chinese yuan. Biden's going to speak on the debt ceiling at 10:45. What's going on right now? See if the SPY has any kind of effect from that. Diana 2.0? Back west, bounce back up. Up almost 10. Firm is up 5.5. Like charge point might be holding this support level here.
Too optimistic that a deal could happen, and what happens if they don't reach a deal? What sort of market implications are there then?
Yeah, I think that's a great question. You know, with some of the speak that we've had, recently, even from Janet Yellen and others, Treasury Secretary Janet Yellen has said that they've actually warned of a catastrophic impact on the U.S. economy in the case of a default. And, and they see that coming as early as June. However, even McCarthy has said recently, a deal's possible by the end of the week. The timeline may be the end of next week, ahead of Memorial Day. With all that in mind, equities may trade in a tight range, as George said, until the outcome. And, we can expect perhaps that this could happen and until, we get right near that Memorial Day weekend. And so we got June as the X date on that. Early June is the X date on that. We'll see how it goes, but I don't think either party, I don't think anybody in government or in leadership here is wanting a debt ceiling crisis or a problem here. George mentioned it. They all agree on spending money. It's just on where do we spend it. And I think that there will come to a consensus here. Biden cutting that trip short is definitely indicative of what we might expect in terms of progress in moving along those lines. But, I fully expect, and I think most of the country as well fully expect.
Well,
We've
hope
been
you guys
here
have had a good
before.
morning.
And every
10
time we
to
get
11.
here, we kind of have this same hesitancy.
Got 19 likes on the stream. Thank you guys for your support.
Around these kinds of things, but we'll pull through. Nobody benefits from a default
Massive
on
rip.
the debt
That's
ceiling.
blast,
So they'll work
blast
it
us
out.
up.
They'll figure things out.
I don't.
So,
Maybe
George,
very
you
short
talked about how
short term little
basically
pop. I'm
hard
not
to be a
expecting
bear
much though
right
from it,
now.
honestly.
It's hard to get the bears
'Cause I don't think the market right now is
or the
pricing in
vote
it
to
not
roll over,
going,
I think is what you
not
said.
being
But
raised.
when you
So
actually look at the fundamental landscape, be it the potential for
I think it's waiting on other
default,
data. That's not
and obviously the recession
that that's
risk,
going to
the
be a
fact
market
that the
mover.
market is confident that the Fed is going to cut rates sooner than the Fed funds rate actually implies, or sooner than the Fed has actually said they're
Barber
going to do it.
coding.
Can you justify an S&P that's up 18% year to date? Or I'm sorry, a NASDAQ that's up 18% year to date. S&P is up what?
Flagging. Full flag
7.5
consolidating.
to 8%. Yeah, I mean, look, if you look at the S&P, you could say that this year so
Start
far, from an
8.3.
annualized basis, is a
Kubo
success.
7.4.
So from that standpoint, there
Yeah,
might be
yes,
some
sir.
profit taking.
6.9.
The Nasdaq, I think, if you look at the concentration, it really comes down to I call them the mega monopolies. Your Microsofts and your Apples and Googles, and even Nvidia now, and it's taking off. That's effectively where you're getting the majority of the returns in the Nasdaq. And again, looking at things like artificial intelligence, which has been a huge theme, Nvidia is higher significantly. Microsoft, which really controls ChatGPT, that stock has been on a tear, and that's again, we're talking about Nvidia at 750 billion or so, and Microsoft in the trillions of dollars. These are the companies that have pushed
Tesla's up
Nasdaq
4%
higher. So,
today. Wow.
you could make the case that is a little bit
Like that
lofty
advertising
from the
news.
standpoint of the year to date. Yes, you could make the case also that perhaps there's some seasonal selling anticipated and some profit taking coming down the road. But I think the debt ceiling issue is going to be problematic, really, just from a conceptual standpoint,
Me might
and also
might
from
make
a
another move up
sentiment
here.
standpoint. So that could create a situation where we get
Full
some
flagging.
selling, 2 or 3% pullback. But at the end of the day, the economic fundamentals, if you just look
Nice
at things
volume today.
like retail sales, ex autos, those were still strong. You look
Caps
at
up
industrial
7.
production, still strong. Overall, the labor market
Getting the small
really
caps
hasn't
running.
rolled over on a consistent basis. So with that said, you can't make a case mathematically that the economy is moving into recession as long
Open
as
door
there's
almost.
still labor growth and productivity growth. It's mathematically impossible to declare a recession. So from that standpoint, you could justify the increase in the stocks this year because of the fact that the economy just hasn't rolled over officially, despite some of the outlooks that
break
a lot
out.
of folks have on a recession.
Well, Scott, retailers definitely in focus this week with earnings from Home Depot, TJX, Target, and then as we look ahead to next week, there are quite a few other retailers set to report. How strong is the consumer right now based on what the retailers have said so far?
I think it's appearing that it's pretty strong. Even though we saw, for example, Home Depot report its worst earnings in or its worst revenue miss in 20 years, but we see the stock today back right to where it was yesterday, pulled back and right back there. Target reported pretty well. They did give guidance though that, beware of next quarter, our lines are getting shorter and things along those lines. So I think that what we're seeing in retail right now, and again, it's not all super positive, but there is some positive light among all of this. But what we're seeing in retail right now may not necessarily be indicative of what we're going to see coming next quarter in the earnings. And so I think this is one of those things that, we're getting some, and we're reaping the harvest. We're getting some benefit of it right now. We're going to have to see, based on, again, other economic indicators, et cetera, what's going to be happening with retail going forward. But for right now, I think that retail's in okay shape, and will continue to be, as long as things continue the way that they are. There's so many things that can play into this, though.
All right. We'll leave it there. Scott Durfee, George Tillis, thanks so much for breaking down the market action for us. Really appreciate it. And thanks to you for watching Morning Trade Live. I'm Caroline Woods in for Oliver Rennick. Stay tuned, because Trading 360 with Nico Padalides is next.
Padalides. For Gen Z, 8.31% of credit card debt have transitioned to serious delinquency, which means 90 days or more past due between January and March of this year, up from 5.12 over the prior year period. That's a significant increase of delinquent credit card payments. Almost double. The UN forecasts world economic growth of 2.3% in 2023, 2.5% in 2024. Credit cards are free money, that's right. You might make a move back to VWAP here. I'm not sure which way it's going to go. He's in a flag, but VWAP's pretty high on it. 1735. Yep, you nailed it, Lords. You nailed it. Bye, moving up here. Breaking out. This little range, bull flag, cup and handle, whatever it is. Maybe both. What happens at 412? Breaks 412. We've got a nice little room to gallop up to 413.01. 412.32, I'd say. F above VWAP now. Things held up well since Zip Trader staggered his releases. Keep the pump going. Had one right here, another one right here. But yeah, it's holding up nice now. Open door up 10, rallying. Yeah, you're getting these small caps pushing. Pac West is up 11%. Start 10, Fubo almost 10. He's getting pushed with SPY potential there. Breakout. Barbecue even got a little volume. 1747. Huh, I wonder if we're gonna move out of this barbacoa. Sell us 30%. Yeah, Sella broke out from that rally yesterday. Had a nice consolidation, extended hours. MMAT almost 11%, GDC almost 11, BTL almost 11. Now we're seeing what's going on here. GME's probably breaking out too, isn't it? Yep, new high of the day on GME, 4.5. Oh, not quite a new high. Matched the high of the day. I did go long on the futures on that break. There's a high of the day on GME. I did see Zella's price targets. There's 3 of them for 400 plus now. I heard there was one. Very unusual, and for that to actually move a stock much is also unusual. I mean, GameStop's had a price target of 4 for years. Yeah, it's breaking out there. Sometimes you gotta trust the bots. Reason they're pumping it. Barbecue with the pump. I knew that volume was gonna do something. 1771. Up 3%. Still kind of in a barcode range. At this high from before. Morning. $118,000 on that candle. We can break out of this since nice to break above that 1790 area. Really, actually, here 1770. 1790 is kind of just a rough area from back here. High coming back down here a little bit. Buy with a pretty big candle actually down. A little bigger. Let's see what happens up here. Might drop my shares off. Not sure. Investors aren't giving up on it. Have you seen all the articles about pickleball courts taking up barbecue locations and Old Navy? Hilarious. It's been pumping so much on my feed. All sorts of different articles. Yeah, I got a BBI pop barbecue there. Just up to the top of the kind of barcode resistance area. 1771. Did chags before. Mm, looked like it wanted to go there a little bit. But then it rejected. Yeah, I closed out of some of my shares. Yeah, GME still Still up there. 4.5%. Bit of volume. That's nice. Bit of volume picked up on that little breakout. That engulfing candle. Back to VWAP maybe on GameStop. Barbecue right at that resistance.
Card is a good term to say, because so Western Alliance is up today because they got some deposits back in.
Yeah.
This happened to PacWest too about 2-3 weeks ago, and then subsequently those stocks started to decline because people are worried that if there's any kind of further downturn in the economy,
Yeah.
all those uninsured deposits that those banks have will go out of the banking system faster. In addition to this ongoing, seek of higher interest outside of the bank, right? Meaning in treasury bills or money markets. On the other hand, it's also a function of just the volatility and liquidity in that sector. So I noted that if you really drill into the options market there's a significant what they call skew, right? That means in high put volatility versus call volatility. That's quite extreme, which indicates that the market is definitely wary of that. There could be one or two more banks fall in the hands of the FDIC.
So last but not least, investors. What's your advice to investors? I mean, obviously fixed income is in your wheelhouse. People have been doing well in that area. What would you say to folks? I mean, what should they be doing with their money right now?
I say, one, stay invested in the market in general, right? I don't think this environment to be completely risk off. So not put all your money in those T-bills, even though they're high yielding. We definitely like tech, we like financials, we like healthcare, we like utilities, and we also like these housing stocks. I mean, that's a really surprising element this year. I think partly because of more fundamental reasons there in terms of inventory and reconstruction of housing. There's also international opportunities because U.S. has not been as strong of a market as other markets. That's something we've still positioned in. And lastly, if you think of fixed income, we will have to see the yield curve see more normalization, meaning a more positive sloping yield curve. So I think fixed income will be doing okay, but I don't think we'll see much more of an improvement there at this moment until we get clarity on the economy.
All right, we'll see. I closed out of some of my shares up here.
Some of the housing stocks 52-week high, but you still
it's hard to do this. It's so hard to get in and out. Crazy.
I think so, yeah. I think there's definitely, but it shows our fundamental reasons. Not
being that it's a Wednesday, I mean, if we get a break here, that'd be sick. We got a lot of shares on the other account. I'm up on these shares anyways. I think we, again, could still have maybe a bit of a sell-off on a Friday. But nice to see that volume. What if that's GME? GME waking stuff up? It's definitely not looking easy at all, but maybe.
In our 360 round, we'll discuss the latest with the Microsoft Take-Two deal and look at Take-Two's earnings. So we're talking about.
Oh, it's maybe consolidating up here on barbecue. It's hard to read when it's barcodey. Yeah, it's not fully selling off from there. That's maybe a good sign. How many did I sell? I only sold like 8,000. Hard to get out of this thing, dude. Hard to get in and out. Fine out. Grinding back up. I want to go long on that gas. Fine, moving up there. My rip. Holy smokes. Busted through that level. 413, here we come. Up and handle breakout, I guess. We have data there? 1115? No. That was quite the push. What's that? That dead ceiling reaction right there? Oh, big wick. What the heck? That maybe from Biden talking? I can't talk more than 10 minutes. Whoa, what the heck? What kind of volatility? I think he is still talking. Oh. Oh, he's about to go up. What's happening? Biden's gonna start moving the markets? Look at that. Guess I should have sold up there. I was thinking it was a legit breakout. Yeah, that was from Biden, I think. I don't know what he said, but that was crazy. That reminded me of Trump. Shoot, man, I wish it was a legit breakout. I would have sold. I thought we were on our way up. We suck again. What do you even say? Looking on Yahoo Finance and they're talking about the spy rip. Oh, he said something as he was leaving?
Any work requirements that go much beyond what is already. Well, I voted years ago for the work requirements that exist.
This.
Sanctions from Russia during the G7.
With President Xi soon, sir?
That's my, whether it's soon or not, we will be meeting.
You will be meeting or you will be speaking?
What? Some answer about meeting with Shu. The heck? We should get a headline on Twitter. Dang, that sucks. I should have sold. I think that guy had it in him. He's still talking. That's at least like 45 minutes. Biden will have a news conference on Sunday on debt issue. Barbecue's looking nice, man. What did GME do on that pop? Nothing. Sucks. They're closed. I guess we were seeing some wow. We were seeing some rally from his speech. Oh, stupid. Some of this push was from his speech. Must have been. Look at this sell-off now, it's over. Biden says he will be meeting with China's Z. That's what power. Barbecue. Trying to break out his barcode. Sold a little bit, but looking good. Spy all the way back to VWAP. That was weird. Yeah, I think some of this push was from him. I don't know. This was definitely from him saying he's meeting with I think China's barbecue about to go crazy, maybe. Right on the verge. I like that it's consolidating up here. I want to get back into it. I only dropped some actually, all amount. Really like to see it break that 17 full area. Or I don't know why him saying he's I don't know why that would cause a pump. Back to barcode. Rick, what's your time frame on it coming down? If it didn't flush down with that, I don't know what that was. That was crazy. Yeah, it looks like it's gonna come down. It's real close to VWAP though. See what happens at VWAP. Might hold support there. Has a gap down here. I mean, a lot can happen the next 3 hours, 4 hours. Jeez, if I was thinking that this was from Biden speaking, I would have definitely tried to sell. Of course, that's just an algo pop, not like bullish news or something legitimate. You know, it's like a JPAL pop. I was thinking that was a legit break. I didn't see it happen, so I don't know how fast it went. Yeah, I haven't seen a move on the market from Biden hardly ever. Very interesting. A net 77% of European investors think the European economy will weaken over the coming year, up slightly from 75% last month. Yeah, I guess we should have been listening. I don't always like to listen, but
So here's another one where I'm saying I'm taking a shot predicated on the idea that it's going to break the range, and it's going to break to the range on the downside. Now, Boeing is also one of the bigger constituents, if you will, of the Dow. So if the Dow sees sell side activity, unequivocally, Boeing is going to see sell side activity. That is big reasoning, obviously, for putting a trade on like this. Clearly, I'm bearish in the overall.
yeah, it's moving back up. I mean, we're
going to have,
without all that volatility, we're on our way up to at least
like
S412. And
here's another one. I'm going to go out to the July expiration, the July 21st expiration. I want to give myself
it is
plenty
the
of
shark.
time in these trades.
Nailed
that I
it.
consider, if you will, shots. This is a big shot because I'm going to be buying the 190 puts, selling the 180 puts. It's a full $10 wide spread. It's done for a $2.25 debit. So I put these trades on. I mean, all three trades that we've talked about today are very similar.
It's
They're outside spreads,
in a
meaning
flag.
that, I'm buying them slightly out of the money. They're defined risk.
So we might get a breakout here.
Break a particular range.
I'm moving back up.
Kind of
I closed my contracts. I didn't know what was going on. When you don't know, it's just that's what the uncertainty. I don't know if he said something insane there to cause it to drop, and the market's just going to crash, or. And we haven't even seen Biden move the market, so I figured something significant was said with how volatile that got. But yeah, it just made a move to the VWAP. We're back here.
Look at this, 220 down to 192, and again, if you do the math, what are we talking about here? 28, 14. Well, I'll just call it 206 is the middle of the range here right now. And I think you can see, again, Don was talking about pivoting around 200. What's $6 amongst friends?
Firm's
here,
up
right?
almost
you can
7%.
see it has been and continues to be contained, and all of that. Taking a look here at a bigger picture time frame, you can see, and I like this, Don, in terms of the bearishness.
Open door breaking out of that flag.
Right now. Now, if we were to
daily.
get above that, I would be more in line the support of the longer term trend of the upside. But again,
he's not going to Australia, and we won't default.
In terms of
We'll talk on Sunday.
goes all the way back to the beginning of the year, though, hovering around.
Oh yeah, that was nothing.
Around
how the market reacted.
And well, there you can see again the lower extreme holding above 192, still supportive of that bull trend. But as long as we're below 210, this is well, could open up a door for a retest of lower extreme again around 190, 192. I also wanted to point out how we're struggling to get back up above the 50-day moving average here after a couple weeks here, a few weeks below it for the most part. One test above it in the end of March, beginning of April, but also holding above the 200-day. Look at RSI though, for the most part, trending lower.
It's stuck again.
Coming off that high that we saw back in February.
Why are you yelling? Am I yelling?
January, February. So again, I can understand the bearishness on this one. A little odd for Don and I to go 3 for 3, or Don and me to go 3 for 3, but in this case, based on these pivots, based on these ranges, he has
he's breaking out.
You can see where his attention is focused in this one.
Ignored and stumbled out.
You know, once in a while, you guys got to hit it. Same time, you know, Ted Weisberger.
Yeah, AI almost 9%.
A broken clock is right twice a day. I always love that phrase.
Now Spy's back to the normal scheduled programming.
Yeah, no, first of all, I think I'm changing my mind on a couple of these positions now. But no, look, overall, there's going to be a lot of fear that's going to be driven into this marketplace. One of the things that I think everybody has to be shocked about, though, is how tightly we've actually held the range inside of the S&Ps. We're not a stock market anymore. Now we're a market of 5 stocks.
Rick is yelling.
They're basically holding things together. And we
Breakout
all know
music.
That tech has actually overextended this. Okay,
it's all going to come
down to really the next few weeks breaking the ranges. Everything, we're 7 weeks inside of the same 4,100, 4,200 range inside of the S&Ps. We're ready to rumble inside of this marketplace in terms of a much broader movement. As I said, though, I think it's extraordinarily binary. The first move, you know, don't necessarily look at that as being the bigger move that's going to play out, if you will, inside of the S&Ps.
Yeah, I think you make a great point about those 5 stocks, and that's what everybody's watching, because so many of the names are still below 50-day moving averages and such. I mean, even here it says Amazon trends higher as Golden Cross looks to set to form. I mean, you know, that's what it's about. All right, thank you both. Don Kaufman, Ben Lichtenstein.
Open door almost 12%.
Thank you. It was great to see you both. Coming up next, we're going to spotlight some of the retailers. We've had a slew of retailers.
Rubo almost 10.
This week, of course, TJX, which is the parent to TJ Maxx and Marshalls. And we'll take a look ahead to Walmart, because those earnings are due out tomorrow. We have an analyst with us to break it all down. Coming up.
Oh, it's at the resistance. Maybe taking a short up here would be smart. I don't know. I'm down on that. The possibility that the federal government will soon be unable to finance its normal operations has become very real, says Paul Krugman. You should short NVIDIA. I already have an NVIDIA short, man. It's working out great. See that? Best looking short chart you can find. Open door, almost 12%. How's Stella doing? Good. Little cup and handle potential again. Good price action on the 2-week puts. He looks like he wants some more. Up 5%. Barbecue break. Oh, it didn't break. Showing 17. 4. FAI, let's see. We've had our AI hype run. Oh, it'll probably come back though. There'll be cycles with it. You find a weight at a nice historical level. And didn't they raise capital on that rally? Yeah. They raised 12 million, which is good. So hopefully they'll be able to stick around with that cash. No momentum to the upside. Could very well just trade here or going down. But it is at a nice support, or close to it. Yeah, basically right where it's at, it's a support. Lots of gaps to the upside to fill. Okay, 300, the pandemic is not over.
Nicole, let's talk about another winner here. It's up over 7% in the session at this point in time after BofA actually upgraded the stock to a buy from neutral with a new price target of $27. That's up from $21 here. They actually believe that after the Q1 report that they had last week, the ability to see the revenue per install increasing by 48%.
They called Robinhood called you.
Pricing surge that they saw in Q1, and you compare that to some of the other competitors within the space, it does suggest that AppLovin has the advantage at this point in time. They can utilize their new machine learning engine, which is Axon 2.0,
short calls in the video,
be able to accelerate revenue growth in 2023. So they are very bullish on this stock. Once again, the stock's up
Weeklies?
over 7% in today's session. But what's also very interesting,
that's weird. I didn't even know they had it in them.
Since last Wednesday when they reported earnings, we're seeing a technical
should have figured out how much. 1.5 to 10% is a huge spread.
Around $28.50. So let's see if it's able to break through that level. That would provide bulls a lot of confidence.
That I guess annualized.
is able to shape this space and be able to take over market share.
All right.
Hey, Tree.
Thank you for that. Appreciate it. We'll keep an eye on it. I know it's up 3% today. All right. Kevin Green, thank you for that. Senior markets correspondent.
Barbecue.
Let's get back.
Got shut
to
down.
all of these retailers. TJX is the parent
Full
of
flag fail.
TJ Maxx and Marshalls, and we have a lot to talk about. Target, Walmart. Arun Sundaram is with us, equity
Make it,
research
do
analyst
it.
at CFRA Research. Thank you.
Make it means you don't have the underlying if you're selling calls.
Walmart. But I do want to
Selling
start
calls on
one
margin.
at a time. Let's start here.
Stella did split, yeah. Wow, they suck.
$80 price
They're ripping
target.
pretty good.
What are you thinking about Target?
Yeah, Nicole. Yeah, so Target, we do have a hold rating. I know. I think
Oh, is that annualized? I guess return. And you should nail them down on the amount.
Strong metrics, especially in light of the weak.
If you're planning on holding them, I'd do that. Heck yeah.
Comp sales were flat this quarter for Target, but the positive was
there's demand to short it.
Positive. You're not seeing positive traffic across many retailers, but for Target, this is their 12th straight quarter.
Oh, and a wick back up.
Shows really strong brand loyalty.
I don't like that wick though.
Consumers still continue to shop there, even though they are spending less each visit. You also saw gross margins expand this quarter. We also saw these inventory issues that we've been talking about for the past year or so. That's largely squared away now.
2,000 shares of what?
Down 16% year over year. And even within that, discretionary inventory was down over 25% year over year. So now, Target's really moving from
you're talking about barbecue.
A weak inventory position to a very strong inventory.
You have a pretty good position.
And I think that bodes well for them, especially in the second half of the year, especially as we get into key seasons like back to school, the holidays.
They call you or email you?
The fact that they're going into those seasons with in a period of inventory strength, that's the positive. The big negative, I think, this quarter was on the outlook. The outlook was much softer than we expected. We did see comp sales trends weaken as the quarter progressed, especially in April and May. Comp sales went negative, down in the low single digits. So it sounds like in their fiscal second quarter, we will see.
I want to break out yet, but all that volume there was pretty legit on barbecue.
As well.
Yeah, understood.
20 minutes ago.
At some point, the consumer is tired of buying a lot of the same things, right? And so then they become more selective.
Oh, you didn't talk to them? They just left a voicemail or something?
On the consumer. Just quickly, I want to get to Walmart as well, but maybe just a quick thought on TJX, parent of TJ Maxx. It popped. The profit looked good. They beat the estimates, raised the full year. Any thoughts there quickly?
Yeah, no, I think the fact that they did raise their guidance, that's a big deal in this environment now. We're not seeing many retailers raise guidance. In fact,
Pac West, 17.6%.
And some have even slightly guided a
nice
little bit lower.
Swoop and
but the
rip.
fact that TJX did raise their guidance, that bodes well for them. The fact that consumers are continuing to be price conscious bodes well for TJX. Their unique business model of being an off-price retailer.
I might break this level here.
There's still retailers out there that want to unload excess inventory, especially in these more discretionary categories, and that's where TJX really shows their strength in their
I see.
model.
Nice.
Yeah, understood. And
Oh, Spy, yeah, getting squeezy again.
And most people
You mean popping on that too?
love Walmart for all kinds of reasons. Clearly, the groceries are the go-to in a recessionary environment, the must-haves, a staple versus discretionary. But you also noted in your note alternate revenue streams, which I thought was fascinating. Maybe some of these things that I didn't even realize pertaining to Walmart. Give me the big picture on the buy rating and some of the things.
Gosh, I shouldn't have closed those contracts.
Yeah, so the obvious is that
I'd move in the market. Who'd have thought?
A food retailer, it's a value merchandiser. People shop there during periods of economic distress. You're seeing more higher income consumers shop at Walmart. That's pretty much well known.
Do it, they know something.
I think what's maybe a little bit less well known are these alternative revenue streams that are still
payment in barbecue shares,
size, but they are rapidly growing. Revenue streams like advertising, financial
Happy Wednesday,
services,
Daniel. Sure, it is Wednesday.
Services.
Well done.
These are
well done
really
being so smart and knowing the day of the week.
Much higher margin
every
than
single day. Just come in here and know the day of the week.
Inside their store. And I think that's going to bode well for Walmart's bottom line over the long term, especially as these alternative revenue streams continue to grow. And another one is on their third-party marketplace as they grow their Walmart Plus subscription model. I think that third-party marketplace is where Walmart can really start to introduce more general merchandise items there, similar to an Amazon. and even general merchandise bodes stronger margins than food and groceries. So I think, Walmart's historically been known for its value,
What,
but I
Rick?
think now it's
What's
starting to also be
what's going
known for
on?
its convenience offering, which is historically a title that's
Yeah, we're
held
talking about
by
barbecue, man.
Amazon. But Walmart is catching up in that regard.
Would you see a beat and raise? Maybe?
Barbecue's still kind of flagging up here.
Yeah, I mean, this is their first
Making a
first
higher
quarter. I think we
barber
will see a
coating
beat on the
range.
top and bottom line. I don't know if they'll raise guidance yet, but I
I'd
think
figure out what percentage
the trend
they'd
is
offer.
positive. If they don't raise guidance
It's not
this
like
quarter,
a
I think they could potentially raise
short
guidance
call.
next quarter.
That's awesome.
All right.
Be the
Thank you
catalyst
for
for
all
the
that.
squeeze. Lend out all your
I guess I
shares.
didn't really
Starts to move
realize
up.
they were doing all
And
those
recall your
other
shares.
things like financial services and advertising. I mean, I don't really think of Walmart that way. So
Put
it's
extra
turning in-
stress,
I mean, they always said
extra
Walmart
pressure
was the
on the
best
push.
competitor to Amazon, and it certainly seems that way. Arun Sundaram, thank you. CFRA Research. Thanks for being here today.
XD go.
Coming up next, George Hill is standing by. He has his eye on
I don't like these
Keysight
typically.
Technologies. So it's rallying after its earnings. He'll break down the numbers in the report and give us an example trade coming up.
But yeah. Yeah, if you spread out the time, you can see pretty good. Certainly, sir. Rick is never making. Ah, you got an engulfing candle there on the daily. RSI divergence. Doing SPY. Double bottom. Yeah, that's true too. Got some nice volume in here. You got earnings already. This rally on Pac West. That gas made its way back up to VWAP. Nvidia is shooting up. But yeah, the SPY is pushing too. It made its way to VWAP and found support. Started wicking down there. Got a double bottomed here. High climbing. MF, nice consolidation here. Me coming down. Probably a little VWAP test. Quite high. Barbecue still up in this range, 1770%. SPY climbing up. Should have held those contracts, but I got back in. Yeah. I got in a VWAP, man. Crazy, crazy move. North Korea has stolen a total of 2.3 billion in crypto from businesses between 2017 and 20. Got some more volume here. Barbecue might break out. Break out of the barbecue code.
Now, they also supply their technologies in the industrial end markets, but also in semiconductor manufacturing. So they seem to be very well versed in multiple industry groups, or well diversified, if you will. The other thing is renewable energy is another area in which Keysight sells their technologies into. So if you look at their earnings report, the stock being higher about 7% or so, as we can see, they produced a pretty good adjusted earnings number, came in around $2.12, which was about 15% higher than last year's number of $1.83. And they actually beat the estimate by about 17 cents, expected around $1.85. Now, the sales were not necessarily the greatest, but they did beat the estimate. They came in around 1.39 billion versus the 1.29 billion, so they did beat it by about 10 million, but that's higher by about 3%.
Still
now,
grinding up.
I can see why the stock is higher.
Barbecue at the high of the day.
Q3, they just reported Q2. They denoted a nice increase in their earnings expectations when it comes down to the midpoint, $2.03 versus the $1.96 expected, with inline revenue around 1.39 billion. So they're not expecting sequential growth from a standpoint of quarter over quarter.
Open door 14.
But they did move their target higher for earnings per share. They also gave some good clarity on their cash position as well, with around $2.5 billion in cash on the balance sheet, which is about 11% of total equity, which again is very supportive towards their growth trajectory and business model. This company is actually very profitable, by the way.
Full flag breakout on that.
If you look at their gross margins, it's around 64% of sales, and that's pretty good for an equipment company, with net income margins around 22%. Last year's growth was relatively tepid, and I think that was based upon some of the CapEx that was cut back from communications providers, companies like Verizon or AT&T, as they try to shore up their income statements. But on a forward basis, the company is expected to grow its EBITDA about double its revenue growth, with revenue about 3%, EBITDA about 6%.
West almost 20.
Yeah, I mean, the financial outlook, as you're saying, they gave a strong financial outlook, but for shareholders, they're probably pretty frustrated because they've seen it drop like 20 points, right? From 185 to 157 is what I wrote down. They've had this big gap down, now they have this move up. How would you go about the trade, the example trade here?
I went in too late on it. Went for the break again.
There's a lot of gaps in the chart, and if you look
at chop it around, I'll probably look for the short actually.
See that.
See if it ever makes up to 413 or
quarterly reports.
430.
With this report pretty promising, one of the things I noticed today is there haven't been any analysts that have adjusted their price target. So with that said, we can expect some adjustments probably in the next few days or so, and maybe early next week. Now, the other thing is, if you look at the chart, there seems to be a resistance area which corresponds to today's high, which is around 163, and that resistance goes back a few months, while at the same time there's a support area of around 152. So the gap today may be what's called a gap and trap. It may gap higher and then backfill back to that 152, but it also could continue to the upside. So one of the things we could do is play a dual outcome by buying a long call diagonal spread. So what we're going to do here is we're going to sell effectively above today's high the June 165 call, and that's 30 days to expiration, and we're going to use the proceeds there to finance in August in the money call, the 150 that we're purchasing,
still looking bullish,
which is a longer term time frame. So altogether, it would cost a trader about $12 a share or $12 a contract. So
might be setting up our side divergence here, but that's just with that crazy Biden wick.
Price action. If the stock falls, that short call will erode in value to help insulate the losses on that long August 150 call. But at the same time, if there's some adjustments in price by analysts and the stock does move higher, we can still participate up to 165 between now and expiration in 30 days. So it's basically a trade where we're using a short-term out-of-the-money call to finance a longer-term in-the-money call. To again play both outcomes between now and expiration.
All this head and shoulders on daily.
All right, thank you for all of that. Great example trade and explaining what's going on here with Keys. George Sillis, thank you. Coming up next, time for our 360 round, all the latest pertaining to Microsoft Activision, that deal. So it got the okay from the EU, but gets vetoed by the UK. What's next? Also a preview of Take-Two coming up.
my call options? I didn't hear they say that. No, never. Never, never. Workhorse too, yeah. Pie's coming down a bit. First side divergence might be playing out. Yeah, a lot of the hype and small caps are running today. Or Workhorse was it? That. HKS. Almost 10% on this thing too. I kind of flagging again. Maybe, I don't know, just kind of choppy.
The third-party gaming industry, and they've got great franchises like Grand Theft Auto and Red Dead and NBA 2K. And the business is very hit-driven. It's kind of a bifurcated market with the big blockbuster games on one end and then small niche independent games on the other. And so they're really well positioned to play the blockbuster game. but that's a very up and down business and very tough to always come out ahead on. You know, you've got to constantly be generating new blockbuster event games that can sustain for years. And if you look at their Grand Theft Auto franchise, they're going to come out with number 6 in 2024. But if you look at when number 5
Up is up
came out
10%.
in 2014, they had a 98% revenue boost from that. But then the next year they dropped 31% on the top
Yeah, GameStop.
line.
We've been watching it.
So it's
What, like
an
4.5?
up and down, hit-driven business.
Yeah, it is a little
And
bit.
it's
Not
tough
squeezy, but
longer
nice,
term to keep
nice continuation.
generating those
Just
hits.
grinding
And
up.
we wouldn't really think that most
Volume's definitely better
investors
today.
need really extreme
So
exposure to the video game
watch it though. It's
industry,
feeling
and
good.
you'd much rather own a Microsoft where you're getting gaming, but you're getting the cloud business, you're getting the
ETL
Microsoft Office franchise,
13.5.
and one of the greatest allocators of capital we've ever seen with 40% returns on capital.
I just want to give Nick a chance here because we're almost out of time. We have a few seconds left. Nick, quickly, are these buys, and what are your quick thoughts on Take-Two?
Yeah, for sure. I would agree with all the things he said, but you know, looking at the acquisitions
5% on
they had
no.
last
I
year,
don't really need news
should
to move
definitely
5%,
boost their
especially on a
mobile
smaller
aspect
cap
to their
like that.
business, which should be positive moving forward. And you know, over time, they'll help reduce expenses once they bring Zynga into the fold fully. So I think there's
Skimming out of some more of my position
we would say
here.
that a diversified approach to esports and gaming is definitely the way to go. There's a lot of opportunity within these names, and taking something like Espo, which is our video game and esports ETF, approaching the space in that way is a way to get a pure play to these without over investing in one individual name.
Nick Frassi of Van Eck, Doug Astrop of Exponential Investment Partners. Thank you both, Doug and Nick. Appreciate it. That's going to do it for us here on Trading 360. I'm Nicole Petalides. I'll see you at 2 p.m. for the watch list. Fast Market.
Back west, a nice uptrend. Go up almost 10. Charge point up 2%. Firm up 7%. That's down 5% today. Still no gap fill. Ah, I got filled. That was tough. Closed out of the shares on my one account. Barbecue on the E-Trade. We get a break of 1790. Might put more in, or I might just hold what I have. Brewers looks like a nice short. First solar made an island bottom. $22 billion. The market cap on First Solar is just outrageous. Seems so overvalued. That's just ridiculous. Big volume candle barbecue. Which one? Got this one, 178,000. Almost 294,000. That's Weeble actually, so that might be more than that. What was this news? Why did it pump there? Oh, they're acquiring someone, that's right. Jeez, Bud has continued to sell off. Easy. Look at how cheap Pfizer's gotten. AbbVie's had a pretty big sell-off too. Barbecue hanging out at the highs. The highs. Yeah, I think this this pump was Biden saying he's gonna meet with China to see. And then the dump was just the reaction to the overreaction to the upside. It's over. That's it.
Are still looking for affordable joy. There was so much talk about this affordable joy on the earnings call, but yes, just kind of running through the numbers.
Yeah, good to see the big volume candle.
EPS at
$4
$2.40
on GME.
lower than the year ago period.
Came in much yeah, I don't know. Without a catalyst, I'm just curious if it gets squeezy over 30 still.
Revenue came in at $25.32 billion. That was basically
I think 24 is going to be a pretty big reason.
Only maybe a 0.6% increase.
22, it dealt with swiftly today.
Basically came in line with
expectations. This level from the earnings.
It was, you know, if you look past the decimal points, comp sales were flat with last year, whereas analysts were actually expecting a decline. But comp store sales grew 0.7%, whereas comp digital sales declined by 3.4%, which highlights just a shift in how consumers are actually purchasing their target items. Beauty was the strongest category, comp growth in the mid-teens. Food and beverage grew in the high single digits. Household essentials grew in the low single digits, noting particular strength in health and pet care. But apparel, home, and hard lines saw declines, and shoppers spent less as the quarter progressed. The company executive said sales were strongest in February. They began decelerating in March and softened further near the end of April. So the near-term outlook, of course, is impacted. The company is saying based on softening sales trend in the first quarter, the company is planning for a wide range of sales outcomes in the second quarter, centered around a low single-digit decline in comparable sales. As such, they see Q2 adjusted EPS of $1.30 to $1.70. Well, the consensus was for $1.93, so that's quite a big disappointment, definitely a downbeat note for the current quarter. That said, Target is standing by its full-year outlook. It expects comp sales will range from a low single-digit decline to a low single-digit increase for the full fiscal year. Target said its full-year earnings per share will range between $7.75 and $8.75. So that could be why we're seeing shares up more than 2%, despite the fact that the current quarter guidance was pretty downbeat, and that's just because it doesn't seem like it's going to impact the full year, at least at this point. But yes, definitely a consumer that's under pressure, still spending on things like beauty,
today.
but not so much on things like home, which is really what we've been
RSI
hearing from Target
divergence
for quite some time.
like 3 weeks.
Caroline,
When
I
we're
think
head and
some of the
shoulders now.
significant parts of this, remember when
bullish.
if you look at the 1
Things
minute
just
charts,
gotten wrecked.
when they announced earnings, the stock dropped. It traded 151 and some change before rallying. And I think here's why, Caroline, and I'd like to hear your comments. Couple things. Number one, inventories are down 16%. That discretionary part of their inventory that was such a problem. Margins now up over
it's at a support.
recovering from the
Below the support.
mid-threes. Their
Broke
goal
through
is
it.
to get that back up to 6%. But how about this, Caroline? How about the shrinkage story out of Target? $500
Definitely needs to bounce, or you're looking
in
pretty bearish.
and organized crime. That is an
Fine,
alarming
the
ego
on you. Not more
coming out
here.
of a retailer like this, and it's a number that really,
Ace, thank
if
you
you
for your
think about
memberships
it,
that
you
you've
can't
gifted.
ignore it, Caroline.
Fidelity is working, Hugh. It started working yesterday. It was highlight of my day. Thanks for the memberships, Ace. DJ, come thank Papa Ace in chat.
Of the issue, so no surprise. I think it was in San Francisco
high
that I was
five.
seeing Target stores where
Post to another high five.
The ego on you.
Ash 24/7.
that I go to, but I can't
Come
imagine
thank Papa
what
Ace.
it's like to
Get
actually
out of your
shop at
lurker
stores
ways.
like that. I guess it would
Make
just
your
be
way to the
easier
chat.
order
Come say
online.
thank
But
you.
yes, those gross margins definitely
Fall out of that
helped
cave
by
here.
lower freight costs. Operating
Thanks,
margins
Ace. Appreciate it,
are
man.
not yet back to pre-pandemic levels, and the company said that won't happen until next fiscal year or later. But so, gross margins definitely a bright spot. We should expect to see something similar for Walmart as well, based on those lower freight costs. I will say that Target did mark its 12th consecutive quarter of year-over-year growth in store traffic. That's something that Walmart hasn't been able to achieve. So still pretty impressive that they can really drive the traffic despite the fact that the consumers are buying fewer discretionary items. But Brian Cornell says Target is drawing them in with groceries, everyday essentials, and on-trend items. Not so sure about the on-trend items, but groceries and everyday essentials should also really help Walmart as well. That being said, shares of Walmart are down about 0.5% right now ahead of their earnings tomorrow.
Yeah, Walmart's definitely been outperforming in the big box retailers. All right, thanks to Caroline Wood, senior markets correspondent here, breaking down the Target earnings. But now let's bring in Nick Theodorakis, Financial Risk Management Director at TD Ameritrade. Nick, I wanted to get your take here on the debt ceiling. You're in the risk side of business here. So what's your thought process? Because history tells us we get through these choppy times, and we've seen the S&P 500 consolidate at current levels.
Yeah, there's been significant consolidation. We're basically unchanged over a 5-day period, guys. These concerns are hanging over our heads, and I think it's extremely positive to hear, both sides talking about this openly and being, as optimistic about getting a deal this far in advance. I know it's only a couple of weeks, but it seems really positive that they're doing that, and I think they've calmed markets. I don't think you're going to see a significant breakout one way or the other here until we know what the terms of that deal are and how it's going to be digested and approved. But I think it's a really great thing to see that they're out there talking about it, and it certainly seems like it's calmed markets.
Yeah, I think that's a concern here, Nick. When you look at this, it's kind of got that overhang over the equity market at this point. But at the same time, if you've seen the rally in the NASDAQ 100, S&P 500 still up 7.5% so far this year, lagging on the Russell side of things. I mean, is that what we need to get that next boost to higher levels, break through 4,200 maybe in the S&P?
Yeah, probably. I mean, you've seen most of the mega cap names doing really well. Apple's down on the day, so it's just such a big component. I think, Kev kind of made the point, like there's not a whole lot of drivingness out there today.
Barbecue.
You see Tesla up pretty
Doing
decently
it.
after their investor event yesterday, but Apple down
1774.
all day, and that certainly kind of puts us in a sideways movement because those companies are so widely held.
Breaks here, I think.
Curvature to the VIX, guys. I was looking at this.
Next leg up is
like 17.
1810.
Today's vol is much lower, like down in the 9s. It's the one-day VIX.
Realistically,
look out, a couple of months.
There it is, 1790.
We're back in the 23.
That's my line there, but that's kind of just a range. It's not
flat vol. Through the summer is what it's sort of shaping up to be, assuming this debt situation gets figured out.
4%.
But there is, a bit of a curvature back to the VIX now, and projecting a bit higher out into the future, which I think is interesting and probably indicative of the fact that we just don't know where this interest rate story is going to take us. So I think once the debt ceiling piece is figured out, attention quickly turns back to the Fed and how do they get inflation. How do they keep inflation going generally in the right direction without really impacting the job market and causing a bigger issue than they're solving?
Yeah, job market still tight at this point, Kevin. But it can go. Unemployment rate can go up to 4.5%, and it's still full. Basically considered full employment.
By definition, it's considered full employment. Sure.
Exactly. But when you look at the dollar today, higher yields.
Well, all week.
Yeah, a little bit higher. Yeah, dollars at 5-week highs. Right. It's not negatively affecting equities at this point, but there's maybe a little bit of a rotation back into small caps.
Yeah, exactly. I think I was talking with Oliver about this. When you look at the entirety of the data and the Fed speakers that we had Monday and Tuesday and everything that we've seen so far, look at the 10-year yield that was 3.3 last Thursday. And now it's over 3.5. Looks like it wants to go towards 3.6. If you look at the dollar,
why 1790?
Now,
because my line's there. Is that why?
So the
why?
dollar
Why did it stop there?
Both moved higher. That, by definition, should work against stocks or take some of the euphoria out of stocks that we're getting on good news. But yesterday was a really impressive day by the NASDAQ. And a day where the markets were heavy, the NASDAQ just refused to go down. It was impressive. And now what you mentioned about Home Depot, a day after being soft, it's right back up. Remember the 280 level that we talked about so much on the show that held yesterday? I thought that was really significant. But all things considered, we're getting into mid-May, Tom, and I'm not surprised that the VIX has taken the brunt of the movement today. And I have a question for Nick. Nick, for our viewers, what is the one-day VIX?
18 cents.
How do they set that up? Is it VIX 1?
VIX1, the number 1D.
VIX 1810. Getting some volume there, too.
I'm glad they give us a simple symbol.
Nice.
Guys. It isn't one of these like...
I hope you guys appreciate my sacrifice by selling some.
It's about $10 to 10 is the calculation. What they're basically doing is...
Yeah, really interesting because I don't know if that's... The indication, I think, from this data point is momentum. Which direction is volatility headed? And
I agree.
That's pretty significant. I mean, that it's down to 10 today.
Yeah, and that's a volatile on an intraday basis, that product, that new product, the one-day VIX. But, Nick, you mentioned the fact that, you go out 100 days and the VIX, that curve that we're talking about.
Huge gap. You just see how illiquid this thing is. It's crazy.
You would think with this, this firmness.
At 263,000 that candle.
30-day VIX product, trading around or hitting around 17 level.
Volume's picking up though. That's good to see.
If everything's calm with the markets right now, that maybe some of those numbers in 100-day, 150-day VIX
they have no power here.
Be a little bit lower.
Barbecue tap in-store barbecue stands to bring customers on the same day delivery barbecue. Do it. And you can play pickleball in there too now.
Remember, kind of historic average is about 15. So even at 17 with the 30-day product, we're still elevated to those historic levels. And I think that's partially because, we're not all the way through the
barbecue volume is 10%.
We're going to hear about
what are you saying?
Retail in general, just kind of the health of the consumer is going to
kind of OTC market.
What? Over the next week or so.
That's not true.
There's some of that baked in to the slightly longer term. And
Up.
Once the debt ceiling
15%.
Really, I think gets truly hammered out. If there's anything other than just a 1 or 2 month solution or kick the can down the road, if we really get something a little longer term, I think you'll see that deflate pretty quickly. because that really is sort of the piece that's on the horizon to me that's driving it. Then everybody shifts back then to, okay, the debt ceiling is not an issue, right? Theoretically, whatever they solve. What does this interest rate story become? Because remember, markets are still projecting a couple of cuts by the end of the year. Well, we're halfway through right now, and the Fed is really dug in and telling us that is
That
not
gas is above
We're not
VWAP.
at that point yet, and they're pretty adamant.
Barbecue coming back down a
and
little
all the
bit.
speakers we've heard this week are
Transactions
saying we
here.
can't pivot too quickly. So even if the rate increases stop, staying at this level is absolutely restrictive.
That would be pretty funny, DJ.
Where, jobs are less abundant, wage growth is less abundant, and we've got the consumer concerned about that. So I think that you're seeing some of that.
Wall Street Journal did not mention me,
which is why you've got that sort of steepening of the VIX curve, I think.
Yep. All right, guys, we're going to take a quick break here, but when we come back, we're going to go back into
barbecue news, actual news.
We got Cisco coming up after the close. It's flat this year. Reports
just this article
after the bell, and it already took a big hit this year after Juniper.
Sorry, that's me.
Competitors saw a 30% drop in orders. That's coming up after the break.
I didn't give him permission to mention. One here. Stop pinging. Some investors, that's you. Okay. Yeah, certainly did. Certainly did mention me. We get Jenny. I give up on barbecue all the time. I gave up on it some today, right here. I'll buy Jenny. See if 1790 holds. See a little uptrend though. Coming into Friday, I wasn't sure, like Thursday, Friday. Oh, I like to sell it off. However, this is on OTC now. Rules might not play over here. Just that one little candle, and it's up more than GME is after all day of GME grinding. At VWAP, up 3.8. Went short here on the future. Yes. Got an engulfing candle here. All these topping wicks. There is an RSI divergence. Not holding that very high. Jenny, man. Barbecue. Gonna buy it on the breakout or the dip. Instead I sold. Front row. Well done, Trace. You're good at chatting. What a skill you have. Congratulations. Liechtenstein.
Segment of their business, but Cisco's trying to really grow their cloud
It looks like
business
it's
and
gonna
their
break out.
application business.
Full flag style.
Yeah, I think if you see a decline,
We
in
see
hardware
maybe a little
here,
move up to 413.
they will try to
Maybe.
spin that into a story around reoccurring revenue subscription and cloud and infrastructure there. So I think they have a potential to spin a miss on hardware in a positive light. If the subscription business is there, guys. But I think. It was a lot easier to be excited about Cisco, to your guys' point, when you could walk on the floor and see the racks of servers there. It was a little different. This is a little more esoteric now, and I think it's hard to understand how well the shift in their business is going. Security is certainly paramount, and firms aren't really cutting expenses there from the folks I'm talking to. But boy, there's a lot of concerns around capital expenditures in general, and if you're able to sort of hold on a bit longer depending on your business model, I do worry that not only like the consumer stuff that we talked about, but just the overall corporate investment, the corporate expenditure right now is hard. It's hard to get loans. It's for smaller businesses that are thinking about upgrading, it's more expensive. For bigger businesses, it's all about expense management. We've seen all the job cuts. Well, job cuts typically only come after you've exhausted all of your other measures of cutting expenses, and I think that some of that could come through in the IT spend category. The good news going into the earnings is that we've already seen a big drop, to your point, that they reacted very strongly on that Juniper news. So is it overdone, or is it we're going to hear more of the same, and both companies have in the sector has more room to fall. We're gonna find out this afternoon, guys.
Yeah, it's been trying to rebound the last couple of weeks, Nick. But you've got an example trade for us here going into earnings.
Yeah, real simple. Don't tend to buy a lot of options going into earnings. The vol is not that high. The expected move is actually fairly low. Just a simple put spread here, guys. So buying the 45, 47
Like it.
put
I'm
spread.
buying more of it.
I had it queued up at
Like
I
the
think
break.
examples at 70 cents there on the screen. You can get it for about 65 right now. So what you're looking at is max risk of what you pay for this spread. So $65 if we get filled there. And then the flip side of that, the max gain would be just the difference between the strikes. So $2 less that.
Daily RSI is still so low.
So it's a pretty simple trade. Again, we don't tend to buy.
Might get an engulfing candle today too. Look at that.
Into the earnings week. It is double the vol in terms of vol percentage. It's about an 80 vol with 2 days to go, but only projecting about a $2.25 move. So I'm just sort of taking a little bit of a bearish stance here, in that. Yes, they've fallen, but they really have consolidated and gone sideways. I think if there's any miss here indicated, and as the guidance comes out, if we see that hardware sales aren't great, and they talk about slowing sales in the second half of the year, it just feels with the way that Juniper reaction was, that there's just not a lot of room for error in this sort of legacy business, like Kev said. And if we see that, I worry it could be sort of a look out below scenario.
Yeah, and that might be might go into guidance here. So let's break down this example trade Nick's got. May 19th monthlies that expire in just a couple days here on Friday. Buying the 47 put, selling the 45.
Good point, Trace.
Wide. You're paying roughly
pretty wise.
70 cents on that. There's your risk. Your apex profit.
She was in her home office smiling big.
Level. So if we do get a drop, it's going to be
all
quick.
giggly.
Nick mentioned, Kev.
Green on that gas on the day. And back up through VWAP.
Implied volatility levels really elevated, but over the last 52 weeks, because the market's been really volatile over the last 52 weeks, it's in the lower, maybe quarter percentile of implied volatilities, but this is a pure directional play.
Yeah, everything looks cheap when the vols have been so high for the last year. It skews the options.
1830 on barbecue.
On the current IV.
Did pick up.
This is one. The move
shares in the other account.
The expected move up or down. So if Nick gets his
Did
move
happen.
on the downside, that's right to his short strike. So
I like the break to the upside. And coming into a Friday, coming to the weekend, having a strong day. Strong Thursday, strong Wednesday, strong Friday.
So about 65,
that's a great momentum.
Around there. But like I said, if you're right, it's triple.
Yep, and I think guidance.
It is lower probability on this. throw out there, guys. Well, just take a look at like a 1 year day chart, and it hasn't traded 45
Right on my
in a long
right on
time.
my
It's
line
traded really
again.
45 since last earnings. So it is a bit of a. It doesn't look like a big move is required here, but
It's
the
flagging
target's
again
certainly
up
been
here.
higher, traded up as 52 and a half. It's tested below 46 a couple times, but has not gotten down to 45. So you sort of shift it that way. It's not pure technical analysis by any stretch, but take
Flies
a look at
moving
the
up.
chart too, and it is a
Breaking
lower
out of that bull
probability trade.
flag.
You need to move, and you need to move it to a level it hasn't seen in quite a while. But just pulling in some of the the chart view as well to make sure that folks understand the risk in that. It doesn't look like an expensive trade, but hasn't been down to that level since really like November. So.
Yeah, and you got short duration. Nick mentioned it's a simple strategy. It's not a simple strategy. It's just a two-legged spread as opposed to four. We don't like to say simple on here when we're using options, but a good look at a directional play. If you're more bullish on a name like this, buying a near-term or short-term call vertical may work for you. So there's different ways that you can look at Cisco into earnings based on your assumptions. All right, thanks to Nick Theodorakis, Financial Risk Management Director at TD Ameritrade.
Yeah, SPY.
Up after the break, Kevin
I'd probably make that move back up to 413.
For discussion on another
We'll see though. It's at the top of these wicks.
They report
If it
earnings
rejects or
tomorrow morning.
going.
It's outperforming in that big box retail space. We'll have to wait and see on that one. Fast Market's coming right back.
Yeah, it wants to go. Looks like it does at least. Yep. Fine, moving up. Isn't that bull flag? But all those wicks, golfing. The Biden pump and dump is what threw it all off for me today. Had a nice long right here on that flag breakout. I guess I could have just sold at the top of that candle, but what was going on? I say barbecue. Yeah, little barcode in there. Look like that as we come into summer. Less volume. Fubo's up 11%. Wheels up 13%. Kind of a soft level actually, this 413.01. I just blow through it. Not necessarily, no. See how today closes, Robin. Really depends on close to close more than intraday price action. So let's bring it up to the upside though. Yeah, it's less likely. But again, depends on where we close. I rip in there. 413. Groupon woke up. 16.8%. Thing, Robin. Got an RSI divergence here on Groupon. Quite pronounced.
We can see that mentions are up about 4% year over year. It's pretty flat, nothing really crazy with it. You look at some of the other stuff, for example, the household essentials. That's Target did a really good job with their earnings report on that. That was a highlight, and I think that bodes well for Walmart as well. Their great value brand is up about 28% on a year-over-year basis when it comes to consumer demand. So they're setting up there for, just like you talked about, when the economy's off a little bit, Walmart can do better because they have that lower pricing
Nice
that people
squeezing.
really like. The downside to them is their happiness. This is something that we always talk about. I mean, they are just one of the lower happiness companies when it comes to some of their competition. At 54%, you know, Kroger, Target, Whole Foods, they're killing them on the happiness
IDEX up
scale.
8%.
So even, that does take into account price. I mean,
Nice,
people
yeah.
like to pay less, and they're happier when they pay less. So even though Walmart does have the lower
Got
price,
in at the right,
there's other
not
things
too high.
such as quality and just, I guess, atmosphere
Still,
of the
still in that
stores
nice
that are really
formation.
dragging that down. I think that's the main
Starting to
thing
get kind of weak there
that
for a
we're
bit, but
seeing drag them down. They've got the,
did.
you know, they've got the cheaper products. They've got deal discovery on their side. They've got their,
I got such good cost basis.
their great value
Mullen.
brand on their side. Things are
Mullen just
working
woke up
for them, but the happiness is the main thing that's pulling them back.
10 minutes
I think if
ago.
they had happiness
Mullen
levels
squeezing.
at Target or Whole Foods, we'd have a much higher score on them. So looking to be a little bit neutral going into this one. And, you know, this stock doesn't move a whole lot. So it being down 0.5% on today partially based on what Target
Marvelous.
reported,
Well done.
may be a very small opportunity
Mullen
to get in. I
18%.
don't see a big sell-off coming from their numbers tomorrow. I don't see a big run-up coming from their numbers tomorrow. I think it's going to be fairly flat.
Room to,
so I'm
to
interested
run.
to hear what your take is, Kevin.
You know, Landon, this
$1.56
is unique, right? It's the mother of all economies of scale. It is everyday low prices. It's not a membership fee into the main store. Obviously, Sam's Club is, but not the main store. You don't really need a membership.
20%, 21.
That help them compete. My question is, I see Whole Foods, I see Target, I see Kroger. What is their competition? It's not Whole Foods. Good Lord, it's not Whole Foods, as you know. I'm not even sure it's Target in terms of overall price points and experience. So when you look at a stock like this, and the range bound idea, your calm idea,
Got it right here.
is in line with what I'm thinking, but who do you really compare Walmart to? Because if it's Amazon and Costco, they don't have a membership fee, right? You can go there without a membership fee. Who does Folio like to compare Walmart to? Or is it its own atmosphere, its own planet?
Sure, I think it's just how far is your band that you take out to say who are we willing to compare
Still
to?
squeezing,
I think
man.
the closest is going to be Target. They do
Full
operate
flag
very
breakout.
differently. I mean, Walmart's got a lot more stores. They operate in they're the lower price. Target's kind of like a little bit higher quality. So it's tough to compare on there. You could also, I think, throw in Amazon as a competitor.
Sure.
Even though you can't walk into an Amazon store, but if you're going for price and delivery, then obviously Amazon is there. So one of the reasons that we threw in Whole Foods is because the grocery, I think, is a really big thing for Walmart. When you look at some of the
Barbecue.
trends,
Maybe flagging again up here in this higher range.
at about 17%
Good, it's up 4.7.
year-over-year. They're looking to cook more. They're looking for value
Bounce on
brands, and
VWAP.
I think that's why Walmart is there. So it's people that are concerned with prices of foods, people that want to deal discovery, and that are
around
going out to eat
20%.
less. They got to eat somewhere. They're cooking at home, and so they're doing
I'm
that
about
with
to make
the
a new high
value
on the
brands.
day.
of Walmart. So I'd say, to answer your question, Target is the closest competitor. We've got Walmart doing a little bit better than Target this quarter, like I said, as far as purchase intent. Happiness, though, it's always been Target dominating that one. I think that Walmart, when you get into happiness, you can find some lower tier companies to compete with, but they're nowhere near the size of Walmart. So Target probably number one, and then you could argue Amazon, maybe Costco in there, but they're very different than the way Walmart operates. You do have
One last thing, Tom, to add to your discussion. Remember last May when Target sold off? So did Walmart on those inventory
They don't spy there.
So it'll be interesting to see if
very
they
squeezy.
Much like Target did.
Right, and Walmart had some inventory issues also. But just real quick here, Landon, I wanted to ask this question. Going out to a restaurant, we've seen that fall after the big splurge at the end of last year into the early parts of this year. Is that a concern for the overall consumer, or as you mentioned, is that more of a benefit for Walmart because their grocery business is such a big footprint in their stores now?
That's a great point. So it is a bit of a bellwether. So we're seeing, in general, we're seeing a lot of signs of consumer weakness. People are talking about having their credit cards maxed out, depleting their savings account, trying to save money, do all kinds of things. So I think that you have a great point. I think that people are going out to eat less because it is a weaker consumer, which is going to be weaker for Walmart. But just like Kevin talked about, when the economy does struggle, you still have to buy things. And so maybe you shift from going to the nicer experience and the higher prices of Target and shift over to Walmart where things are a little
gas
bit
is
cheaper.
pushing up.
Walmart can kind of win in any scenario. They're really set up well to do well in all types of economies. So, we haven't seen a thriving volume from them, as you can see from this chart, pretty flat for the last year or two. But again, I think that they're pretty resilient. I mean, you could almost consider them sort of a defensive stock. So I do think, though, to answer your question directly, I think there's some weakness in the consumer right now. Whether that helps or hurts Walmart more or less than the overall stock market, I think we'll have to wait and see. But I do like them as sort of a defensive play.
All right, great stuff as always, Landon. Appreciate all the data.
Thank you, guys.
All right, that's Landon Swan, co-founder at Likefolio, breaking that down for us. Kevin, what gets overlooked here is some of the I think initiatives that they've taken on the tech side of things.
They are incredibly lean and agile for a company the size of Walmart. It's incredible how tech savvy they are and how they move in and out of products and things. I think they do an amazing job, and I think that's why, even though they have that aura about them, they compete so well against these other what appear to be high-tech companies. They're right in there with them.
Yep, innovating in supply chain, adding capacity businesses, cutting some expenses. Margins are going to maybe improve just due to the fact that supply chain issues are starting to wane a little bit.
Their inventories will be a question, and that'll help
with
the overall margins.
Still going up.
It was that discretionary inventory that got them a year ago.
Crazy.
And Walmart Plus memberships
Easy rip
supposed
there.
to be improving.
0.78%.
Playing catch up with Costco there.
Wow.
You got an example trade for us here.
0.82.
Well, last week we actually covered Walmart,
Push through.
and when the stock was 153, we did an iron butterfly.
He's getting a push on that also.
Strike. Well, that trade has actually done fairly well up to now.
Sometimes.
So in the range bound that we did then, in the range
it lags a little bit. Let me see.
Likefolio was looking at.
We might be lagging a little bit. I see 18.19 on E-Trade also.
That we already did, Tom. So I did.
It's with OTC, I've noticed it lags. So
about just right at $5. Tom.
Dude, look at this.
So what I did the 155, 157 and a half call vertical. I did the 145, 143. Don't have 2.5s on the downside. So I did the $2 put vertical, $2.50 call vertical.
Outrageous.
Trading right around 75 cents, Tom, which is that minimal that you're looking for. If it's 30 cents a dollar, 2.5 should be right around 75 cents. So it's on that number. But Tom, this is just another range-bound strategy. If these results come in line or slightly higher, like Target did, this trade should do well. But obviously, a move over 155. Below 145, that'll be a problem.
I mean, it might be going for that gap fill at 418 or 415.
Move is an issue.
Right. Let's break this one down. May 19th, weeklies expires in just a couple days here.
Crazy price, especially because we're in SLD period.
57.5 call vertical, selling the 145, 143 put vertical. You've got risk of about $1.25 or $125 on the downside because that 75-cent credit you collect, which you can make on this, minus the $2, and then you've got an extra 50 cents in risk on that one, so $175 to the upside, and that's above 157.5.
You're seeing it now.
Some assignment risk on those short options into expiration, but this takes advantage of what Likefolio gave us here on a neutral type strategy here, where the most you can make is the credit that you're taking on that, but you can see there from the risk profile, you got a little bit more risk there on the upside.
I think a big thing that Walmart will have to talk about is in January 31st, they had $56 billion in inventories. That's historically way too high for them. We need to see that number come down.
We need them to give numbers that Target gave, where they had a reduction of 16% on inventories. All right, Kev, good look at that short iron condor as a neutral strategy as an example in there. But coming up after the break, we're going to take a look at Take-Two Interactive. The video game maker is up about 18.5% so far this year, ahead of their earnings after the close. Fast Markets coming right back after this short break.
So. Why is it flagging up here? Probably wants to keep going. That's the tippity top for 1378. Right above it. Wow.
Still very range bound and contained, but investors cheering on kind of mixed data from the housing starts, building permits, and similar fashion what we've seen in terms of earnings from some of the big name retailers. In terms of Target, keeping an eye on Walmart a little bit later on today. The S&P is up to 41. Well, here they are at 41.44 right now. You saw the Dow Jones Industrial Average taking out 33,300. I've got the Russell up and through 1750 convincingly, and the NASDAQ through 13,500. So yeah, across the board, seeing some optimism. It'll be interesting to watch how these debt ceiling discussions continue here, Tom. And then again, we have some jobless claims and some other data due out later this week. But headed into the middle of the week, definitely some green arrows across the board.
Yeah, Ben, and one of the reasons I think you're seeing some weakness in Apple here today, tech's underperforming just a little bit, but maybe due to that rising dollar. We hit 5-week highs earlier on in the session.
Yeah, and we've also seen rates inching up a little bit as well. So one could argue that without that, maybe the indices would be doing a little bit better off than they already are, and further enjoying some of these gains today. But you mentioned the U.S. dollar back to 103, end of March levels, beginning of April levels. We've seen some weakness in the euro, definitely some in the yen. Keep an eye on that as well. But as mentioned here, you've got rates inching up, also, I think, bolstering what's going on in the greenback here in this bit of recovery here off the year low prints, or the test of the year low prints. 2-year back above 4%, 4.08. You've got the 10-year above 3.5 at 3.56 last I looked. I mentioned weakness in the euro, weakness in the pound ultimately. I'm sorry, in the yen I meant to say, but definitely keep an eye on the dollar, especially if it continues this strength here up and through 103, 104. Keep in mind, Tom, 104 is the middle of the range that we were in, that we established last year, 94 up to 114. So again, the bid that we're seeing here just has us back into that area that, well, the dollar's been very comfortable in over the last 12 months or so.
Yeah, we've been
SPY's getting insane
here on Fast Market on that dollar. Going the wrong way to help equities, but having a nice session today for stocks. And thanks to Ben Lichtenstein, host of the Future Show here, breaking down markets and the dollar for us. But now let's bring in George Tillis, senior markets correspondent here on the network. George, we're talking video games. We're talking Take-Two. This is Grand Theft Auto, Red Dead Redemption. You know, last quarter it seemed like they lowered guidance here a little bit going into not only fiscal year but the next quarter. What are you seeing here for Take-Two?
Well, they did. I mean, if you look at last quarter, the gross bookings were lowered, and in fact, you know, overall sales, which are still higher, but you also have to take into consideration that Take-Two purchased Zynga. This was back in January of last year, 2022, and it was actually finalized in terms of the deal around $12.7 billion of May last year. So sales for this quarter that they're going to be reporting this afternoon are quite a bit higher at 44% growth, expecting around $1.34 billion. That's slightly lower than last quarter at $1.38 billion, but there may be some seasonal impacts regarding that. But at the same time, 67 cents of a profit is expected, and that's down about 29% compared to last year. So I think what's happened here in the last year for Take-Two, I mean, year to date, the stock is up over 20%, and I think it has to do with the fact that, you know, you have to think about licensing, game content, technology. The stocks in that particular sector have been higher because of the overall tech growth we've seen this year in terms of stock prices. But looking at it from a standpoint of financials, the 67 cents looks like the low point estimate for the remainder of the year. In other words, things look like they're improving, because if you look at the company's operating expenses in the last year, they're actually negative. I'm sorry, higher. As operating income, forgive me, was actually negative. And in fact, the company lost about $403 million last year on about $4.8 billion in sales. So its net income margin was negative 8%. And I think it has to do with operating expenses. Maybe the operating expenses were underestimated based on the acquisition of Zynga, which is a very large and prominent online game application and game manufacturer. But at the same time, again, that might have played through, as the stock since November has actually increased pretty substantially. So I think this will be an interesting quarter for Take-Two, because if you look at the elements of the forward multiple is trading around 35 times.
That's really weird, Cameron.
Take-Two alone on a 5-year average is around 28 times. Now they are expecting
a crazy move on
EBITDA
SPY
growth to manifest positive for the remainder of the year. But the 6.5% growth that is expected relative to the multiple of 35 times compared to 28 times a 5-year average, to me, it looks like it's priced for perfection. So again, this will be interesting to see if they do adjust their earnings higher after the earnings report, as well as maybe sales, and give us some inkling about what's going on with operating expenses. That it could certainly continue the trend, which has been
Holland got shut down, huh?
George, this is a small company.
12.5%.
Compare it to Activision Blizzard.
I'm out to
it's
VWAP.
Fifth the size of that in terms of the float out there. This is a company with a pretty sizable negative PE, like you mentioned, not really profitable yet, gets punished. If it's swinging to positive, you know, it looks like the analysts they all like it. They all see numbers higher than where we are now. But you know what this market has done to unprofitable companies, George. is this company, is this 68 cents that they're expecting, is this something that's going to be a one-off? It looks like about a year ago they made money, and then they didn't for the next few quarters. What's the overall landscape?
Early team by the end of World War II. That's crazy.
That's the thing. So yeah, you mentioned the negative PE. Like I said, they lost $403 million last year. That's
Firm looks really nice.
So that's net income. The operating income in the last 3 quarters has been negative, and that's maybe again reflected in the price action. If you look at the last year, despite the year-to-date increase of about 21%, the stock is barely positive since last year. So I really think it's a situation where their operating expenses obviously came in quite a bit higher
hanging out up
than
here.
anticipated. The net income was lowered. It also might be due to discretionary spending. Maybe there's been a little bit of a pullback in
Up on 1
discretionary
o'clock.
spending in both franchises, the Take-Two franchises, which we know include Grand Theft Auto, NBA 2K, but also the Zynga franchises. So that also might have been impacted.
Yesterday was the first bearish candle we've had in a while. Today's the first real bullish candle we've had in a while.
If you look at the forward basis, the PE ratios are around 35 times forward, which is still quite high relative to the 5-year average of 28. So that's why I mentioned, things are improving on a forward basis, but it seems to be, if you just compare the historical multiples inclusive of the Zynga acquisition, it seems to be priced for perfection. So you just expect volatility. And maybe if they increase their outlook and denote some improvement in operating expenses, in other words, getting them down, we could see maybe a continuation on the year-to-date trend.
All right, great backdrop here on Take-Two, George, into those earnings. Appreciate it. That's George Tillis, Senior Markets Correspondent, breaking that down for us. Kev, I wanted to look at a different strategy. Nick looked at a put vertical in Cisco. You looked at something neutral. I wanted to look at a different strategy here that takes advantage of a directional bias, right?
I want to go up more.
Bullish, you would do it on the call side. If you're more bearish,
it's going to make a new high.
Side. So I looked at a put condor in Take-Two into these earnings results, where I'm going to buy something at the money and then offset some of the costs by selling something against a vertical. So the makeup of this trade is out in the May 26th weekly cycle. So giving myself an extra week and not a pure earnings play here. Buying the 125 strike put, selling one of the 120 strike put, selling one of the 115 strike put, and then wrapping it all up by buying one of the 120 or the 113 strike.
Investing classes.
Put condor to the
like
downside,
insider knowledge.
$5 wide put
New
vertical,
high today on SPY.
$2 wide put vertical.
Up 1%.
Roughly about $1.75 debit on that right now, Kevin. It continues to go down. The stock has continued to move higher. But if you pay $1.75 debit on this one, that's your risk. Your break even, 123.25 to the downside. So you don't need that big, massive move to the downside. And you've got a nice plateau. Even if
RSI is pretty sensitive on SPY right now because it's just been trading in this range.
Yeah, the iron condor is the byproduct of the condor, right? And so this is just a condor. It looks like an iron condor,
from there.
except it's all puts. Yeah. It's a long put.
1453 is where we wicked.
So make sure our viewers understand what that is. It's got 14 short deltas. It's flat on theta, but that will move positive if it moves up into that range. But yeah, you're looking for a landing between 120 and 115, Tom. And if you get that landing, that's that.
I was going to say,
right up
there was once a man
that you're seeing there.
Right.
And like I said, if it does,
you've been around a bit, huh, Batman?
Break way below.
You changed your name.
You did a $5 and a $2. You're
414.61.
Yeah, still your profitability below 113, still over
easy.
$100.
It's going for that gap fill, I think.
Right, exactly. As I mentioned, the $1.75 debit that you pay, that's going to be your risk on this particular trade. Now, if the stock moves higher, this is where you're going to incur those losses, and anything above that break even of 123.25 at that one. But a good look at a different type of strategy that takes advantage of that. Kevin, your thoughts here real quick on the markets. We're at session highs. The S&P 500 up about 1%.
Around the block.
I think this is a good relief day in the market.
Yeah.
Remember, more Fed speakers on Thursday, and then Jerome Powell and Ben Bernanke on the stage on Friday.
Barbecue bounced on that 1790 level.
Because when he's talking, remember,
you can hold up in a full flag range.
One way or another, and What is him and Ben Bernanke going to talk
They're just
about?
gonna make another flag though.
Maybe missteps on policy. They got that in common. All right, Kev, that's going to do it for you and I today on Fast Market. But stick around right here on the TD Ameritrade Network. Next Gen Investing's coming up.
Looking nice. Uptrend. Guys, for your likes, we got 30 of them on the day, coming up to 1 o'clock. Subscribe hour if you haven't subscribed. Do it. The red button, gray. That easy. Tesla proposes setting up a EV manufacturing plant in India. New York City rental inflation hits fastest since 2005. More than 90% of colleges don't accurately estimate how much a student will have to pay to attend. Wow, that's a lot. Vast majority. Britain's departure from the European Union has not been a failure. Prime Minister Rishi Sunak's spokesperson has said. White House expects daily staff negotiations on debt to continue. Criminal investigation. The law enforcement branch of the IRS is looking for agents across the U.S. who can combine accounting skills with law enforcement skills to investigate financial crimes. Jeez. Average 30-year mortgage rate rises to 9 basis points, or rises 9 basis points to 6.57%. Oh, EVgo announced a stock offering. Free market. That's too bad. Need the money. Not making it themselves. Take it from somewhere. Need dance around VWAP. Barbecue in this higher range. Buy kind of hanging out here. Not squeezing anymore. Double doji candle there. Way overbought. 5 minute. Large zero-date S&P 500 call order filled, starting at 12:30, squeezing the market higher. I think there's a gamma push right here. The free and fair market. We're just all about the derivatives, man. The whole market just trades on derivatives. Might be right. I mean, it's literally right at 12:30 we started squeezing on that bull flag breakout. Hard to break out. Large order. Yeah, now we're gamma squeezing. What to do with that information? Okay. Already ripped so much. Buy calls. They're gonna fill that gap. They're going for a gap fill push. Whoosh.
Snap in need of that bullish momentum here, Alex, as that name has been beaten down pretty substantially over the last 12 months.
Yeah, and I was looking at that. It's actually an analyst that I wasn't familiar with, so I'm looking forward to that conversation with George later on in the show. Of course, a lot of retail earnings to recap and preview from TJX to, of course, Walmart on our list as well. So tons to get through here, but let's start with upvote, downvote, not endorsements, not recommendations. Not quite retail yet, but Cisco, this is going to be a pretty big one as well. Legacy tech player, sort of trying to find its way over the last couple of years.
It is, and I would say sort of trying to find its way, but not really doing a whole lot, as right now shares are down about 6% over the last 12 months and relatively unchanged on the year. They do have their third quarter earnings expected today after the closing bell, and it does seem like the focus is not as much going to be on its revenue or its profits, but instead on its orders. The street is seeing that that is the best indicator of underlying demand as well as growth for this networking systems provider. In a note that was actually previewing this upcoming quarter, Evercore ISI did point out that Cisco shares are down about 4% since it reported in January its quarterly results, which was likely driven by investors focusing more on order trends than even revenue growth. They said in that January quarter, Cisco reported orders that were down about 22% from the same period a year ago after seeing 30% plus growth for several consecutive quarters. The analyst said that a bogey for Cisco could be the 30% order decline that Juniper Networks actually just most recently reported. Instead of, again, focusing on revenue, they're focused all things on orders, and it seems like some of its peers have seen some relative strength in that space. I thought that was an interesting take on this earnings event, Alex, as a lot of times we see this beat on top and bottom line, and it's difficult to understand what then drove shares lower or drove shares higher on a miss per se. So I like this take ahead of this earnings event, which we'll get today after the closing bell.
Yeah, it seems like one of the key stories in this one, Jenny, is going to be the low cloud exposure for Cisco and the fact that these networking solutions that they provide
It's by 4/14/79.
Reworking all of that stuff for
What
business.
the?
They have a pretty healthy backlog of orders. So
Doing
that's
it.
kind of seen as potentially going to be holding up some of the sales numbers, potentially even leading to a decent outlook. So excited for this one, but there, of course, is caution just in general. IT spending potentially going to be pulled back this year if, in fact, we do see continued deterioration of the economy. So possibly macro.
I told you.
On this one as well. Going to say downvote, though. Just hasn't been
An hourly candle.
interesting of a stock to be
Outrageous.
with you, Jenny.
It has, and I would say our next one
Yeah,
is
it's
even
filming
more
gap.
interesting than Cisco. We're sort of going into a list, I'd say.
See what happens at
perhaps
4/15/27
least
or
interesting as we move
so.
down these names, but Take-Two is up about 1% today. They also have fourth quarter earnings expected today after the closing bell. We are seeing now the street is anticipating earnings of around 68 cents per share, which would be down pretty substantially from the $1.09 per share they reported a year
Can't
ago
leave that
on
gap
revenue
unfilled.
of around $1.34 billion. Now, we did see a lot of analyst coverage on this name just even in the last month and a half. Credit Suisse has a neutral rating, a $127 price target. We do see MKM with a $153 price target. One of the most recent boosts as of May 8th, which does see about 23% upside to the company's stock. They also have a buy rating. True Securities recently raised its price target to 140 from 131 with a buy rating. And we see Stifel also with a buy rating and a $150 price target. So the analyst community
this is on my notes,
really
I think.
optimistic on this name, Alex. And I want to point out that this is a name that's already rallied about 20% on the year. Only up about 1.7% over the last 12 months.
SPY's like close to gapping here.
So in the video game space,
look at this.
We've talked about a lot of
That's
these
crazy.
that are trading nowhere
nowhere near the multiples they once were. Take-Two faring this year kind of okay, and I would say that's something to consider here, especially with the volatility in Activision versus Microsoft. EA
I don't even know how to put that in notes. Like, don't front run my own trade.
We'll have to watch and see if this move can hold, of course, through this earnings move today.
Yeah, we'll see what happens with this one. 7 in 10 of the analysts that cover it do say buy. There's no sell ratings that I saw, so it shows kind of how the street feels about this name. But yeah, we'll see what happens. Not the most liquid of stocks, so going to say downvote for that reason, but couldn't fault anybody who maybe is interested in the video game space for considering a trade or looking at this one or watching it after the market, especially now with Activision.
Out of control.
In that flux of becoming either part of Microsoft or not, and then of course EA really just kind of nosediving post earnings. So we'll see if Take-Two can provide some clarity or even some optimism for this space. But in the spirit of what's been a very retail-heavy earnings week, it's only right that I think that we upvote the next two, Jenny, which of course are both pretty big retailers.
They are pretty big retailers, and I would say definitely the largest names of this group. Our next name we'll be looking at today is Walmart. Now, Walmart reports its first quarter earnings tomorrow before the market opens. As you can see, their market is the only name in the red today, but down modestly, only about 0.1%. And we are seeing now earnings for Walmart have accelerated the last 3 quarters, improving from a 23% decline last year to over a 12% jump in their fourth quarter. So while there was some sort of, I'd say, fear around Walmart, similar to what we saw with fear around Target, after really disappointing earnings reports a year ago, really from this same quarter,
193K sale on
their earnings and revenue growth moderate here a little bit. Sales growth has hung around in the low single-digit range from that same period. Analysts are expecting earnings to edge up about 1.5% to around $132 per share on a 5% increase to revenue of around $149 billion, which is, to me, always so incredible that this company earns $149 billion just in 1 quarter, Alex. But same-store sales are climbing about 5.5%. That's up from 3% last year, down from about 8% in their fourth quarter.
Underlying does not
generate about 60% now of their total revenue from their grocery offerings. That's per their fourth quarter
Options
filing.
move the underlying.
So grocery sales matter.
Gap's about filled there. See if that's where they want to let it go.
On some of these food
and try and ride this thing all the way up. Valhalla.
Costs that us as consumers are paying at the grocery store. I always like to get clarity on that from a name like Walmart.
Just picked a random Wednesday.
This is, of course, the classic situation of relatively low margin business, but tremendous scale. So
probably easier in these low volume days.
Even in a down quarter, there's still going to be massive numbers, but
no more push on the market. It's less effort, less capital.
To balloon a little bit year over year. A lot of that due to the pricing pressures that this company's had to manage, but also consumers have had to manage. And that seems to be potentially one of the positive stories with Walmart, Jenny, is that because we're being a little bit more price conscious, because we're a little bit more worried about inflation, we do actually see higher earners even trading down to what's perceived as maybe more of a value store in a place like Walmart.
Much for range bound today. Oh my gosh.
Are expected to increase.
Thought we were going to be chopping around again.
We'll see if they can deliver on that. And we did see sort of that, I would say, that story with the Target TJX that we were talking about yesterday. But we'll see if Walmart can really hammer that point home.
And now our last name does fall in the retail, I'd say tech space more so, but definitely consumer facing. That is Alibaba, which is, of course, the largest company in China that then trades on U.S. platforms. But Alibaba shares are up 2% today. We are expecting them to report a net income of around $1.9 billion or 8 cents per share for the first 3 months of this year, which would mark a pretty dramatic improvement from the year-ago quarter's loss. Revenue is forecasted at around $30 billion or a 2.5% increase from a year ago, which would signal another pretty sluggish growth quarter for the company that before 2021 was really only seeing double-digit sales growth. So while we've seen sales moderate, I think also you have to consider the fact that we're not still fully operational yet in China, which of course then weighs on a name pretty significantly like Alibaba. Cloud computing revenue, though, is only expected to grow about 1%, and investors have noted fears as of late
about credit spreads
of China's recovery after the
we'll get a dip.
Pandemic restrictions back in
I don't think it's going to cut to VWAP though.
We've still seen some of the economic reads out of China be weaker than expected. Like, for example, consumer price inflation rose in April at its slowest rate in nearly 2 years, which really suggests that we're yet to see that economy bounce back even yet at all. So I think that's also something to consider. We read headlines about the return of China, the return of these Chinese companies, but we're not yet seeing that reflected in the numbers. So we shouldn't also expect then Alibaba's quarterly report to reflect any sort of comeback. I don't think yet. I think that's jumping the gun. But shares are up 3% year to date. Now Alex down about 1.5% over the last 12 months and still down 28% from their 52-week high. I think, again, signaling a company that is still dealing with a good degree of headwinds here.
This stock got crushed over the last couple of years. It's trying to make a comeback. Splitting off down the road into the 6 different business units, I think, is going to be interesting. You'll be a little bit more targeted with your investment into Alibaba, which is much like the Chinese counterpart to
Barbecue
Amazon.
1820.
Has cloud exposure, has some tech exposure, has some R&D investment, but then, of course, is a big e-commerce platform as well. I'm excited for this one. Going to say upvote, Jenny. But yeah, it is sort of going to be a little bit of a China macro read-through as well, as we've heard about this reopening, but it's failed to live up to even the lowest of expectations in terms of being some
even see that strength hold on the session, but we will leave it. Coming up next, we'll be diving more into our charts as well as some example trades in both of our upvotes today, those being Walmart as well as Alibaba.
Okay, SPY's coming down a little bit. Got a long way to go for VWAP, but I don't know what level it's gonna hold. Probably like 413, 43, somewhere in there. I would imagine. Yeah, barbecue does look fine. Looks mighty fine. There you go, barbecue. Barbecue breaking out. 1846 up 745. Oh, let's go, let's go. Very nice. Did I buy enough? Never. Did that ever fill? Yeah, I got filled. So I got back in actually to the same amount I had before. No, no big deal. $195 down the drain. My commission? It was a little bit more than that because I sold here and bought back here, so like 2 or 3%, maybe 2% spread. Yeah, if it was the same price, no big deal. It was the price a little different, but that's the cost. I thought we might be rejecting here. Did look like a nice flag, so I only took out some of my position. And yep, broke it. Wait, then I added. Either you might be delayed, or this might be lagging. Let's see. We're gonna get different numbers on OTC. Yeah, I'm showing 1845 on E-Trade. So, some of your brokerages are delayed by 15 minutes. If it's not delayed by 15 minutes, then we're probably just seeing
but the way that
lag.
this is structured, because it's buying a $7.50 wide spread and only selling a $2.50 wide spread, as you'll see.
Now I'm seeing 1819 on E-Trade, and this hasn't started lagging.
Any upside risk, you just would give back some of that max profit potential. For a 350 debit, the break even would be 148.50. $350 in total risk. This one could expand to as much as a $400 profit. Then, of course, if you do go all the way through and all these options were in the money, you would take out $250 from that, and you basically level off for $150 profit, not accounting for transaction fees. That'd be above $155, of course. But this is one that would look for a
muted consolidating up here, actually.
Retest those year-to-date highs.
I'm gonna keep going.
Okay with sort of an unchanged
415.24
post earnings.
And I think that's also
I got really close to filling that gap.
We've seen all year long for Walmart, but now to shift gears here and look at Alibaba, which is also up about 3% for the year, but down over the last 12 months. Rick, I think this is a really important name where you have to zoom out to get the full narrative of everything that's happened in China with a lot of these mega cap companies, obviously like Baidu, Alibaba. But in terms of what we're watching into this earnings event, tell us what you're thinking, because this name does move. We do know that the Chinese companies, they're volatile and they tend to make pretty large swings.
Indeed, this has been quite a wild ride for anyone trying to hold on to this stock for a while here. We've seen some roller coaster price action, starting with these lows near the 58 level. going all the way back up and basically doubling, then crashing again, going up, crashing again. So it looks like we've carved out a bit of a base here around the $81 level. That's this green dashed line where we bottomed out a few times around that point here. So that was also the site of where we had this little gap that could be another area to keep watching in the future here. But the recent price action hasn't been too bad for the bulls. We've crossed above our two shorter term moving averages that we follow, our yellow 21-day and orange 63-day. We're on pace to close above the 63-day today, so we just got to hang on into the close above that 90.34 level or so. We're also crossing above our volume profile point of control. That's the area of heaviest trading here, this thick red line on our blue bar graph on the side of the screen. So that's a important area. This is oftentimes viewed as a source of resistance or support. In this case, resistance here. So RSI, one thing I wanted to point out is we did see a little bit of bullish divergence as price was making its most recent round of lows there. RSI was trending upward as price was trending down. So whenever we see a mismatch like that, it's a sign that there could be some momentum building up in the stock, you know, getting ready to make a move upward. Is it a guarantee? No, but I thought it was a good example to point out for this particular stock. So we're also crossing above the midline on the RSI there. You can see that it's crossing above that
excuse me,
right there where
excuse me,
and now
yeah, doesn't look good at all.
Crossing above a technical threshold at the same time the RSI is making a move upwards. So that's as I said with our last chart, something worth noting. In terms of support and resistance, the 94
maybe got a little divergence building here, but doesn't mean a whole lot.
That was a point
with that huge wick.
Price topped out a couple times. That was also the start of this gap up here. Seemed like a level that would
got a little more gap down here.
At least. So
look for defined support like 84.
Beyond that, we've got our 252-day exponential moving average in purple.
Start watching
right
around
there,
these levels.
Here around the 99 mark. To the downside, once again, that $81 level, the green dashed line where we bottomed out a few times. If we fall back below our yellow 21-day EMA, 81 would be the point to watch.
All right, so 81 to the
barbecue
downside,
got exciting today.
94 to the upside here. We're trading just below $91 a share, Rick. So we will be watching this name very closely. As we both agreed, this name tends to make some pretty volatile swings, and volatility has been sort of something we've become accustomed to in Alibaba over the last year, but we will leave it there. Appreciate all of the insight, Rick Ducat, our chart master. So now I'm looking at trading this name, Alex, I think, considering the fact that we know this could make a move, of course, in either direction. Walk us through a more neutral leading strategy, just to, I'd say, lean into some of its more recent price activity. Another name that's been sort of stuck, like Walmart.
Yeah, and so while it may seem somewhat counterintuitive given that chart and just how much of a roller coaster ride this one has been, it's somewhat of a contrarian response. Obviously, implied volatility is higher in a name that moves around more, and so that's going to be factored into the pricing of the options. I looked at a neutral, more range-bound strategy, but also, Jenny, I would note that while it's moved around a lot, it's kind of came back to the same place over time. It's been around 90 for much of this year, or at least every time that it's ventured away from 90, it has found its way back. Not a lot of time, though. If it does venture away, it would have to come back very, very quickly. This is a short-term trade just going out to the end of this week. Selling an iron condor, the 85-95 short strikes, buying $5 wings, the 80 and the 100. Break even to 83.75, 96 and a quarter, $1.25 credit, which means $375 in risk on this one, not accounting for transaction fees. But the risk profile does a good job of explaining how this one works. Stay between the short strikes. That's the apex of the profitability. Got a $10 wide window for that to work. Break evens, you just simply add and subtract those credits from the the short strikes, both on the put and call side. And then, of course, risk is defined at the long strike, so above 100, below 80. In the event that you get a somewhat large response post-earnings outside of kind of market maker moves, multi-standard deviation type of a move, it would be defined risk in that case, also a little bit more capital efficient than its undefined risk counterparts. But Jenny, looking for limited response here. Seems like there's a lot of negativity surrounding it. Maybe it delivers something that is slightly better. Maybe it's in line with expectations. Whatever story it has to be,
on barbecue.
ultimately looking for limited to no reaction.
Yeah, and I think that that's something that we need to utilize here.
E-Trade showing
considering the fact that
1840.
Still neutral is still picking a directional conviction. I always think that's important to keep in mind, but also important to keep in mind for both of our example trades today. They do contain multiple legs that can lead to higher transaction fees. Short options can be assigned at any time, and carrying option positions into expiration can add risk, like unanticipated
Gap up there on barbecue. There's 1850.
Now coming up next, it's time for FOMO. We are looking at Wynn Resorts, with shares up now over 7% after a Barclays upgrade. We'll dive more into that news coming up next.
Oh, 1860. Yeah, this is good. Nice rally towards it. Late week. That's awesome. Definitely what you want to see. Might be up at 25 cents next week. 30 cents. Filling that gap. Good. He sold? I didn't hear about that. Open door up 6.5. $70. SPY is also moving up. Barbecue up 8.85. Did not buy in at 8 cents. Or was that 8 cents actually? Yeah, I guess that was. Okay, I forgot the gap was at 4. I thought it was like 8. Yeah, you just held, huh? That's good, man. I don't know if I've actually done any better trading it. Maybe slightly, but in the end, it's probably gonna end up just being a wash. It's more just it mitigates the risk if it comes down. So I have those gaps where I don't have any shares, where I'm just risk off. That's kind of the biggest advantage to just selling it and trading it more. Me hanging out around VWAP, still up 4.3. Buy, maybe setting up RSI divergence.
For this earnings announcement was actually very interesting. It sold off and then quickly recovered after the market started to digest some of the numbers as well as the commentary coming from leadership here. But when we were talking about Target, they did miss slightly on the top line. They brought in revenue at $25.32 billion versus the street's estimate of $25.34 billion. But the adjusted earnings per share beat the street's expectations, and it came in at $2.05 versus the estimate of $1.74. Comp same-store sales pretty much was flat. And when you look at digital comp sales, they actually declined about 3.4% year over year. What's actually very interesting is the category of sales. Their beauty segment, once again, knocked it out of the park. They actually saw mid-double-digit growth in that area of the business. Food and beverage also grew at a high single digits. But we are seeing their adjustment when it comes to inventory. Their inventory levels actually dropped about 16% year over year, and they actually 4%. Reduced their discretionary merchandise by 25%. So this has been an issue for Target for the last 2 quarters, and it looks like they have been able to address it. But once again, you hear some cautious optimism coming from their leadership team. They do acknowledge that the sales
they're stepping up on
February to March and even into April continue to decline as far as the consumer softness, but they do believe that they have the right product mix in order for them to be able to generate a significant
more value by
as
price.
well as maintaining their profit margins, and that allowed them to also reaffirm their guidance for the year, which I think is the cherry on top when it came to this earnings announcement. The market was actually expecting a little bit of a decline.
Well, the difference between 20 cents and 5 cents is huge.
Target is keeping it the same level that it is at this point in time. Maybe they've been able to stop the bleeding, to say the least here, Jenny.
Yeah, and Kevin, I think it's really interesting that really since its first quarter report last year, we have yet to see shares entirely recover. We have seen some strength. I mean, shares are still up on the years, on a year-to-date basis per se, but we yet to see any sort of sentiment completely improve after what was a brutal day of selling after its first quarter of 2022 update. So what do you think it'll take to get us back there? Because this was the name that fared the pandemic really well. It fared a lot of the economic turmoil
AI's up almost
really well, but
11%.
we've yet to see it fare now 2023 and the end of 2022 well. So what will it take for Target investors to be satisfied again? Really?
I think it's going to be the consumer buying discretionary items,
Setting
especially
up
the
our side
larger
divergence.
discretionary items like TVs
Doing
or
it.
buying, expensive grills, things of that nature. I think
Open
that's
door
what
1650.
provides Target the ability to grow at a rapid pace because of that growth margin for those products. When you start looking at consumer staple products, the margins are fairly low. You could have margins between 4 to 5%. So there's not a lot of room for error, especially if you have the wrong inventory. You may have to mark down that inventory, and that also squeezes margin. So I think that's where we might see some optimism moving forward. Now, if we do not see an economic slowdown and this soft landing does occur, you might see some of those higher tier consumers moving back over to Target instead of going to Walmart, and then that would also drive a lot of growth. They don't have that much exposure or as much exposure when it comes to the grocery side of the business as, say, Walmart. Walmart, it's about 40 to 45% of their total sales. For Target, it's only about 20% of their total sales. This is why Walmart has such a premium built into their stock, because it's been able to weather the storm as the consumer spending has shifted from discretionary to consumer staples and other goods here. So I think that's going to be the area of opportunity for Target here moving forward.
And I think that's a really great comparison for Walmart as we are ahead of their earnings now. And I think that that's typically been seen as the read why Walmart has fared the last year better, but what happens when things start to improve, which eventually we all hope that they will. So really great takeaways there. Kevin Green, Senior Markets Correspondent for the TD Ameritrade Network. Appreciate all of his thoughts. Now I'd like to bring back in Alex, and it's time for FOMO. We're looking at Wynn Resorts, which I have to say that from a technical perspective, this name looks really strong. It's up pretty significantly on the day. It's up 33.5% on the year. More notably than that, now up 120% from their 52-week low. So actually outperforming its closest peers, who I tend to group with like an MGM or Las Vegas Sands. So looking technically very strong.
It all depends on time perspective, right? Because it's also gone absolutely nowhere since 2011. The stock is the exact same price that it was basically to kick off 2011. And so a lot of that's due to the sell-off that we saw post-pandemic, but it's also just kind of an industry that has had its ups and downs. I saw that there was an analyst note that seems to be, Jenny, the reason this stock is having a very nice day today, up almost 7.5%, 8% here today. Really impressive move, but a long ways to go to really keep investors excited about this one. Because if you've been in this for the long haul, it's been
High on the day.
a lot of downs and a lot of going nowhere.
It has, and I want to
There's
point
a
out that
divergence there,
shares
though.
have really seen the majority of their year-to-date gains back in both January and February. So even though it looks objectively really strong, I actually think you can see there from a chart perspective, we have seen a recent dip. But Barclays feels optimistic on this name, no doubt about it. They upgraded shares of Wynn, and they also highlighted the fact that they are really seeing it continue to gather recovery here as Las Vegas operations remain
a little
strong
dump on
in the face
barbecue.
of tough macroeconomic conditions. They upgraded shares to overweight from equal weight, while also raising their price target to $135 a share from $120, which implies about 31% upside from Tuesday's closing price. Now, they did say that Macau's ramp to full EBITDA recovery continues to pull forward, which could come as early as the second half of 2023, which indicates plenty of potential upside to consensus in the coming quarters, while shares have mostly traded sideways for the last 3 months. Now, Wynn's Macau property portfolio did return to profitability in their first quarter, as the company did post adjusted EBITDA of around $156 million, which was up $5.5 million from the previous year, or around 40% of 2019 levels. So we are still seeing this as an area that stands to recover here. And the CEO did say that for them to reach their Macau EBITDA back to 2019 levels, they would have to see gross gaming now hit around an annual run rate around 26.5 billion, which we're not really close to there yet either. So while we are back to around the pandemic levels, Alex, we're not back to pre-pandemic levels. I think that signals some further upside for these names, considering they're operating still at a pace that is still well below 2019. So I guess it depends how you look at it. You could also make the more bearish case and say these companies have yet to still return to normal. Will we ever return to normal at this point? But this analyst definitely seeing that the fact that it's not just the Macau recovery, it's the Las Vegas recovery, and that makes them excited about all things Wynn.
Yeah, what stuck out to me about this analyst I think makes a lot of sense is sort of the luxury argument. This is perceived as a high-end property in Vegas, and as Vegas sort of ages in time, formerly or higher-end properties become less and less perceived that way. And if you think about kind of recessionary impact and how that would impact experience and the ability for a consumer to spend discretionary income on something like gambling or a trip to Las Vegas or whatever it may be, or even just, let's say, corporations' ability to send their employees or representatives to big conferences in Las Vegas, whatever it may be, Wynn is tied to the higher end of these consumers. It's a higher end property, higher end gaming limits typically associated with the property. And if we kind of use that old kind of thought process of, well, the super high earners, the super high income individuals are typically a little bit more resilient in times of uncertainty as opposed to their lower wage counterparts. And so this is potentially a company, and at least this was the thesis that I took away from this analyst, Jenny, was that there's sort of this pessimistic view on maybe all of these properties right now, but on a relative basis, maybe this type of company, given its target demographic, is a little bit less exposed to that than the market's giving it credit. That's what I took away from it.
And I think that's a really fair takeaway, and that's sort of the argument we always make with like American Express. It's the reason that they trade at a completely different premium than, say, MasterCard or Visa. And I know they are a different sort of operator, but they are less exposed to those credit risk or lower income consumers, which then I would say put them in a different position given an economic downturn. I think that's similar with the case. I completely agree, Alex, with a name like, of course, Wynn, where we're seeing this name remains more insulated from some downturns. And also, it's amazing to me that actually all of these companies have echoed the fact that they are seeing this recovery. They're seeing consumers still spending at a really rapid pace. So while it does feel like consumers are moving away from spending on goods, moving into services, what we know from all these companies recently reported quarters, consumers are still spending at casinos, which is amazing to me. Not where I'd be spending my discretionary dollars, but I guess I do understand it.
Yeah, and we'll see if that continues or not. But I looked at an example trade looking for upside. I know the analyst target was 135. That seems like a long ways away given the sort of sideways churn that we've seen in this stock and, of course, the near 8% move that we have here today. But I looked at something that gives it a little bit of time, give it a little bit of breathing room for some of this optimism to build up. Looking at the 120 call calendar, selling June, buying July, both monthly options. $175 debit is $175 in risk. But Jenny, this is an interesting point in terms of where it would be on the chart. If you look at the last 5 years in Wynn, we did spend some time, of course, above those levels. But for the most part, there's a ton of activity around this 120 level. It would take a new year-to-date high, a new one-year high to get to 120.
Yeah, we have a divergence there on the RSI.
Some price activity to work through.
This 5-minute candle
if it's ever going to get to 120 over the next, let's call it 2 months. But not entirely impossible, especially given the more robust sentiment that we're seeing out of this analyst, and of course the excitement today in the marketplace with this stock up 7.5%.
Yeah, and I definitely think that this name, when looking at this name, seeing the FOMO feeling is definitely
every
to
day.
the upside today. We're
I have to leave my house.
Seeing that strength in Wynn, and I think all things considered, just fueling the fact that we have seen a nice rally in this name. I know it's fallen off in the last several months, but at least in January and February of this year.
Yeah, no doubt, and it's certainly going to be, what I always like is when we get from these analysts, we get basically a thought. And so this is now out on the table. This is a thought. We're going to see in real time over the next few quarters, is this true? Is this the reality of the situation? Did this analyst get it right? Or was there more general weakness? Is there a more robust comeback in Macau? Does Vegas hold up there across the board? So there's just so many things that you get to just basically check in real time. You get to see the validity of some of these arguments, and I love that. I love to see, who's
Wood, senior markets correspondent for the network. So TJX, Caroline, the move is telling me absolutely nothing. So walk us through the results. It seems like not a lot to be excited about, but then not a lot to be negative about here.
Hey there, Jenny. Yes, I think it's safe to say that investors aren't impressed by TJX's
testing.
on both the top and bottom line, and I think it has to do with the fact that they offered some disappointing.
Still got that divergence, but now price action just
could be
not
kind of
changing.
any
Still looking bullish.
that beat might have had,
Oh.
but the full year outlook looked a little bit
New
better,
high there.
so that could be offsetting the disappointing.
Even those calls start selling
kind
off.
of making it net basically sluggish today.
This was like
As
plunge
you said,
protection
shares
team
off only
type
about
squeeze.
0.3%. But let's run through the numbers. The discount retailer reported an adjusted EPS of 76 cents per share. As you can see, that came in a nickel ahead of expectations. Revenue rose
Barbecue
over
up 6.29,
to
$18.26
billion. That actually missed expectations of $11.82 billion. But you know, it really depends on the estimate that you're looking at to see. It could be also considered kind of in line. U.S. comp store sales rose 3% from the year-ago period, driven by an increase in customer traffic. Inventory stood at $6.4 billion at the end of the quarter. That compares to $7 billion
If only I'd gone long.
TJX's CEO, Ernie
Crazy.
Herman, said while overall traffic has been healthy, tickets have been moderating. They don't actually break out average tickets.
Yeah, E-Trade showed me
but,
1835
just
also.
the fact that tickets have been moderating kind of shows that traffic is
Little
still
lag
coming
on the
to stores, but
OTC.
people are spending a little bit less. Although they did
Even the
note that
time and
home
sales is
goods
showing
traffic
183.
has been
I don't know why
picking
it's
up a
saying
little bit.
126.
So it could be a good sign in terms of the home good retailer. You know, obviously we've seen a pullback in spending on the home after such outsized growth during the pandemic. In terms of the outlook for Q2, TJX expects overall comp store sales to be about 2 to 3%. Expects EPS of 72 to 75 cents. That's below
this was
Wall
big
Street's
money that did it.
projections of 79 cents. So that comes in as a disappointment. That being said, TJX is more upbeat for the full year fiscal 2024, guiding for same-store sales growth of 2 to 3%. The expectation is around 2.9%. EPS is expected to range from $3.49 to $3.58 per share. Analyst expectation is around $3.53 per share. So that coming in a bit more upbeat. But taking a look at shares, TJX was lower on the year heading into this report.
It wants more
still
SPY.
down about 2%.
Didn't it fill the gap?
Only off about 0.3% today.
Yeah, gap is filled.
You know, Caroline, I think we got to look at it just in the totality, though.
Now you're just being
year
greedy.
to date, but this has been a really, really strong performer. All things considered, just off all-time highs. I see this as a report that maybe fell short of like excitement
even
and,
said might
and
fill a gap
wowing
here.
the street, but did enough to hold on to the gains. And in a
No
market
way, but
like
maybe
this, I
one
think
of
that's
those
a
days.
win in many cases, especially for a company that isn't necessarily seen as a robust growth company by any stretch, just doing a lot of things right, controlling cost pressures pretty well, and maybe a beneficiary of some of this trade down, more value conscious
High the day there on
consumer.
SPY.
Any final thoughts here before we say goodbye?
Alex, I think that's a really good
That's
point. Down
crazy.
2% year to date, but only off about 6% from those highs. So I think that's a good point. In terms of analyst activity, we did see JP Morgan cut its price target, but only by $1 to, I think, $95 a share, maintaining an overweight rating. Actually raised its price target, I'm sorry, to 96 from 95. Telsey reiterated its outperform rating and $95 price target. So haven't seen a whole lot of analyst action here. 70%
Yep,
of
SPY still
analysts
moving
at this
up.
point still have a buy rating on shares, despite
High
the
in the
fact that
day.
it is pretty close to those all-time highs. Median price target's $88. So that's about $10 upside, or about 12.5% upside from here. I think this is one of those retailers, though, given the fact that it is an off-price discount retailer, but it does typically
Up by maybe a third RSI divergence.
customer, although on the earnings call it said it didn't want to be pigeonholed into any particular demographic, income demographic, but it does typically attract a higher
They're coming
income
for it.
who typically would have more to spend on discretionary items. They also have that
Same bulls
treasure
that
hunt
pumped it
experience.
very
The
well could flip to
inventory
short
changes every
when they're
week,
done.
so they have more traffic coming into the stores to see what that ever-changing
See if
inventory
we get this
is. You can go on the
third
treasure hunt, which
divergence.
a lot of retailers who have more of an online presence say
Hey, trader.
don't have. So definitely a few things working for it, especially if we do continue to see the economy contract and possibly head into a recession. And they said on the earnings call they've been through inflationary periods, they've been through recessionary periods, and they're confident, but didn't express a ton of confidence that the consumer is going to continue to keep spending as much as they have been. And that ticket price, I think, definitely notable. But you're right, not a whole
Then one day it's
lot of
SPY puts.
action, you know, basically inching closer to that unchanged line, but able to hold on to those.
We'll see. Is this a pump and dump like earlier today, or is this a pump and slow consolidation and
It completely stresses me out. I'm an online
start of a
shopper.
breakout?
I don't like to go into these stores and like I have to dig through these large stacks and piles. Oh, it is not my thing, but I can respect the fact that shares are up
But
still
with
tonight,
that, I mean, you're gonna have a
39% over the last
you're gonna have a
12
pullback
months.
from
We'll
here
leave it there. Appreciate all of the
by
thoughts.
tomorrow.
Caroline Wood,
So
senior
you'll
markets
have a better
correspondent
exit
for
most
the
likely
network.
from
Now
right
coming
here.
up next, it's time to look at Snap surging on the session today, up about 8% after a bullish
Still going.
analyst call. We'll discuss more with
New high
George
there.
Tillis coming up next.
135. No, I don't think SPY and barbecue move in tandem. Trays, what you talking about? Barbecue? The down day. Oh, you're saying today's volume is higher on up day. Yeah, for sure. Yeah, the decreasing volume on the red days. Yeah, you can see when the volume comes in, it's when we rip. He's closer to the price of eggs than the SPY. Yeah, wow, we've already surpassed yesterday's volume by a long shot. Yesterday was very low volume. 3.5 million. Yesterday was 2.4. Those numbers I don't think are right, but the ratio is probably right. 1 billion volume price. Ah, Polte. DRS is GME shares. Congratulations. Now a super strong cultist. The tweet from Bolt.
So Arita is a firm I'm not familiar with, but they actually upgraded the stock today.
Yeah, I mean, you're gonna go both ways with that much volume. More liquid.
This is based upon the deployment of some new mobile ad
Big
technologies
price
that
action.
we know Snap is really in need of. Ideally speaking, you know, we talked about this company prior to the earnings release back on the 27th of April. And we talked about how it's really a situation where the stock could be volatile in either direction. Unfortunately for the bulls, it actually was a price point or a push to the downside, and it was based upon some pretty ominous numbers from the standpoint of sales and where the growth trajectory is for Snap. Now, we talked about Meta Platforms and some of the struggles they've had, but you have to consider Meta Platforms as a major competitor. They also have, of course, their Reels platform. The other thing is e-commerce. They're generating a lot of revenue per user. The challenge for companies like Facebook is that they were profitable the entire time that we saw the decline in the last year, and of course the resumption back to the upside. But the profit growth and revenue growth was the challenge. And now, when you look at Snapchat, the same situation applies, but a little bit different here. With Snapchat, we've seen profit growth and of course revenue growth decline, but at the same time they haven't been profitable at all. And I think that's one of the concerns you have to deal with if you're an investor in Snap, and that's why we've seen this huge divergence away from solid companies that cut operating
catching a
expenses
third
like
RSI
Meta
divergence
Platforms,
here.
using as a relative example, versus Snap. Now, considering Snap, we know it's very popular. There's no doubt. If you look at the daily active users, they actually demonstrated a 15% growth. 383 million was the print last quarter, year over year. 15%, like I mentioned, compared to 375 for the
Guys, for your likes, we're
37
37.
for the previous quarter.
Well
The
done.
global active users is pretty
Run up on
impressive.
2 o'clock. 2 o'clock hour. Subscribe hour.
Million, but this is on a
Make sure you've turned
monthly
that
basis, not
red
daily basis.
button gray.
But at the same time,
By this
you look
point in
at the
our
revenue,
relationship,
which
it's the
actually
least you
missed the
can do.
estimates. They generated around 989 million last quarter, and that was down 7% year over year. But if you look very closely at the composition of the revenue, North American revenue was down 16%. And global revenue was down 2.5%. So total revenue in those two regions of the world were down, but the disproportionate decline in sales came from North America. So I think, TikTok, which is owned by ByteDance, I think Meta Platforms, I think YouTube has presented lots of challenges for Snapchat, not to mention the fact that Snapchat effectively is a platform that really hasn't proven itself. And so advertisers are skittish. Even now, as advertising spending has started to improve, we can see that because Google is higher, Meta Platforms is higher, and Apple is really talking about how advertising is becoming a bigger portion, not the biggest, but of course a bigger portion of the revenue breakdown. Snapchat is demonstrating now average revenue per user, which is down relative to the same quarter last year. And lastly, I'll say this, I'm just trying to, lay out some of the foundations of why the stock price has been down and holding down. If you look at last quarter, they generated 989 million in sales, but they lost about 329 million. That's net income. So that's about 30% of their sales. So I can see why the stock was down. I can see perhaps why some analysts may be bullish on the recovery for Snap. But there's still going to be some challenges on a forward basis for Snapchat, despite the fact that they've done such a tremendous job to cut operating expenses tremendously over the last year.
The ego on you.
Well said, George. Not a whole lot to add. Just to recap, though, read analyst Rocco Strauss did upgrade to buy from neutral. That was the analyst.
Dennis the Menace.
Price target is 12. But George,
Did
my
you just
question
become a
to you is
member?
a little bit more on the macro AI
Thanks, man.
point. Snap has stepped in here. Just a real quick.
You're
though.
just showing off your
Partnered with
membership.
ChatGPT. You talked about the popularity
confused.
of Snap with users. Is this a way that we get widespread adoption of this technology? You have something a bunch of kids are on, and then you deploy this technology.
Yeah.
Thanks, Dennis. Appreciate it,
I
man.
think so. Look, there's
You have.
API
Good job. Well done.
interfaces that
Thank
a lot
you.
of companies are using that are front-facing for Snapchat, but in the back end they're using ChatGPT for whatever
Tired of being gray.
purposes.
Appreciate
Is that.
Increase
users? Yeah, it could. Cause
I'm so used to seeing gifted memberships. I don't even know what a real membership looks like.
Does it manifest into sales and average revenue per
Thanks, Dennis.
user? That's the key ingredient. So I will say this: the analyst call, the $12. Outside of this analyst call, could it hit that? It sure could, because if you look at the trading range in the last 9 months. The high end of the range is $12.75. So until it breaks above that, you have to consider it's still in a downtrend in a challenging environment. So maybe place an alert around $12.50 to give you an indication if it does.
Probably has been consolidating since last Monday, and it should show some movement.
Thank you, George, for all that great
we've seen
insight.
some movements, up 7% on Trader. We expect.
That also does it for
Doing
Alex
well.
and myself. For Next Gen Investing, coming up next, we have the watch list with Nicole Petalides.
Give Papa Ace a little break, man. He gets tired. That little engine that could's gone up a lot of hills. Good SPY, man. 1.3%. Up on 2 o'clock. 2 o'clock margin calls. That's 7% for baby. Okay. Big moves up, yeah. Maybe 20-cent test today. How about that? You like that? That get you hyped? 2015. Not sure why that's even a level. What? Oh, I see. GME fell below VWAP. It's coming down. Up 2.8 still. Beast. I mean, yeah, that's gonna be 15-20% day. That's not at all. What happened? GME drags SPY down with it. Yeah, come on, GME, pull it down. Got it. I can't explain GME meltdown. I honestly thought it was fake. I looked in there and like, thought it was fake. I'm like, just bots. Fake stuff. Made 3 RSI divergences. You're a 4th.
the trading day. You see all green arrows. Most of the sectors are higher. Only utilities and staples lower. Everything else higher today. Energy, financials, discretionary, industrials leading the way here. Right now, the S&P 500 up 1.3%.
Can't even see where we've come from. It's so far down the chart.
The Dow up 435 points, 33,448. That is up 1.3%. The NASDAQ, that has been the bright spot, up 1.3% at 13,603. The Russell gaining, wow, 2.2% for those small caps, 1774. This, as oil and gold are mixed. Gold is lower by about $8 today. For some of the biggest stories in the markets, we welcome in Renita Young, senior markets correspondent here on the TD Ameritrade Network. A lot of news on Tesla over the last 24 hours. The exciting shareholder meeting, a key interview. What is it that you're watching?
Well, Tesla shares are higher today, and it comes the morning after the investor meeting, as well as an exclusive interview on CNBC that Elon Musk gave. Now, he addressed several things, one of which was Twitter. He called it a short-term distraction. As we know, Twitter just got a new CEO who was the former ad chief at NBC Universal, Linda Yaccarino, and so now he can put his attention back on SpaceX and Tesla. And so he gave an update about the Cybertruck, saying that the company will have the first ones out this year and that it plans on delivering between 250,000 and 500,000 a year once production has officially started. He wants to make the Model Y the #1 selling car on Earth this year, he said. And he also said that full self-driving software is getting close to where it's safer than human driving. But we know that there are still several investigations going into
Full self-driving.
several incidents that involve the self-driving software. But he also says that Tesla wants to roll out insurance later this year.
That's kind of what he said.
And also that Tesla is considering
It's way safer. It's like 4 times safer than without it. But he's saying without any intervention or without any human, it's almost safer.
He says that he will consider advertising, walking back that long-standing rule that Tesla had to never do that. And he believes in the next 12 months, they could be challenging because of the macro environment. But one analyst at Bernstein feels like Tesla's challenges don't stem from that. He feels like Tesla's challenges
I love that Meet Kevin got him just decide to start advertising, and that's awesome.
Lineup, and that 2024 could be even more challenging for Tesla, Nicole.
Yeah, well, and yesterday he had somebody on the other side of the coin who put a $250 target. I thought the interview was fascinating, pertaining to
there you go, Spy, let it out.
And when he was asked about this, because of course he's teased us with this so many times over the years, and he said, well, I'm a pathological optimist, is what he said, maybe. And I thought that was cute, the way he said that. But, you know, when pressed as to why maybe it's closer than now, you know, than before, he said, because I've sat in the car, because I've driven these cars, I've been in these cars, FSD, in Austin, Texas, in San Francisco, where there are a ton of one-way streets, and he said, and it's doing it for days without human intervention. So that's why he went on to say that. So I thought it was an exciting conversation. He also makes sure to throw in that Waymo can't do that, and that if there's a parade or construction, the car gets confused. So he was really touting the AI of Tesla. So I enjoyed that. I'm glad you covered this. Yes. How about let's turn our attention over to the banks. We're watching Western Alliance and the bank rebound.
Yeah, Pac West ripping. There goes Spy. Cut it out.
Today,
set it off by that engulfing candle.
Other banks as well, other regionals, and it's all because of Western Alliance reporting that its deposits for the current quarter have climbed above $2 billion. This is significant, especially as regional banks have been under pressure since the fall of the first few. And the bank also said that as of May 12th, 79% of deposits were insured. That's up from 68% of deposits at the end of March. As a result, Jefferies reiterated a buy rating on the shares, saying that the bank's update reaffirms deposit stability, which is something that this bank has been looking to do, obviously, since the fall of the others. And the analyst over at Bernstein also said that it's another data point demonstrating that Western Alliance is distancing itself from the banking turmoil that happened. And this all should be well received by the market. As you see, it
IDX
has been well received by the market today, Nicole.
All right. Thank you for all of that, Renita Young. Great to see you.
You too.
Appreciate it.
Yeah.
Now let's take a look at the bigger picture. Alexander Reed is on the
Get it
telephone
below
with us, Chief
414.50.
Investment
Let's just
Officer in Visage
been
Wealth.
nice.
Thank you for being
Last
here.
2 hours
So
of
tell
flush.
us, what are you thinking as you're
IDX
looking
looks nice
about
on
what
intraday.
is going on here? I know you're watching
Oh yeah,
interest rates
yeah. IDX looks
very
good.
closely.
Someone else
We're
in chat
getting
is
some,
in IDX.
you know, some teasers and good news pertaining
It's
to
looking
the
a
debt
little
ceiling.
sketchy there.
What's on your
Gonna
mind?
blow the moving average.
Sure.
But
Thanks,
yeah,
Nicole,
it's
for
holding up
having
nice
me.
still.
I
A
think
nice
it's
bounce
really
there.
been 14-month
They were
grind.
looking at buying it here, and it
14
kind of
months
wicked. I was
since
like,
the
I don't
Fed
know. Needs to hold. It did. So
passing of interest rates.
looking good.
And we continue to wade through this
look
economic
to see if it
pursuit. You know,
catches
we see a lot
resistance
of
at the top of this range, or
call-outs that point to a
going.
bearish, higher probability of recession. More so on the manufacturing side of things. You know, you look at the ISM, it's been below 50 now for 6 months. Industrial production is now flat on a year-over-year basis. And we see the senior loan officer survey results come out and saying tightening lending standards and reduced demand for commercial and industrial loans all point to, you know, continuing slowing growth on the industrial side of things. But on the service side of things, you know, it's been quite resilient, making up 70% of the economy. Consumers, household debt service remains strong. Retail sales we got out this week is at the lowest rate of change since COVID, but still at a 1.6% year-over-year growth rate. So there's a lot of different variables to look at. Some are positives and bearish.
We're talking about like the actual IDX cars. I don't know. I don't know anything about
the labor market as really the linchpin there. As long as the labor market stays healthy and strong,
Look, the VWAP would be
tough to
fantastic.
go into kind of a deep recession that a lot of people are fearful of. So we'll continue to watch the labor
There was
market.
a nice huge wick up there too.
I mean, as you talk about industrials, it just really points out what we've been seeing. And for example, we got the Empire State Manufacturing right here in New York, and basically showing contraction, but even worse so than expected. And when you look at the Dow Jones Industrial Average and compare it to the tech-heavy NASDAQ with all those names that people love to watch, in fact, it has the widest range in margin since 1991, just showing you how the NASDAQ is taking off and the industrials were sort of left behind. You had Elon Musk talk about a macro environment, not only for Tesla, but also for the other automakers over the next 12 months being difficult. You know, where do you see this all playing out for industrials?
Yeah, exactly right. It's the classic playbook of a business cycle. As growth and inflation slow, you get closer to that zero bound of growth, and cyclical sectors tend to underperform. When you look at sector performance over the last 3 months, it's really been focused on that slow growth, slow inflationary period, looking at communication services, technology, staples, and at the bottom has been financials, energy, and real estate. And then you throw in materials too. So that's all reminiscent of kind of a recessionary playbook. And so that's why there's a lot of different moving pieces for us. We would still be underweight industrials, financials, high yield fixed income, everything that has, you know, sensitivity to cyclical parts of the economy, because we think the growth and the rate of change of growth continues to just drag lower as we get through the summer months here.
So those are the underweights. What's the overweight? Did I miss it?
No, our overweights continue to be investment grade fixed income. We think the risk reward there from a total return perspective is very healthy. Healthcare, consumer staples, and high quality growth. So staying away from the high beta names within the growth perspective, but focusing more on high free cash flow, high profit margins within the growth spectrum. We think those are the places to be over the next 3 months.
And as we're watching what's going on with the labor market, I'm curious to hear your thoughts on it. But I mean, we have an extremely tight labor market still. I know things have been going in the direction that the Fed wants them to, right? We've seen more claims, fewer job openings, things like that. But still, unemployment level is relatively low. Where do you see that headed and how it affects the economy?
Yeah, for us, you know, labor is always a lagging indicator. So by the time, you know, it gets over 300,000 claims, it's probably already into a recession at that point.
The difference with this part of the cycle is, we're coming off extremely tight labor market, record low unemployment, and claims have been moving higher. We've started to see that at the beginning of the year. If you look at initial claims, continuing claims, the trend is moving up, albeit from, like I said, a record low level, but we also see job openings coming down below 10 million for the first time as well. So the Fed, has estimated that their target is to get the unemployment rate to about 4%. Unfortunately, through history, the unemployment rate has never just moved up to 4% and stopped. Right from a business cycle perspective, once unemployment starts to kind of snowball, the profit margins start to get cut. They have to
What
make
time those
more,
documents drop?
job cuts, and then that snowballs into the recession. So we're not quite there yet, and there's no absolutes in investing, right? But that is the key for us. That would right now is keeping the kind of a soft landing alive. But if that starts to deteriorate more over the coming months and through the summer, the recession probability for us would increase.
Right. As we look at valuations today versus 2000, it's completely different. I mean, during the tech boom, people were buying stocks that were 100, 200, 500 times earnings. I mean, it was a completely different ballgame. But now you look at valuation and you say, are things fairly valued? Would I step in here and buy certain things? I mean, what do you tell the clients when to buy, what to buy?
Sure. So for us, we kind of look at valuation as a risk-reward setup. Selling or buying off of valuation in the short term can be very problematic. And so for us, we look at extreme levels. And you're right, their evaluations from a broad sector perspective, they are not at 2000 levels. For us, what we're really keen in on is, earnings estimates. Right now, earnings estimates for the full year of 2023 are still positive, about 1% earnings growth.
Caught the
So
pre-market high
the
here.
risk from that
That
perspective
level.
is based off of recent price
Basically
action
where we're
that
at,
we've
isn't it?
seen year to date in the broad indices. Is if we do
Look
get a
at that,
recession
right
over
on
the next 8 to 12 months, in the back half of this year,
Crazy.
earnings estimates are too high. If you look back over previous earnings recessions, they typically fall around 15%. The street's modeling for about 1% earnings growth this year. So for us, that the absolute kind of falling out of valuations is not there relative to 2000. But if the recession does occur, there is that valuation risk to a lot of the names and growth names that we've seen, especially to AI-related companies so far year to date.
All right. Nice to speak with you. Alexander Reed, thank you, Chief Investment Officer in Visage Wealth. All right. Later this hour, we will welcome the CEO of BioXcel Therapeutics to talk about how AI is helping his company develop treatments for everything from depression to Alzheimer's. Also look at some risk assets that are performing as debt ceiling talks intensify. Check that out. And our midday panel ready to talk about the housing market, what to make of today's mixed messages, and what does it mean for buyers. Up next, though, the strengths of big
Little head and shoulders on the 5-minute. Head, shoulder, shoulder. Got our MACD's bearish. Right under the 9 moving average. I'd trade that to the downside. I'm already in it. Much too soon. Barbecue popping up a little bit more. It's been a very interesting Wednesday, Dennis the Menace. But yeah, definitely poppy. Small caps rallying.
Happens 5 months after the last.
That's that kind of inside information you can get.
If they stop on June 1st,
You can expect
now, we're looking at November,
now
December,
member
January,
Dennis the Menace.
when they
You
start
can
to
expect that
decrease
kind of
rates
inside
to
information
reaccelerate
like
the
the
economy.
day of the week.
And that's the market's really
So
pricing that
just,
in right
you know,
now. We're
just
in the
get
middle
used to
of
it.
a
That's kind of
screaming bull
how we roll around
rally
here.
in big
You say
tech.
it's Tuesday, I'll
It's
tell you it's
already had
Wednesday.
a year's worth of gains
Good deal.
in 4 or 5 months.
Yeah, well, at this point now, you know, we have to come up
See if I
with a
can add my
strategy
shorts up here.
because,
I don't think I can,
I mean,
but
let's assume they pause because that seems the most likely
Boy, it's nice.
scenario at
Go
this
all
point.
in
I
at
mean,
one point, be
anytime
able to
you raise
average.
rates, it's like the putting the brakes on the
Nice
economy,
short
right?
setup here.
To quote Elon Musk.
As far as how big of a range, not as nice as this long, probably.
Sector, which have been viewed somewhat as value and
maybe.
safety this year.
Barbecue
people did run to
1850,
them.
768.
Tell me about some of these big names that you like when you look
Percent,
at Google,
7.68%.
Meta, Amazon. Why are these the
That
names
ain't
that
bad.
you've liked and you continue to like? They've done very well. Kudos to you.
Well, they have more room to run, Nicole. You can't really say that they're going to have diminished demand for their products.
I know why, Dennis.
It's actually going to
We're
grow.
testing
The demand for that
the value of your
group
membership.
Bang and
And, you know,
Microsoft,
it
Nvidia, and
could be
Tesla
insulted,
really gonna grow.
but I'm not.
They have no competition.
I'm not insulted
and their
that
ability
you're
to
testing
make
me like
future
that.
profits is
Okay?
higher. So their
So,
PE is going to
it's fine.
expand.
I appreciate
now,
it.
right now,
You're
ex-FANG
thorough,
PE on the
and that's what we
S&P is
want for
around
members, or
15x.
thorough members.
Several global markets, including
Maybe I was
Europe and
testing
Asia,
you.
are at their all-time maximums right now, price-wise. And the S&P is actually the laggard. And so now the market's going to price in once earnings bottom out in the second quarter, and those announcements will come out next midsummer for 2023. The market's going to start pricing in the rest of the market to rally as earnings start to begin to reaccelerate in the
Look at that
third
volume
and
on
fourth
barbecue
quarter,
right there.
and in anticipation of the Fed
Might get a little
starting to
push.
decrease rates.
Whoosh.
Let's go through them one by one. Give me a quick thought on each. So Alphabet, Google. Why this one as a pick?
Well, they just had a nice bump because of their AI announcement. They're going to apply AI to every aspect of search engine and Google use, and it's going to improve the quality of our lives. I mean, imagine asking it, Google Maps, go ahead and give me a tour of my current map. Show me street by street, and all of a sudden it just pops up. But it'll be nice to make everything verbal. And so AI, of course, is the future. Google will definitely have a play in that. But as I said before, their demand for their products will continue to
1856
expand.
on barbecue, up 8%.
And then Meta?
Well, I've always loved Meta. I love Meta because they have incredible amounts of cash flow, probably more cash flow off their top line as a net compared to the rest of the big tech plays
Take a
here.
look on
And always
you
with
trade
a
here.
few minor moves on their
Kind of
balance
volume we're
sheet, they
getting.
can make their earnings better than anybody else every quarter. And I said that with you beginning in December, and look what's happened. And so I expect the demand for Meta to actually continue. These are staples in our lives.
there.
I did use a VR headset from Meta recently, and I got to say, I was pretty impressed. Now, I'm not making any predictions on VR, but I think Meta is one of those staples whose earnings will continue to increase and grow, even if the economy flatlines.
All right. Well, I mean, I will say here that
10 million.
Amazon and Google, and I want to hear your thoughts on Amazon. Amazon and Google are up about 37% this year. Meta is up over 100%.
Yeah, I guess that's what I'm seeing on
I am
E-Trade too,
curious
10.9 million.
What kind of upside potential you see? Are you talking 5%,
Both showing.
10%, 20% room to the upside? And what is it about Amazon
parts like
that
this.
you like as the trend, as it's been trending
3.9,
higher and the golden
yeah.
cross looks set to form?
The volume's pushing it.
It does. Amazon is probably oversold right now. I've got a price target of 140 on
1870
Amazon in the next 12
barbecue,
months.
testing the high of the day.
That's not going to change. Amazon is a staple of where we shop today.
Spies can hang out here as long as it wants, but this is a bear setup.
And of course, consumers are starting to
Got
pull
3
back a
RSI
little bit,
divergences.
so Amazon's top line
We now
numbers
have
are
a
down.
confirmed
That's why the
MACD
stock is
crossover
down.
bearish. We
Profits
got a
are
red
shrinking
on
at
the
this
moving
time,
average.
but when
We also have a
earnings
little
begin to
inverted,
reaccelerate,
or a little head and
this is one
shoulders.
you're going to want to own. So over the next 2
And
to
we're
3
at a
months,
resistance back
you're
there.
probably going to get some
But I
good
could
ability
not.
to buy the dips
I wasn't looking
in the
extended
mid
hours.
90s to
Oh,
lower
it's actually right.
90s. But anything over 105,
That's
don't
that high.
buy, and then
But
hold
it
it
actually
for
hitting
12 to
extended
18
hours.
months, and you'll see it'll pop to about 140.
So,
And
going
what were
for
your
swipe
price
bets.
targets on the other two? Do you have targets on those?
On Google
PDF.
and Meta?
Yeah.
My price target on Meta is
Not seeing a
$300.
new high.
My
I'm
price
seeing
target on Google
matching the high on
12 months
barbecue.
160.
1870.
All right. I thank you for all of that exciting stuff. Jeffrey Small, nice to see you. President,
I've been right
Harbor
so far,
Financial.
so
See if it
tell me
rejects
back
here.
on when we see those prices.
Look, you have absolutely been right so far.
You're gonna
Thank you.
blow out and rip up
Great
here,
job.
or
Appreciate it,
down.
Jeffrey. Thanks. Coming up next,
Back
we
down to
welcome the CEO
1790.
of BioXcel Therapeutics to our show, to the watch list, to talk about how using AI can help
20 cents
for
coming.
potential treatments of disorders such as depression, Alzheimer's, schizophrenia. Coming up.
38 likes. Well done, guys. Appreciate it. I'm up on 2:30. Beautiful Wednesday afternoon. I specified Wednesday just in case you were thinking it was Tuesday. There you go, new high of the day on barbecue. Nighthawk's getting feisty with his barbecue shares. And yeah, you basically have to hit the ask to get in. You don't have to, but it's hard to fill otherwise. Hoping it just dances around for a while to eventually fill you. Same with getting out. Alright, 1875. We're on. We're on. That's the high from back here. Was where we opened. I could have sold. But look, we didn't do a whole lot. Only that gap fill would have been a better pickup. I think this would have been too, but yeah, that's a lot of timing. So 1875, 1926. I love all these old historical dates for resistances and supports. Great. 1926. A bit of a resistance. A bit of support from this day, and the resistance from this day. There. It's starting to make its way down. Gas coming down. Not towards someone in particular. If you don't know that it was to you, then no. All the days melt. Melting of days. They used to not. Used to be BB rips on Tuesday.
At this time.
+2 on OPEX.
Thank you, Nicole. It's good
Have
to
a
be
Wednesday
here
push.
again.
Thursday.
It's an exciting
Saw
time
Friday.
for us for BioXcel Therapeutics.
Monthly cyclical. Your SLD sell-off. Your T+2 OPEX rally. Over and over. So many months.
I've also tested twice a day, and also with. So our goal is to prove
And shoulder's still
that
there.
501 can
On the
enhance
list
or
by.
accelerate the effect of the antidepressant, because as you know, there are about 300 million prescriptions every year for depression, and first 4 to 6 weeks are very critical for these patients, and we are trying to see if 501 can help these patients. So it's an exciting time.
Come on, man.
And this is our
I see
first
it.
time we have demonstrated 501 can be used outside
Oh.
treatment of agitation that we are developing in schizophrenia, bipolar, as well as in Alzheimer's.
I see some buy ratings from some of the analysts. I mean,
Yeah.
it seems that
Like
they
to hold
are
up above the
optimistic
1790.
along with you and raising some price targets.
With any kind of
How
sell-off
much
we
are you
get today or
using
tomorrow or the next
AI?
day.
I mean, how thankful are
Good
you
Friday.
to have
We'll see it hold that
proprietary
level.
AI, which helps
Or even this
to
1832.
identify
That's pretty nice too.
new ways of using drugs that exist, right, for candidates?
AI is very fundamental to our existence. We use the AI platform to identify our both drug candidates, BXCL 501, which now has become a drug, approved drug, IGALMI. It went from first in human all the way to approval in 3.5 years, and now we have launched the drug. As we speak, it's already helping thousands of patients. So we are very pleased that it's helping the schizophrenia and bipolar related agitated patients. And we continue to think of innovative ways of expanding
Barbecue
this
coming down a little bit
pipeline.
there.
So
You could
AI
find
helps us
support.
identify the fundamental mechanism that can be used to treat agitation. And now
1833.
we are expanding
Hopefully it's
into
just a wick down here
Alzheimer's
and keep
related
rallying.
agitation.
Otherwise, that's a
So just to give you a little
definite double top.
perspective, what we are covering. Current IGALMI covers about 16 million episodes in a medical supervised setting in hospital, but it can be expanded into the home setting, and we are doing that. And we have a upcoming data readout, what we call as a Serenity 3 data readout. And for Alzheimer's, it's the Tranquility 2. So overall market size can expand up to 139 million episodes. It will touch millions of lives, and that's very exciting for 501. And I'm only talking about agitation. And previously we discussed about the major depressive disorder, how this drug can help these patients. So it's a pretty amazing that a drug that was discovered using the AI platform is going to help so many neuropsychiatric conditions, which we just discussed.
Listen, I love it. You said up to 23 million bipolar or schizophrenia-related agitation episodes occur in the U.S. annually. What kind of trends are we seeing when, you talk about bipolar, schizophrenia, depression, and Alzheimer's? Are all of those rising because we're better at diagnosing all of those? Are they rising at a fast pace or slow pace? I mean, because often I'm reading a lot more about schizophrenia, for example, than I feel like I ever did.
You're right that there is obviously a high unmet need in these mental disorders, and the current therapies are helping these patients to an extent. But in agitation,
Comes the
when
spy
it comes
drop.
to agitation, which we focus, it's one of the symptoms for these mental disorders, for schizophrenia, bipolar, Alzheimer's disease. And there has not been any innovation over a decade until IGALMI was approved. And recently, some drug has been approved, Rexulti, for AD agitation. So space is opening up. People are understanding agitation is a huge problem. FDA has recognized it. And some of these drugs that are getting approved will start helping these millions of lives. So it's a better education, definitely. Beyond that, the development of the new therapies that are coming up to change the lives of these patients. That's why probably you are hearing more about these conditions, and mental disorders has been a huge problem. It has been forgotten in the past, but now it has come back in the forefront that we need some drugs to treat
That
these
gas
kind
is
of
coming
conditions.
down.
Yeah, and I know it's very expensive as you conduct research and development, very costly, but a lot of these trials working in your favor. Thank you so much, Dr. Vimal Mehta,
There you
CEO
go.
of
Broke the
BioXcel
support on the low
Therapeutics.
here.
Thank you.
Thank you for having
Still
High.
ahead is thanks. Second
The
half
next
of our
consolidation
show. All
point
right, we're going to check in
on the
on some of the
downside.
risky assets. See, as the debt ceiling debate continues,
Barbecue
which
squeeze.
ones should you be looking at? As we head to break, let's take
Sounds
a look
like
at
a
some winners and losers.
good
in the
flavor of
S&P
barbecue.
500.
A barbecue squeeze. Here it comes. bounce. Barbecue with the bounce too. Silvergate's up 24%.
Week up 1.75% for this week now. I'd like to bring in Ben Lichtenstein, Senior Futures Contributor, to take a look at these major averages, the levels you're watching, what's on your mind, 90 minutes left of trading.
Hey, Nicole. Yeah, definitely a strong day in terms of global or U.S. indices, I should say. All four of the majors enjoying gains. Green arrows across the board and up over 1%. This is a significant move, to say the least, led by the Russell small caps, and I'm going to get into why this move in that broader base index is a significant move. But let's begin first and foremost with, well, the S&Ps, the move that we saw in the futures up to 4180. You were just talking about the SPX up through 4150. I saw the NDX through 13,500. But you can see the trend environment we're seeing. The dark shaded area here is the day session trade from today, and you can see how we're consolidating up near the highs. This is the S&Ps. Taking a look at the Dow to 33,540 in the futures. Now, I wanted to point out something here, and stepping away from that intraday look in the bigger picture now, we're talking about daily candles. I've got the NASDAQ here. This really speaks to the strength we've seen in tech, right? As we've rallied up through, I mentioned, 13,005, 13,600. Look at the highs that we have here from last August. We're not far, 13,740. So within 100 points of that high from last August. Now, I mentioned here the Russell, and here you can see it's been a bit of an outlier. Look, compared to the NASDAQ, we just pointed out, taking out those February highs and near those August highs, look, the Russell just not participating. It's just today that we're starting to get up above the 50-day moving average. That's the blue line here, but you can see how far we are from the 200-day moving average. So keeping an eye on this as we head into the week. A lot of focus on retailers' earnings, Walmart, jobless claims tomorrow, some of the data due out in the rest of the week. But, you know, this interesting bid activity now starting to resolve here to the upside here as some of the small caps participate and some of the regional bank concerns diminish. Nicole?
Yeah, and I'm glad you showed what the Russell is doing, because the truth is that those who were excited for small caps to do well have been sort of left behind. And nice to see a winning week for those folks, at least for right now. You're also watching the U.S. dollar and gold. What stands out to you there?
Well, we've got the dollar on the move higher back to early April, late March levels, whether you're talking about the futures or the index. And it's been back to 103 now, trending higher off a recent attempt to test those lows again down below 101, which failed. So we're off to the races here. Rates are on the rise here, and I think there's some uncertainty as we head into these debt ceiling talks, and oftentimes the dollar is the recipient of that kind of safe haven type tendency amidst some of the concerns out there, and we're seeing some related to uncertainties tied to those discussions. I wanted to point out here as we look at the U.S. dollar, which is strengthened here, taking a look at what's going on with the, well, bigger picture here, because it's now, as I mentioned, just recently retesting those lows from the year, kind of inching its way back up to this 104 handle. Keep in mind, 104 is the middle of the range that we saw last year, 94 up to 114, but but I also wanted to point out you've got the euro, which is rolling over. That's why we're not only seeing the dollar strengthen due to rates on the rise. I mentioned some of the concerns about the debt ceiling discussions here, but also look at the Japanese yen, which has been weakening. If lower here today, it's
I have
4 in a row. Looks like
mark here
7
for
out of the
tomorrow
last
for some
8.
reason
I'm
on
sorry,
barbecue.
5 in a row.
There's some
8
kind
out
of
the last
deadline
9
tomorrow.
to
There
the
must be.
downside here, Nicole. And just to kind of bring into that discussion, here's that strong dollar again. Look at the dollar right now, side by side to the gold. Dollar on the left, gold on the right. So interestingly enough, crude oil actually higher today, up by almost 3%.
Barbecue 8.73% up. 1869.
Is a bit of a headwind for crude. Here you can see it definitely was a headwind for gold.
E-Trade
today,
showing
back down below
1869 as
2,000.
well. We have
Great
a
how you put
quorum.
those side by side. It really tells the story as
quorum.
the dollar has been on the rise and gold has sold off. Thank you for that, Ben Lichtenstein. Good to see you. Thanks.
It's Liechtenstein.
I want to
Got it
continue
wrong.
our conversation. We actually are going to be talking more about the U.S. dollar here, but looking at what's going on with the debt ceiling, the Fed, everything. Eric Thierry is with us, global macro strategist, multi-asset solutions team at Manulife Investment Management. Thank you for being with us.
Keep letting it out, man. Keep letting it
We're getting
out.
some push and pull pertaining to the debt ceiling. I think that the markets, move higher when they hear we're not going to default. And they've heard that basically from McCarthy. They've heard that from Biden. That's brought some solace. But the truth is that we don't really know what's going to happen here.
Absolutely. I think, the market is definitely looking at this as a risk event. It's a short-term risk event that typically, drives knee-jerk reactions that are kind of classic risk-off episodes. Rally in the safe havens like gold, yen, Swiss, U.S. dollar generally more broadly. But of course, today we're getting, I think some constructive developments that are allowing markets to breathe a bit of a sigh of relief. And so I think this relief expression in the markets is something you can definitely see in terms of the price of gold. But I think what the interesting kind of facet or the difference today is really the FX market, where you're seeing the U.S. dollar continue to strengthen. And I think the interesting piece there is that the markets not only breathe a sigh of relief on the debt ceiling, but it's also now allowed to focus back on fundamentals. And so where it would have been a sentiment-driven concern that would have driven the markets, now we can focus back on the fundamentals, the resilience of U.S. data, whether it's employment, growth, what have you, expectations ratcheting up, and really what that flows through in terms of the Fed and interest rates and interest rate differentials that'll, of course, move in a supportive manner for the U.S. dollar.
Right. I like that. I like the idea of focusing on fundamentals and looking at that. And I do believe that the market, sort of is now putting aside the debt ceiling for the moment. However, it's not done. And we could see more volatility one way or the other, right? We were just talking about the U.S. dollar. In fact, Ben was saying how it's at the highest level since March, April levels. So, it's nice to see some strength in the dollar, but now what? Because with each headline, there will be risk on, risk off. What do you propose that people may think or see or do as investors? What should they be watching for?
Yeah, so I think it depends on what kind of investor you are. If you're a long-term investor, those types of investors don't typically trade these risk events, right? You can go away for vacation for a week or two and this thing could all be resolved. Now, if you're a short-term tactical investor, this is an event that obviously offers a tremendous amount of opportunity. So I think those maybe looking to buy volatility and maybe, bet on the idea that this could deteriorate, volatility is quite low. Risk assets are well supported. The market's rallying today. If you have a different view on the resolution of this debt ceiling negotiation, then you could certainly take an opposing side and have a risk-off expression, right? Go into bonds, lighten up on equities, load up on the U.S. dollar, even load up on gold since we've had the sell-off. Now, the other, I guess, aspect is you could potentially wait for this to deteriorate and then come in, of course, to buy risk assets with both hands. So it depends on how you want to play it. If you're a long-term investor, it's probably not
quite have an RSI divergence there,
but if you are a short-term tactical investor, you can certainly position
Barba
for it
coding,
ahead of time
so
if you
hard
think
to
it's going
read,
to deteriorate. Or you can
these
wait
levels
for
are
that
the same
deterioration
height.
and then come in
RSI
and
is
play
lower
it.
here.
What about the
So you
international
can maybe call that
footprint?
a
I mean, we
divergence.
obviously look at foreign exchange rates, but you're watching what's going on in Europe. You're watching the Japanese
But
yen.
I like the momentum.
Tell me the
I'm
big
gonna hold. I'm
picture
not
on
gonna
that.
flip out of anything
so
right
again,
now.
I think if you're looking at equities versus bonds, on the equity side, we've certainly seen a very interesting performance
more of
on
a
U.S.,
push to a
non-U.S., and
more
for the
legit
non-US
resistance.
piece on developed versus emerging markets.
Or I take
so
profits.
I think right now what we're seeing is continued weakness in emerging markets because I think the China growth story, the reopening trade, just hasn't really met
Look at
expectations. earnings. Europe, on the other hand, looking quite good. And the U.S., I think, just showing still a tremendous amount of resilience. So I think around the world on the equity side, you want to be a non-U.S. developed, then U.S., and then emerging markets kind of fall out last. And unfortunately, I think on the
it's time
fixed
to give
income
it up.
side, it's much of the same.
So when we talk about risk-off investing, that would mean some of the things that you
Really
already
looks like it
said,
wants
but I
to
just want you
flag
to
on the
repeat it so
hourly.
people could really almost have the bullet points.
Yeah, absolutely.
You know, it's risk-off day. What does that mean?
Yeah, it's
What
up
is the
12%.
investor to do?
Right, so a risk-off day, equities down. If you're looking to sector allocations, you want to get into defensives like consumer
think
staples,
a firm's gonna fill this gap.
healthcare, utilities, and those are typically the sectors and kind of the playbook that you would want to kind of deploy in a risk-off period if you're trying to take advantage of a period of financial market
I
turbulence.
wonder if we missed it, because you know one of the headlines here: it appears debt default is off the table after the White House meeting. Maybe it's over. Maybe the risk off is over. I mean, we've certainly had a good move today.
And so we're back to the fundamentals, and we're back to focusing on the Fed.
But you know, we're waiting on the Fed likely
Back to
to
the
see
fundamentals.
a pause, right?
We were just getting back to fundamentals of
People think
bear
the
market.
second quarter will be
Be
sort
back
of
to
the
the
worst
before
of it, and
non-fundamentals.
then improvement.
Yeah, I think on that front, there were quite, again, a lot of concerns coming into earnings season. And yes, obviously we've had some high-profile disappointments, but I think overall, it's a very similar to a story of what we have in terms of the economy at large, which is just a tremendous amount of resilience. And I think companies that are doing what they need to do to protect their bottom lines.
Yeah. Eric, it's great to see you.
Thank you
you so much for being here. Eric Terre, Global Macro Strategist, Multi-Asset Solutions Team, Manulife Investment Management. Thank you. All right, still ahead, we want to take a look at the housing sector, what we need to know, watching interest rates. Are people buying, selling? What should we do next?
13.8. Target says organized retail crime is worsening and will fuel 500 million more of lost and stolen merchandise this year than last. That's insane. $500 million just in Target. Not going to default. Stock called the market. Yeah. Cole's got the super old school phone ring. Saw someone put stakes in their pants. Cole is 312% short. Or are you bot? Yeah, Zella. How's Zella working out? 7%? This has had a nice channel to the upside. Short interest is crap. It tells you it has this much short interest. I mean, it really does. It's like a broad overview of. I hold it with very, very little weight. But even if it
in there
was,
with us.
doesn't mean it's going to
And
go
it's
up.
one of the key
Like,
markers that we look
means that
at
there's
in
a
the
lot of people that think
self-storage
it's
business.
going to fail, and that's probably because it
is
did.
people moving around, velocity in the movement in the
The reason why things are
marketplace
shorted,
really means there's demand for
not because I think it's going to go up. I think
and
it's
people are
undervalued.
getting up and they're upsizing, downsizing, or taking a new job. And so what we are seeing on the supply
It's coming
side
down.
is there's demands there, but
Going
the
off some of
supply
that
and starts have
steam.
slowed down based on our numbers we're seeing from first quarter.
So we still have very tight supply. There's no doubt about that. I mean, tight inventory. So if you're trying to buy a home, it's still tough, Erin, right? What are you predicting here going forward?
So affordability is at an all-time low. It's even far lower than it was back in 2008. And what I've seen over the last month, which is a nice sigh of relief, is that there's been a coming to Jesus moment with sellers. They're no longer looking for those 2021 mid-COVID highs that they saw. Now they're getting a bit more realistic in terms of, what they can get for their property in today's dollars and the timeline that it takes to sell a property. So it's no
Do you
longer,
have to have plastic surgery to be a realtor if you're over the age of 50? I feel like I've had a realtor. I think I've met one that was over 50 that didn't have plastic surgery. Not certain. Like, it might have been a dream, but I think I maybe did.
I'm interested in your
That's
interpretation here. Lines that say that the
Good
housing
for
market
clients.
could tumble into
They're not
a
having
deep
any
freeze,
surgery.
while at the same time that the housing demand could
Like,
return.
you're going to buy a house,
So it's sort of like, which
and
one is it? Meantime, when I look at the home
the
builders
person that
index,
you're dealing
that's
with
about $1 off the 52-week
has made their
high.
outsides
So we
look
know
much
that the
nicer than their
housing
insides.
stocks are doing great. Where do we stand, Benjamin? Is it a
Sketchy
winning
person to buy a
year,
house from.
a lot of movement, or not necessarily?
I think, unfortunately, there's a uncontrollable outside effect here called the Fed, and they can really put some brakes on our economy here as we sit here and look at
Not gonna
the
squeeze without a
ability for
catalyst, I
people
don't
to
believe.
adjust. And I think
Could see
Aaron's
some
pretty spot on
price
with
action still, though.
the market.
I'm actually impressed with today.
Not 100%
I
a
was
buyer's market,
I
but
was
it's definitely
contemplating,
starting to move that
considering
direction.
it might just trade pretty flat
In
until
our business,
catalyst.
we're not only
That's why I sold some this morning.
investing
It's like,
out of our Fund 9
yeah,
right now,
this
which
might be it.
is nearly $1 billion fund.
But then it
we're
popped up above
looking
resistance
at
and
storage
completely redeemed
opportunities,
itself.
which are hard to get into at pricing that we like. But we're seeing people come to us for loans, for higher leverage loans and pref equity. So, what does that tell you is that there's needs for it. The business side, the storage, there's demand, but the sellers in many cases are coming off of this euphoric last 2 years. And from a business demand perspective, from the customer base, businesses are doing well. Employment is at an
13%.
all-time
Barbecue.
low still, moving and
real?
very little
Let's see.
from the 3.4%
Showing
that we have
1845 when you
right
trade.
now as of April.
Google Souls 1870.
That's a really healthy
Last sale on
factor.
Weeble is
And
1870 for
inflation
7.
really has more to do with the fact that there was a bunch of
You're
money pumped
paying,
into the system, and so
paying what,
I think
at
we're
least
just coming
$4.
off this. And if you look at the last 5 years,
Paying over $1 a share,
in
or
completions,
close to $1 a share,
we
basically.
had this exceptional
Only
amount
getting
that
7
happened
shares.
in all-time highs in purchases in 2021 and 2022, and we saw 20+% top line
Now they're both
growth in
18.5.
rental growth, which we should be sitting at a 4 to 5%. So as we see a flat year over year this year, we're seeing on average, we're getting back, if you take 2018 to 2023, I'm an average of 4 to 5%, which I like those numbers.
Yeah. Yeah.
I feel
Thank
for
you
him, though.
that,
I get it.
Aaron, as
A lot
mortgage
of-
rates have
a
come
lot of,
down, they're still relatively high
women's
to where they were. They're
confidence and
certainly
stuff comes
not
from their looks,
near
more
record
so than
highs,
men, I'd
but
say.
they're off those record lows.
And
What's
all the
your
glory
advice
days
to
looking
potential
good, and
buyers?
just not feeling it
We
anymore.
know
And
people are keeping their homes longer, and do-it-yourselfers are just fixing it up because they
with their old looks
don't
back.
even see the
Get it?
benefit sometimes of trying to sell their home and get something else because they can't necessarily get something else as big or as nice or whatever. But what's your advice to potential buyers now?
So I don't
Hers
see
actually, hers
mortgage
isn't too
rates
bad,
moving
but
lower anytime
just
soon.
don't like that I can tell
Jerome
that it's
Powell
there.
said that
Her
we're not going
forehead,
to
her
start
lips,
to
her
lower the Fed
cheeks.
funds rate until we hit 2% sustained inflation, which means we need to hit 2% month
The
over
RBI
month
post that
for
said people
3
who
or
are
4
buying at these
months.
prices are
So
shills.
that doesn't give us a lot of leg
What?
room in
Well, it doesn't make any sense.
2023 to see a decrease in rates. What we are seeing now is those lower prices that help
Stop buying.
affordability.
Oh,
So
we need to wait for it to
at
drop
this
lower?
point, I think it's still a
What's the...
opportune
I don't
time
understand.
for buyers to
Too
shop.
stupid
You
to
don't
understand
have
that
to
comment.
make decisions the same day, which is such a sigh of relief versus the
Oh, her
automatic
eyes
decisions
also.
that had to
Jeez.
be made 2 years ago. I don't think that was healthy. I actually think we're in a much healthier spot today where you can actually contemplate the largest financial decision of your life. So take the opportunity to shop, but at the same time, don't have the fear of overpayment. Don't let fear drive your decisions. Make long-term decisions. Know that a home is an asset that you should hold for at least 5 years. And then the hiccups in the market don't make as much sense to you. They don't impact you at that same high level of fanaticism. So if you think long-term, it's still a great time to buy.
Yeah, and you also said don't get stuck in perpetual renting cycle. I mean, finally, you just got to get out there at some point. Great to see you both. Thank you very much. Benjamin McFarland and Aaron Sykes. Thank you.
Thank you.
All right.
Yeah, it's grinding up. It is grinding up, breaking through 2 resistances today. Starting with this 1790 here. Then another one like 1832. Yeah, when it pops through it, bull flags, big break through it. Finds resistance, comes back down, finds support, reaffirms that support by bouncing, big pop up through it. Same thing up here now. All looks good. See if end of day, if where it closes, if it flushes back through this support, or holds that one, or holds this one, or where. Be nice to hold above 1790 though. Person thought that client. Oh, buy an higher price. That's just the most moronic thing I've ever heard. We should wait till it's at fair value and then buy it. I like that. Buy coming down. This is kind of the first little support. Could find support up here though. Make an even larger head and shoulders. Head, shoulder, shoulder. Bouncing on that level, little green candle. Now, power hour. What do we got? Yes, closed. He had a weird volume spike up to VWAP 215. AI at 13. Oh, have Island for sale in C? New World? Let's see. What price do you need barbecue? Get that island, Cameron. I bounced on that level. Right on that level with that line we drew. I'm seeing 1850 forwards. You trade in Weeble.
Leading the way higher there. Meanwhile, the S&P and NASDAQ both up 1%. Tesla giving the NASDAQ a boost. Zion and Comerica, the best performers on the S&P. Regional banks also giving a boost to the Russell. Look at that, best performer today, up 2%. All right, we have Renita Young and Kevin Hinks standing by to break down some of this market action. Renita and Kevin, great to have you both here with us. So Kevin, kick things off
Head and shoulders on Tesla also.
Discussion hopes. Traders certainly betting that
Shoulder,
maybe
head.
we won't have a default. Is the
Also
optimism
have that RSI divergence there.
Well, I think the optimism should be warranted. I'm not sure the fear was warranted, Caroline. I think the optimism that we're getting now is actually the normal evolution of this discussion. But, you know, Renita, or Caroline, I started the week talking to Oliver saying, I think calm in the Russell 2000 will bring calm to the markets. Monday it was calm. Tuesday the Russell was heavy.
Help me home with USA.
On the overall markets. And now today, with the Russell up 2%, the market's
that's better than onions.
Cue of all things.
Barbecued at
from
120.
The small caps and the regional banks. I think that's what, other than other things going on, like
we were talking island buying money.
Didn't miss on earnings and was able to rally some good.
That might be the bottom on SPY there. Dang it.
Earnings are playing a part, but I really think
when you cut losses or just hold
in its entirety, take its cue from the Russell 2000. I think you've got interest rates creeping a little higher. I think you've got the US dollar also creeping a little higher. What's really driving this market right now, Caroline,
resisted there.
Is the relationship between
looks like a bull flag, but
no more problems
right at that
in the
top
regional
resistance.
banks, and I think that is what the market is taking some comfort from. I think you see that in the VIX now back below 17. I think if the Russell stays calm this week,
divergence played out, head and shoulders played out.
So is it 2% gain calm, Kev?
Well, I mean,
I'd take profits around here probably.
Let's put it that way. Remember, it was
if I were to
down
enter my short up there.
It was up Monday. I think this market, whether we want it to or not, is taking some of its cues in terms of direction from the Russell 2000. So, listen, I think there's parts of this. There's 8 sectors of the S&P 500 that are up right now. There's 3 down. Healthcare is mixed. If you look at healthcare, the healthcare providers are higher, but pharmaceuticals
that volume
are lower.
there too.
But look at consumer discretionary.
Yeah, we might get a retest of the high
today. That communication services is strong. I think there's parts of this economy that are really strong, bright green on the heat map, Caroline. But I still believe, no matter with all the other things that's going on, the market is still taking a lion's share of its cue from the Russell 2000, both on the downside
20%.
Tuesday and on the upside Monday and today, Caroline.
Okay, so Renita, let's break down some of the individual movers today. Tesla, a big winner on the NASDAQ, shares up about 4.4% after its annual shareholder meeting yesterday. Seems like there were quite a few key takeaways, but what really stood out to you, Renita?
Bouncing back up.
Elon Musk did was admit that Twitter was a a distraction for him. He called it a short-term distraction, and as we know, he's no longer CEO of Twitter after he took it over, and Linda Yaccarino from NBC Universal leads it right now. But he also mentioned that the Tesla bot is advancing and introduced AI into the conversation. He said that it has a new AI system that can pick up new tricks from human demonstrations. But he didn't give a clear timeline on when that would be coming out. He gave an update on the Cybertruck, though. It said that the company is going to deliver the first ones this year with a goal of selling and delivering between 250 and 500,000 a year once production has
Young meets up 7.7.
He wants to make the Model Y the #1 selling car on Earth this year. And he gave a whole lot of other things
That
too.
looks like a nice chart.
One other thing he gave was about the self-driving software. He says that the self-driving software, the full self-driving software, is getting close to being safer than human driving.
Spam.
And
Maybe
I
it's
think
way
that's
back up.
interesting, especially since
See if
there
it
are several
gives us a double top.
investigations into the self-driving software in several different areas, maybe even more than just the United States. But Tesla is also rolling out Tesla Insurance later this year and considering an additional manufacturing plant in India, which tracks along with other companies, other multinational companies, because they're trying to diversify away from China. And so one thing, though, that is really interesting is Elon Musk said that the next 12 months are going to be difficult because of the macro conditions. But a Bernstein analyst says that Tesla's not having challenges because of the macro issues. This analyst says that Tesla's having challenges because of its limited model lineup and that it will continue to have these challenges into 2024.
1841.
Well, Kev, Elon Musk also hinted at 2 new cars potentially coming. Also, they may go mainstream and start advertising, something that we've never seen from Tesla. But what do you think has investors so upbeat in terms of all of the takeaways from this shareholder meeting? Because shares are just, surging higher, up 4.5%. What is it that you think is really driving shares today?
I thought it was 2 things, Caroline. I thought, number one, he did a nationally televised interview that I thought he did an incredibly powerful job at giving his vision. And I think, Caroline, remember, at the end of the day, right now, the U.S. is a SUV country. There's so many SUVs. So for Tesla to enter that market and say they're about to start delivering the Cybertruck, even though I think it's hideous to look at, I think it's still going to be incredibly popular with some people who want an alternative to just a sedan. SUVs have never been more popular, and Tesla entering that market, I think, is going to be incredibly important. And like I said, he really looked impressive
by Tesla.
in his interview, Caroline.
Yeah, agreed. It was definitely, he just continues to get more and more interesting. All right, Renita, Target, another mover today. Shares up about 2.5% after earnings, and this is despite warning about a sales decline in the current quarter. Talk to us about Target's results.
I suspect that's why, Caroline, Target shares aren't any higher, because while Target did beat on earnings, it missed the bullseye because it did not beat on revenue.
Oh, that RSI
and revenue, although it
there.
did grow about 60 basis points from the year prior, it still missed expectations, coming in
This one
at
actually
just
might have an
under
continuation. This is the
$25
first day of its rally.
It's
With
because
the volume.
comp sales were flat on a whole.
Got
Although
these
comp sales, if you break down the different
small
categories,
caps going
store
too.
comp was at 70 basis points higher, and digital comp was at 3.4% lower, which was different from that increase of 3.2%
Like Groupon for that gap fill,
the
maybe.
year prior. But this is all because customers are starting to pull back on their discretionary spending. Target's got a lot of discretionary items, and when it comes to the comparison to Walmart, Walmart has more groceries than it does these different discretionary items, and one can argue the prices are cheaper, and people go to more of a Walmart when they trade down, I would guess, than they do a Target. Although Target is a trade down from other places like Whole Foods or Trader Joe's, say. But back to Target, the fact that consumers are slowing down was not a huge surprise. The company did guide down for the second quarter estimates and expects the second half, however, to pick up a little bit, Caroline.
So, Kev, despite the fact that Target offered a disappointing Q2 outlook, $1.30 to $1.70, whereas for EPS, whereas Wall Street was expecting $1.93, so pretty big disappointment there. They did stand by their full-year outlook, which I think is definitely a positive sign, just in terms of potentially maybe things getting better in the back half of the year. What stood out to you here? And, I do want to note that Walmart, we had talked about this on Fast Market, Walmart was lower. It actually moved higher and now is just back below the unchanged line just a bit, so underperforming Target today ahead of earnings, but obviously that will be a key one tomorrow to watch.
Caroline, when Target's numbers originally came out, the stock dropped significantly down. It got as low as 151, but then, Caroline, they talked about two things that I think caught investors' eyes. That is, the inventories are down 16%. I think that was a big part of their problem. Remember, a year ago was their big down day right around now. And then the other thing, margins back above 5%. Not where they were pre-pandemic, not all the way there. Their targets are 6%. But if they can get margins up and inventories down, then they can get their defense off the field and start putting their offense back on the field, Caroline. I think besides that, we highlighted what a well-run company this is, but they've got to get the inventory and the margins back where they need to be, Caroline.
All right, we'll leave it there. Kevin Hinks, Renita Young, always a pleasure. Thanks so much for kicking off the show with me. All right, let's welcome in our next guest. Zed Francis is CIO of Convexitas and joins me now. Zed, thanks so much for joining us. Happy Wednesday to you.
Great to see you, Caroline. I didn't realize at Market on Close you guys are so ruthless. Oliver's a little sick, and I actually take his physical seat in studio.
Well, welcome. Maybe Oliver's watching and getting a little bit worried, so we'll make him sweat and have laryngitis. But yes, so Zed, your view coming into this year was that credit risk would be an even bigger problem than inflation, but even given all of the banking turmoil that we've seen, credit spreads continue to be little changed. Why? What's going on?
Yeah, so everything we've been experiencing so far in terms of credit problems has definitely been more, we'll call it on the private side than necessarily the exchange traded side of things. So that's why investment grade credit, high yield credit, what you kind of see every day from the CDX indices or the benchmark indices have been kind of benign movements. Because again, everything's kind of taking place in the problem zone, more in non-publicly traded instruments on the credit side. Along with that, it just takes a long time for credit to start creating problems. Credit can create snap problems if it's due to illiquidity risk, which we've seen, little bouts of over the last 10, 20 years here or there. And March potentially could have been one of those where illiquidity risk could have driven problems from credit in a snap fashion. But ultimately, credit takes time to create fundamental problems, because ultimately, once somebody has achieved their financing to invest in some project, whether it's at a corporate side, whether it's on the real estate side, they're going to keep going. So you're not going to really see the slowdown from tightening credit conditions for a handful to many quarters potentially.
But it's still coming, is what you're saying.
Yeah, we might get a little sell-off in the close.
It's probably starting to be baked in
These
to
bearish,
that we're
going
to
to
have some sort of issue in 2, 3, 4, 5
hopping
quarters from now.
formation.
It's just, when things happen slowly, we get the big bang headline, everybody expects issues right away, but it's kind of a slow grind of worsening conditions. We all kind of get used to it, right? It's that slow increase in temperature that everybody, because the change of pace is so slow, kind of ignores the problem until it becomes substantial enough that you can't ignore it any further.
Is there risk of an all-out credit crunch at this point?
I don't know.
All-out credit crunch,
Hard
I'd say
to
it's
read 'em.
unlikely in the immediate term. I mean, just think about it like, okay, a New York
grind up the 10
commercial property,
average.
cap rates, 2021 were 3%. Now they're maybe
smooth that
5%. It's a 20
is.
duration asset. So throwing a
How
bunch of
could you
numbers out
sell
there,
that?
I don't know. It's probably down
Beautiful.
30, 40%. But what does that mean? Well, the
SPY maybe
equity
hit its
holders probably don't have any
top of
value
this
F.
little
The mezzanine holders
rally
probably
here.
don't have any value F. And the banks might even be dinged, but ultimately, nobody's forcing any action. Like, there's no forced sale in that property right now. And so it's what creates some sort of event where all of a sudden either things start maturing and you have to refinance and, oh geez, like that's a problem, or hey, I have to become a forced seller. I need the value of that asset right now. Then it becomes a problem, but none of that is necessarily right at the precipice at the moment.
So your point is that it's still kind of in the early going and these things could take some time, but are you seeing any obvious economic fallout from the regional banks that goes beyond the impact of just the Fed hiking rates as much as it has?
No, absolutely. We all understand that regional banks are hyper-specific in terms of financing commercial real estate. So new commercial real estate projects are on hold right now and are probably going to be on hold for a good bit of time. But again, those types of projects, you have to find the land, you have to get the local municipality approval, then you get the financing. So it's projects being on pause today were projects that were going to break ground 2-3 years from now. So they're not immediate events. And then in terms of small businesses, that's definitely where small businesses access more of their financing. So they might be slowing down in terms of expansion projects that they might have taken on otherwise, which you'll probably start seeing a little bit in employment, and maybe not necessarily firing of folks, but not hiring as many folks if you're not looking to expand because you can't get access to credit. But these are all in the near term, little cracks. It's very unlikely to have an immediate impact in terms of employment. Maybe GDP a little bit, but nothing too crazy, and probably not markets in the next quarter or two.
Time crunch.
All right, let's switch and talk about volatility. Just taking a look, the VIX is currently trading below 17 right now. What are the chances that it can remain at these kind of subdued levels for a prolonged period of time? Can it stay below pre-COVID levels, and what are the implications?
Yeah, so implied volatility is all the way back to what I would call the post, great financial crisis baseline. And what does that mean? It means skews very, very steep, meaning puts are more expensive than calls. And that's been a persistent event post-Great Financial Crisis, because essentially pre-2008, banks were able to warehouse all these short put positions and post very little capital against it. That changed with the regulatory changes. Thus, ever since then, puts are more expensive than calls. And we're back to that very steep skew environment. Similarly, the calendar is very steep, meaning shorter dated
was a higher premium because that's
are cheaper than longer dated options, something that's been very, very persistent since 2008.
You say just since 2008.
And then, implied
that when we started hedging,
front end is kind of a 12, 13. So again, the kind of like baseline positioning, everything's good and fine. It really looks like homeostasis for the post 2008 towards now. And I would agree that there's some things going on in macro. There's even some things going on in micro that may suggest that the baseline volatility surface maybe doesn't make the most sense here.
So what's the best way for investors to hedge right now?
I'm moving back up.
So that's what I think is a little interesting, because
retest, or are we just going to blow through the top?
Options are less expensive than longer dated options, and if puts are again kind of more expensive than calls, if you're looking to hedge your portfolio using non-member options, that kind of says the less expensive than anything else is buying shorter dated at the money puts. If you're buying shorter dated at the money puts, it's not really a static position. You got to manage it. The market moves 2-3%.
Wow,
you probably got to do something because your exposure has changed dramatically. It's not that, I want to put in some sort of, if the market's down 10%, this is my, point at which the options start participating and protecting my portfolio. That is, in a relative basis, expensive. So I kind of think that's one of those where what is the most attractive, again, is kind of shorter dated, closer to the money options positions, but those type of positions are not set and forget it trades. And so I think a lot of folks are not necessarily participating in those positions simply because there's a decent amount of daily management that needs to be expressed in those types of positions.
Leave it there. Zed Francis, CIO of Convexitas. Thanks so much for joining us, for sharing your insights, and for keeping Oliver's seat warm. We appreciate it.
Thank you.
Coming up, we'll take a deep dive into the utility sector with Josh Wine. He's the portfolio manager of the Hennessy Gas Utility Fund, ticker symbol GASFX. We'll get some interesting utility sector ideas next on Market on Close. Stay with us. We'll be right back.
Wondering which month is the best time to start investing? Any month. Be 500 average annualized for total returns from 1928 to 2022. Like April's the best for 1 year. 30-year. Doesn't matter. He's out. Jeffrey Epstein moved $270,000 for Noam Chomsky after Chomsky met multiple times with Epstein. Oh, big drop on SPY there. Pretty big. Nothing crazy. It was weird how it kind of snapped earlier right here on this wick. So. Thanks, Kitty Daddy. Appreciate it, man. Weird Lords. Potentially Cameron, that's what that chart is showing. That's, I mean, some would decipher it and determine that that is the outcome. Looks like it's maybe making a little inverted head and shoulders here now in the 5 minute. We'll see. See the head, the shoulder to shoulder. Might still be seeing a rip back up to that high of the day. The last month's always the best month.
Josh, so good to have you here. Thanks
It's fun
for
to watch
joining us.
Jenny's aunt.
Thank you.
So tell us, why is now the time to be investing in utilities? Make the case.
Sure. Yeah, and it's maybe a little bit less than why is now the time, but why, maybe the better question is why are utilities kind of an important part of a portfolio? And I think that, they do represent, minimal business risk for the sector,
7 days.
as well as, very highly visible and predictable revenues. And certainly there's a
little pop on
defensive
barbecue.
nature to utilities.
Buy a
that we
pretty
saw
big red
last
candle.
year when the market was down.
Leave
and
it if it
utilities,
holds, otherwise that inverted head and shoulders is
appreciated quite
done.
nicely. So I think that it's an under-owned area for many
It was
investors. I think
special and
it's
Ace
thought
came
of
in
as
and
just a
made me nothing.
yield play, and that's always true. But I think that the
Oh,
underpinnings
as far as
of
gifting
what makes
memberships
for a
on
great
what
investment
PP show?
are ever present with utilities.
Well, it's interesting because a theme of this year has been last year's winners are this year's losers. Do you think that
Yes.
changes as the year progresses?
Yeah, that's for sure. So utilities are flat to down on the
Yeah,
year.
Chapter
and
7.
Even today, when we see the market advance,
Even a
sharply,
restructure
utilities
here,
are-
like
are
shareholders
definitely
can still get
lagging.
nothing
So, what
if
I
it
would
doesn't
say
go to
is,
Chapter 7.
that is true. I mean, there's some reversion to the mean. It's hard to know.
Also, I
when
don't think
that
they own any of the real
reverses and
estate.
when it's
I think
risk
it's all
on for
leased.
utilities. So,
So,
I
I don't
definitely
think
wouldn't
there's
try to
value
time
there.
that, but it's certainly, as the rubber band gets stretched between, kind of the stocks that are doing well and those that aren't this year, I think it's, definitely time to look at utilities. I think there are some themes that are underappreciated, and we can talk more about them, but I would mention that, beyond just predictable revenue growth and dividend growth would be things like the electrification of vehicles. So I think it's underappreciated.
Shorts are fine to just
We're
hold
still
their
early
shorts
in that theme, but it's a
up,
theme nonetheless.
whatever, 99% on their short. They can let it dance around, do whatever. You got all this buying power from it.
Growth could there be?
The only way
Yeah,
they'd
so,
have to
utilities
close
kind of,
is
as a group, are
if they
experiencing
get
earnings
liquidated.
growth, in the past and in the future. Projections put it at about a mid-single digits, anywhere from 5 to 8%. And I think also importantly, dividend growth in line with that. So, it's always nice in an environment like this, there are some pretty eye-popping yields, especially as you go, into high yield credit and the like. And I think that, to be sure, people will be burned, as the economy softens most likely. But I think what is important with utilities, and certainly not a sexy sector, but over time they've proven that
It's
5
kind
to
of
6
double
percent
bottoming
earnings
here.
growth with a commensurate increase in dividend growth, makes for a very competitive investment, one that is in line with the market over long periods of time. So I think that it's a regulated industry, which I think is more positive than negative. A lot of the capital investment that utilities commit to improving their infrastructure is they can earn a return on investment on that. So spending, capital expenditures are a good thing. Just economic growth, and certainly in the Hennessy Gas Utility Fund, the increasing relevance of natural gas as a source of electricity generation.
So you mentioned your fund. You also, in terms of some specific names that you like Atmos Energy, ticker symbol ATO, and Southern Company, ticker symbol SO. Tell us why.
Sure. Yeah, Atmos is a pure play gas distribution company doing business in about 8 states. And
Maybe on the hourly's easier.
Consistent earnings growth, dividend growth
Yeah, that hourly.
in the last few years of about 8 or 9%. So solid balance sheet, and I think it's kind of an under the
Beautiful
radar
cup and
idea
handle. I want more.
doesn't get a lot of attention.
More.
Unlike a Southern Company, which is another idea, one of the holdings in the Hennessy Gas Utility Fund, a much larger, more diversified utility with favorable demographics in the Southeast. And again, a strong yield supported by, strong earnings growth. And, I think, there's a lot of names. We have to wonder, what's going to become of this sector. What's, we talk about AI and machine learning and all these, technological wonders. We don't have to worry about that with utilities, which I think is nice. It's easier to stay invested through the cycle, not worrying about, technological cycles and product cycles. So, I think we can sleep well at night.
Although it's AI that's driving all these games for the big winners this year, but we have to leave it there. Josh Wine, Portfolio Manager, Hennessy Gas Utility Fund. Thanks so much for joining us. Really appreciate it.
Thank you.
Coming up next, Tom White has 3 bullish options trades for us. He's got Carnival, CVS Health, and Kohl's on deck.
You talking about flavor?
Next, so stay with us. We'll be right back.
Don't they lease all the land? Excuse me. Oh, barbecue, high of the day. Look at you. Right at 330, 1879. Up 9.3%. 1825. Doing it. And distribution centers. Why would those have any value though? They would lease them. No one's gonna buy Bed Bath & Beyond to take over a lease on a distribution center. We're gonna go to the owner of that warehouse and say, hey, we'll take the lease when they're done. Oh, barbecue. That's the franchise now. They own the distribution centers, like the building, the land they're on. True. You see that on the filing, or how do you know that?
Airlines, some of the hotels, the reopening trade is in full force today. You mentioned all the upside today that we're going to see in unusual option activity, no different in CCL. They had a post-earnings sell-off that was kind of concerning. The wave season was better than expected. That's typically their slowdown season.
Yes, I agree. Barbecue's moving up 9.37% on the day. E-Trade has it at 1860 for the last transaction.
And land-based alternatives.
People's showing
Remember, they make a
1880.
big portion of their revenue from excursions
So
and
somewhere there.
experiences while on the boat or
But yeah, that is a new high on the day.
on shore. So that's supposed to help them out. Free cash flow is still really positive. Bookings into the latter stages of 2023
Is
are
government on
about
flight room?
95% of what they were in
I doubt that's the
2019.
case.
So we're seeing a resurgence in some of these names, despite the overall weakness over the last couple of years in a lot of these cruise lines. And no different in the option market. We saw some unusual option activity in there all the way out into the July cycle. So you're going to capture another earnings event in this position. Trader bought over 20,000 of the July 13 strike calls for an average
Flavor,
debit
where's
of
your
30
where's your
cents.
source for
So
them
not a
owning
lot of
the
option premium. This is a
distribution
low
centers?
price stock. That break even of 1330 over the next 65 days is about 20% above the current share price.
I haven't seen a breakdown of anything. I've just assumed all their stores are leased, but it's possible some are owned, I guess.
Volume and
Typically, they would just lease those.
About 8 to 1 at this point. So we're seeing a lot of flows.
That's kind of a guess on my part.
Carnival,
As far as the
but in all
distribution
the
centers,
cruise lines
I've
today.
not differentiated those at all from their stores.
So good day for the cruise lines, also a good day for Kohl's, but unlike Carnival, which has seen impressive gains year to date, Kohl's getting beaten down about 20% so far this year, down almost 60% over the past year. What's the trade you found for Kohl's?
A little bit of a rebound today in some of these apparel stocks. You're seeing Macy's up, you're seeing Gap stores up, Abercrombie and Fitch up. So a lot of push into this retail space, which has been beaten down, and Kohl's has underperformed the entire sector basically over the last 52 weeks. They've got earnings next Wednesday, so I think that's going to be a key catalyst for this stock in the near term. Citi just lowered their price target to $19 on this stock,
And he's in Canada,
thinking
Mexico.
that will they get through
Yes,
the
that's why we're
inventory
voting
issues?
for
That's
Ace as
gonna
the new
be
prez.
a real concern. And then also cost-cutting measures that a lot of the
I'll
other
just gift everyone
retailers
memberships.
are doing at this point. Apparel sales, if you look at the retail side, have gone up just ever so slightly. But this is going to be, I think, an execution quarter and guidance quarter for this company because they have not executed well over the last year. You mentioned down nearly 6% from year-ago levels. But we did see some bullish flow in there with the stock up about 4% today. Trader bought 8,000 of the June 22.5 strike calls for an average debit of 70 cents. The break-even 23.20 over the next month is about 14% above the current share price. And call volume that in there today is about 4 times normal daily average that we've seen over the last 5 trading sessions. So a lot of bullish flows in there. And you're not only seeing it in Kohl's, which is severely underperformed, but you're seeing it across the board in a lot of retailers. We saw Target rebound after, maybe some weaker than expected guidance. But one of the keys for Kohl's moving forward, just like Target has Ulta in some of their stores, Kohl's has Sephora. That might be one of the areas in their report to kind of focus on next week. But this trade
Another head and shoulders there on SPY.
Upside here into Kohl's post earnings.
Yeah, beauty continues to be strong. Target pointed out that
Shoulder,
was its
head.
strongest category. I think it was mid-teens percentage growth last quarter. All right, speaking of retailers, you're also looking at CVS. What's the trade you spotted there? CVS shares up about
Negative
3% today.
413.78
and,
range.
Just yesterday, that stock hit 2.5-year lows. So there's been no love for CVS. Now, initially,
Y'all forgot about the distribution
prior to
center.
that fall about 2.5 years ago,
Didn't
this
forget
stock
about
was
anything.
doing
Tell me
pretty
about it.
well,
I don't know anything about
making
it.
Some deals, M&A
Educate us,
activity,
Flavor.
But they've closed a lot of stores. They've had a lot of the theft issues that we talked about during Target. In their results, the company Target came out and said they lost like $500 million just due to theft and maybe some underperformance in some of those stores. Now, They closed both the Oak Street and Signify acquisitions. The Oak Street one was actually quicker than expected, so maybe those are causing a lot of the headwinds as far as the balance sheet goes. But they did last quarter beat on EPS. They beat on revenue, but they cut fiscal year 23 EPS view pretty significantly while raising revenue. It's kind of a bifurcated earnings report out of CVS, but rebounding a little bit today, still down 25% this year. But somebody thinking that maybe a rebound's in the cards here because we saw some unusual option activity on the call side in here also. Traded about 10,000 of the August 75 strike calls for an average debit of about $1.13, so that break even of 76.13 over the next 93 days. That's about 8.5% above the current share price. Call volume's about 3 times normal daily average volume that we've seen over the last week. Now, they've got earnings at the beginning of August, so I think that's what this trader is positioning for because they did sell out of a long June 75 strike position that they had on to buy these. So they extended a little bit of duration because that position wasn't working out. But going out to the August cycle on this unusual option activity, with the thought maybe the earnings catalyst could provide some upside.
All right, we'll leave it there. Tom White, thanks so much for breaking down that bullish options activity for us. Have a good one. Coming up, debt ceiling talks continue in Washington. We'll check in with Dan Deming to get a look at how the news cycle is impacting bonds and the dollar. Stay tuned. More Market on Close is next.
A little move up to VWAP there on GME. Barbecue. Broke through that support. I'm afraid of this once we started tapering up here. See how we close. All about close to close. I mean, yeah, if the distribution centers are owned, yeah, there's value there. I'd like to see that though. Where can I confirm that? What's the value of them? Guys, up 12.3. Start to come down. Barbecue looks really nice, still on the 30-minute. And RSI divert there. Seems like a move maybe back to VWAP is coming. Depends on this 30-minute candle closes. Nice, just hanging out that support still. Barbecue just wicked. Red to green on that candle. This doesn't say anything about them owning it. I'm reading this article on Fortune. Talks about the distribution centers. I don't know if they own the land or the buildings. And the value of those, I don't know, it depends on how big they are. They're probably worth the market cap right now though. 83 million. Yeah, maybe not quite that much. Bouncing on that support. See here. Barbecue bouncing, SPY bouncing. 18 minutes to go. $18.80 new high of the day on barbecue. 18. Look at that. 10.5%. Looky, looky, looky. Did I say we're getting to 19 today? I said we're getting to 20. Right. Make it happen. This cup and handle might start breaking out into this week. Time frame is that 4 hours? Why do these all look weird? Got that gap at 30 cents, barbecue. Don't let us down. Well, it's there. Gotta be the hourly. Oh. What? We will skew it. Ever. 19 cents, showing 18.54. I kind of look at that volume there though. 430,000 in the last 5 minutes. Full flagging on that early. You guys just summoned Jenny?
Mostly if we're able to take that out, you know, what does that mean for the equity markets? Probably more upside. And the NASDAQ continues to show outperformance and relative strength. And that's another dynamic that I think is boding well
makes it look like we want to break new highs here.
Major indices as we move through this cycle.
All right, let's talk about the dollar because it's climbing higher as well.
Yeah, it is.
Is it? I'm not closing my short. The dollar's climbing.
Yeah, I mean, it's coming off
that move.
Yeah, oh yeah,
sorry,
broke
Caroline.
that 102 level.
It is coming off the 100 level, you know, just it got down there, tested that level, and
What
now
the
we're
heck?
seeing some renewed upside. It's actually trading up to better than 6-week highs today at the 102.7 level.
Up on 15 minutes to close.
That falls suit
Good
with
volume
what
here
we're
in
seeing play out in the
barbecue
bond
in the
market
last
to some
15
degree.
minutes.
You know,
Breaking up a new
certainly
high.
if the
GME
Fed is
also
going to remain
ripping up here with some volume.
in its
VWAP.
tone and not
Respective
cut rates,
4%.
at least in 2023, as they have indicated, the repricing of that is beneficial to the dollar. And
Data
I think
centers
that
worth
that's to some
36.8
degree
million.
what you're
Markup
seeing
once
unfold
apparently.
here. Also, you're seeing other
Just their
parts
data
of the
center?
globe continuing to show some weakness, particularly when you
Barbecue
look at
has a big
China
data center?
showing weakness and not spilling
Talking about
over to the
something else.
Reserve Bank of Australia. Some of the price action and
Portfolio's
some
at
of the
105
currencies
today, but
over in
down
that
9%
region,
total.
as well as
I win.
Japan, and some of the issues that
I
continue
won
to
the mini.
unfold in England, as well as the EU, I should say. You know, are trending in a direction now that's giving a little bit of a tailwind to the dollar. And I think it's dependent on the rate environment moving forward, Caroline. And
That's a good
right
question.
now you're seeing the dollar
I think it's
catching a
maybe
little bit of a
the
bid
euro,
because of some of those shifting currents underneath
the
the
yen,
market.
probably like
So dollar higher, stocks
weighted
higher,
on a few of
treasury
them.
yields higher, Bitcoin
The
higher,
major ones.
gold, or I'm sorry,
That's a good
crude
question. I
oil.
not really thought about that.
Yeah.
Oh, also higher. I mean, crude oil up 2.6% right right now doesn't necessarily play into that
$1
recession
going
narrative.
worth $0
Granted,
No,
it
$1
is
is worth
still
like
only trading at around below $73 a barrel, but interesting move
penny.
there.
Yeah, absolutely.
Dollar bill?
Yeah,
Nope.
I mean, you're right. I mean, basically, the metals are under a little bit of pressure,
High
and again,
squeeze in
that's
here,
to
of
be
course.
expected when you see rates
15 minutes
moving
to go.
higher. But overall, you're seeing a reflation type of trade today, at least for today. We'll see if it plays out with the hope that
All in?
we're going to get through this debt
Yeah,
ceiling,
maybe.
and
I know
that's
it,
going to
it is
alleviate
getting
some of the
pretty chatty,
uncertainty
huh?
in the market.
That shutdown today absolutely
Lots of hope out
sucks.
there. Have to leave it there. Dan
This thing was up
Deming,
like 100%
Managing
today, wasn't it?
Director at KKM
Not 100.
Financial.
What was it?
Thanks so much for joining us.
23.
All right, thank you.
That's crazy. I think
Coming
that
up,
shut
we'll
down.
close out the market session with Charles Schwab's Jeffrey Kleintop and Randy Frederick. Market seems to like how the debt
Volume
talks
today is
are
impressive
progressing.
on it.
Let's check in
Not
with
liking
the
that
markets
daily
with about
candle
10
though.
minutes left in the session. You can see here gains of at least 1% across the board. Russell, though, adding to its 2% gain, now up about 2.2%.
GME starting to rip the close. That's pretty good. Sorry, subdued rally above VWAP with the SPY. Oh, SPY. We have just a crazy Thursday, Friday gap and goes to the upside. I don't know what it's looking like. Coin from England. Is it actually silver? I cut losses here. Let's see. They put their profits. Sell until sell. Amen. Amen. You got the double bottom thing. More of a retrace. Looking really bullish for tomorrow. But we are right at the resistance, so perhaps not. Look at that flag. Ugh. Volume today. Bye. Coming up on. Oh, there's a dump on barbecue. And look at that. In 39, I'm showing. Throw it in our Discord, Flavor Flav. Dollar climbing. I'm not as bullish. Broke that high from the other day. Broke that 102. Very bullish looking chart. I'll just hold. Nice to have that margin though for nat gas or oil or barbecue shares. Look at that. Wicked. Now holding above that level. Got 9 minutes. Barbecue hold it up.
Debt ceiling, not a breakthrough, but just maybe progress on maybe a procedural development, along with maybe positive thoughts from President Biden and Speaker McCarthy. All that in the end, lifting stocks. I'm not sure how much momentum there is. No, the stock market, Caroline, was not pricing in a default, but it was certainly concerned about it. You could see it echoed in the credit default swap market. Perhaps some of the factors depressing the futures outlook for Fed meetings later this year was influenced by that. So there are a number of different factors or areas of the market that were being influenced by the risk of a default. A little bit of a relief there is seen in the day. I'm not sure how much that has in terms of legs, but is it interesting to see it finally break out today?
Randy, we're talking, I believe Randy's with us. Randy, if you can hear us, we're talking about the market finally breaking out after, I believe, Jeff, you said 7 straight days of less than 1% moves. That being said, the VIX is still kind of lackluster. It's closed under 20 for 6 straight weeks. What does that signal to you?
I wouldn't call this necessarily a breakout yet.
Well, what it's been telling me, I think, is that the market doesn't believe that the default is imminent right now. And I think part of the fact is because we got 2 weeks until Janet Yellen's first date, which is on June 1st. And the Congressional Budget Office actually says that we're probably more likely 2, 3, 4
minutes of
weeks
Fugazi. We're here. We're in it.
If you go out that far and you look at things like the volatility futures, or you look at things like the S&P 500 skew index, you see a pretty substantial ramp up there. But in the very near term, I think today's activity is as a result of some comments that I wouldn't say they were affirming or, agreeable from Kevin McCarthy and the president, but at least they weren't like, nope, we're not making any progress. And I think right now the market is ripe for any kind of good news, and it's taking that as a positive sign.
So, Jeffrey, to quote President Biden, we're going to come together
because
there
Pac
is
West.
no alternative.
5 minute.
Every leader in the room understands the consequences of failure. But if by chance we do see a default on the debt and no deal is reached,
bullish MACD crossover on the daily, potentially today.
Preppers do? How could they prepare for a negative outcome there?
Sure, Caroline. I mean, there are alternatives for investors, even if policymakers don't see any alternatives. So if you want to bet or hedge a negative
1840
outcome
on E-Trade.
the debt ceiling showdown, one idea I like a lot is to consider buying Japanese assets.
Not
A
1820.
U.S. default would likely challenge the safe haven status of the U.S. dollar and favor the yen, the other major safe haven currency. And the default could spur investors to seek protection in Japanese stocks and bonds. In fact, Japanese stocks outperformed U.S. stocks last year. They're ahead this year as well, outperforming the S&P 500. And today, the stocks were up, but the yen is actually down on the news of these developments in the debt ceiling process. But look, it's not just a near-term way of maybe hedging the risk tied just in the very near term here to the debt ceiling. I think there's a longer-term positive story for Japanese equities as well. Warren Buffett's been looking to Japan for some opportunities here lately, and we've seen both the TOPIX and the MSCI Japan Index have surged above their pre-pandemic highs of a couple of years ago. They're now at their highest levels since the bubble was popping back in 1990. That breakout, further driven by buybacks and earnings growth and still low valuations, may continue to lure buyers. Yesterday's first quarter GDP number in Japan at 1.6%, faster than the U.S., many times faster than the U.S., in fact, because that's not an annualized number.
I'm showing 1830 on E-Trade, 1820 on Webull.
And I think that's some momentum we'll continue to see.
Still bearish MACD on the 5 minute. If it flips it.
In Japan.
5 minutes
so,
here.
Randy, if we do get a deal
it's
by
bullish
June
into
1st,
close.
that would be one fundamental headwind kind of lifted for this
And
market.
it's back on the
from a
invest
technical
table.
standpoint, what are the technicals signaling to you about this market right now?
Retesting.
Haven't been giving us a
If
whole
we
lot of
retest the
signals. In
highs
fact,
here.
If you look at the S&P 500, it's been hovering around that 4,100 level there for about 6 straight weeks, which I think is what you were talking about a little bit earlier. It's looking for some sort of a sign to break out. The biggest challenge, of course, is we're still in a very high interest rate environment. There's still concerns out there about what's going on in the banking sector. Thankfully, we still have a strong labor market, and that's part of the issue. Obviously, if people want to be careful and prepare
Kind of
for a
getting back to
potential
VWAP
downturn,
here.
there's a lot of things they
This
can do.
would pretty much
I
got
think the
us there.
simplest one is to simply take some profits on some of the outperforming sectors. I mean, we've got some really, really high outperformers in things like communication services, in the technology sector, in some of the consumer discretionary stocks. In many cases, even though we're only 5 months into this year, many investors are probably finding themselves already overly concentrated in some of those areas because those were underperformers last year. So take some of the profits off the table, not all of it, of course. Stay
1810.
diversified, but take off 5 or 10% of those profits. Leave
That's
that money
basically
sitting in
VWAP
cash
there.
so you'll be prepared for in case you need some cash in the very short term. Obviously, if you've got an
Good to
account that's approved
hold
for options trading, there are a
VWAP
lot of
or
things you can do. The
1790.
strategy that I always like best in this type of a scenario where you're dealing with a particular event and we know about what the date is of that event, we just don't know what the outcome will be. A collar strategy
on
works
SPY.
very, very
Can I
well
deny it?
because in most cases you can put it on at very little or no cost at all. The only potential give up there is that if we do have a major rally to the upside, you would give up some upside potential. But frankly, if you can protect your downside, the losses of maybe just 1% or 2%, it's often a fairly good idea for someone to consider that. And the main thing is you can keep it very, very short term. So if we start to get close to that June 1st, you can find expiration dates that are within just a couple of days of that time, and that way you're not locked in.
Wait, we have
gains for a very, very
yeah,
long
tomorrow's
period of
initial
time.
jobless
And
claims at
if we
8:30.
get past the expiration and you need
okay.
it still, you can add
That could
another
definitely
one.
move the
Thing
market
is,
to
again, if
market.
it doesn't cost you anything to put on and it expires, then you don't lose anything
And
when
then
that happens.
Jefferson speaks at 9:15.
Jeffrey, I think the big question
Bar
is
at
what is it
9:30.
that's going to potentially drive this
10
market
existing
lower
home sales.
or even higher? What's the catalyst? Because
And
obviously
U.S. leading
June 1st
economic
deadline is
indicators
approaching.
at
Earnings season is
10 as
winding
well.
down. So, we still have some retailers left, but what drives the market from here?
I think developments on the inflation front are still critical in the outlook for central bank policy. We know that inflation tends to be lumpy on the way down
Too
after
soon,
it's
Junior.
peaked. And so watching those inflation numbers as they roll in to see if it does give the Fed and other central banks clearance to cut rates later this year. That'll be important. I'm not so sure we're going to see the type of cuts that the
Also
market's
bounced off
pricing in.
VWAP there.
But we'll have to see. The other thing is,
See what
there are
close brings
developments
us. We've
going on
got
right
2
now
minutes.
on the ground in Ukraine that could shift things, either bring both parties together for a settlement in terms of a stalemate, or see further progress by Ukraine into Kherson and maybe even push into Crimea. That could invoke another escalation of this war that could weigh on the downside. So yeah, a lot of factors here in the coming months. Summer is going to be another wild time.
Yeah, certainly geopolitical risk is front and center, especially after Elon Musk said everyone should be concerned about U.S.-China tension, right, Randy? But I guess the bigger question then there is, you talk about potentially putting some money on the sidelines, but when you take a look at the fundamentals, you say the technicals aren't really signaling all that much. Is this a market that can move higher from here, given the fundamental picture and given the fact that the market thinks the Fed's going to be cutting rates and the Fed says,
I think you can drive it higher, Batman. If it does.
No, I'm not in the camp that the Fed's going to cut rates either. I think
yeah, you're looking at a pretty big
that he has
technical
no intention
breakout.
of cutting rates this year. But honestly, given how fast we've seen rates go up over the
at least
last
a
18
move
months,
up to
if we just get into an environment where rates stay
final top
steady,
high,
which frankly right now,
but it would also kind of
are telling us there's
break down this
very
head and
little
shoulders that
likelihood
we've
we're going to get any change at the
been
next
forming in
meeting
the
next
last
and very
month
little
or
likelihood
so.
that we're going to get the one after that. I think frankly markets can do well in an environment of just interest rate certainty, meaning we know things are
30
going to be
seconds.
the same. Unless we see a major spike in inflation in the latter half of this year, I believe the Fed needs to just hold tight. And frankly, if we could just see sideways interest rates for the rest of this year, that would give time for a lot of the fiscal policy that's already in place, the monetary policy that's already in place to take effect.
Does Bed Bath & Beyond have
The economy
that valuable of a
react very
name?
quickly to that. Others take many months for them to work their way
Why not?
through. So
I guess that's up
this will
to
give time for
however
sure
much someone's willing to pay for it. Oh, you guys got the bell.
Frankly, that's what the market
You got the bell heavy.
It's just a little bit of certainty.
Sorry.
All right, we have to leave it there. Randy Frederick, Managing Director of
Housing,
Trading
business, real
Derivatives at
estate.
Charles Schwab, and Jeffrey Kleintop, Chief
I see
Global
office
Investment
buildings. I
Strategist.
don't think business real estate.
Thank you both so much for your insights. Coming up,
Housing. Yeah, I think they're all going to come down
in
though.
just a minute, and Renita and Kevin Green will join us to go through some earnings.
Corporate real estate.
Cisco Systems and Take
Yeah.
Two. Coming up next, stay with us. We'll be right back.
Got here. All right, SPY. SPY closed the day up 1.19%. We do have jobs data in the morning, initial jobless claims, and then Philly Fed factory survey. 9:15. Jefferson speaks. Barr speaks at 9:30. We're sitting right at the highs, so I mean the hourly looks like a nice bull flag, but it could fail. And we're right at the resistance. And see what 8:30 brings tomorrow morning. Till then, I don't know. Maybe pretty flat, maybe rally, maybe drop, I don't know. But I'm holding my shorts for now. And local drug dealers. Bullish on real estate. Depends on your time frame. All about time. Greenhouse trucks. Forced Brian to buy baby. No. What are you talking about? No. Thanks, Trace. Yeah. Barbecue up 6.98% on the day. Nice little grind up today. Pretty good volume. Increased volume from yesterday. I don't think it's as much as the day before. Weeble's volume is wrong, but I'll just show you for reference. Oh yeah, we got that engulfing candle too. Noise. Don't have time to do a video today, but basically this thing is broken. I have a cup and a handle here that's formed on the daily. Looks pretty good. Today's daily candle is a engulfing candle, also bullish. Volume. So it's about twice yesterday's volume. That's good to see on a green day. More volume than red days. Yeah, good to see it move up this week, next week. Low grind or fast. I'll have this gap fill up at 30 cents. It might take till next week without news. Get news. Happened very quick. Happened pre-market. A lot of small caps running today. A lot of risk on stuff. I have to watch the whole stream. Sorry to hear that, Kitty. I do recaps when I can, when I have time. GME, big day today on here too. Yeah, 3.8%. That's a big day as of late. So I think it calls. Maybe some it open. I don't know. Volume's still light on it, but today's volume it's increasing, which is good. 4.5 million today, so that's definitely good. It's almost twice what it's been. We'll see. Not squeezy. Maybe it's a price level. You know, maybe it is that $30 that it starts to get squeezy. Things just been on a escalator though the last 2 weeks, 3 weeks. Really this whole month. I love you, Kitty. Thanks, Batman. Thanks, Tal. Oh, Apian after hours? Is it just a misprint? No, 20% after hours. Oh, they've got was it earnings or something? Maybe had earnings today. Yeah, that one rallied the other day. This is another one of those small cap squeezy ones. It actually went up crazy the other day. All that volume too. Weeble's been messing up the earnings on here. I don't know if that was the earnings or not. Working as for it. Thanks, Jay. Yeah, I'm not sure if they had earnings or what's the deal. %. 24. Yeah, broke out of that high from yesterday. 63. I have 69, not sure. I don't get it. Me either, Kitty. 70 cents there on Apron. Alright guys, thanks for watching. Sub up, like up, comment down. Happy money sticks around. Thank you for the support. Let's see where we're at on Dennis, thank you for joining. DM me on Discord, I'll give you the happy crew roll. 41 likes, well done guys, appreciate it. Ace, thank you for the gifted memberships today as well. You guys are legends. Good day on barbecue, good day on GME, all the small cap runners. Very green. Thanks Dennis, thanks Trader, thanks Montequila, Mazimus, thanks Kitty Daddy, Jay from the Bay, Al, Batman, thank you guys. Have a good evening as well. See you on Discord or Twitter. Okay, peace out.